There, so we'll certainly watch how that is going down. December seems a strange time to focus on ice cream, but that's what we'll do. And we'll also look at these pharma stocks, because we've had an interesting note coming through from JP Morgan. Bayer, Novartis raised at JP Morgan among their 2026 top pharma picks. Guy?
Okay, here we go. We've got to factor all that into our thinking. First thing this morning, we're not expecting huge moves from European equities. Keep an eye on what is happening in the currency market. Keep an eye on what is happening in the bond market. Those seem to be the stories that are more relevant this morning, particularly in the light of what we've heard from Isabel Schnabel. FTSE 100, nothing to see here. Flat, absolutely flat, not moving in any direction at the moment. We're down by 1/10% as anticipated, as is the Stoxx 600. We'll wait for the other markets to get going this morning. We'll see how quiet it is to see how quickly we get the German market open. But we are anticipating most of the European market story to be a little softer at an index level. Single stocks, I think there's going to be some interesting movements, and has already flagged some of that. The FTSE 100 has just popped positive by 0.2%. I wonder whether the miners are doing something this morning on the back of what we're seeing with copper. IBEX is out, it's up by 0.1%. The CAC is down by 0.2%. Net, what does this mean? The Stoxx 600 is doing nothing, absolutely nothing. Negative by 0.04%. We'll wait for the DAX to get going in just a moment. What are the pharma stocks doing this morning? Is that a factor as well that we need to think about? Anyway, let's see what the story is below the surface. Let's go sort of bottom up rather than top down. Anna, what do you got?
Yeah, let's have a look at some of these sectors that are on the move. And we've got standout performance from personal, consumer, discretionary and grocery stores. That seems to be the best performing sector, up by 1.3%. Not entirely clear what is driving that. Unilever is to the downside. That could be a bit mechanical. Of course, they're spinning out part of their business there. So we'll keep an eye on that one. I mean, maybe that's the Magnum story is doing that to that sector. So let's keep that in mind as we look at that one doing really well this morning. Industrial goods and services also up, and we don't have that many sectors on the upside, and we do see some of those defence names moving a little bit higher this morning, maybe not too impressed by the progress that has been made, or lack of progress made over the weekend around Ukraine. So we see Hensoldt higher, ThyssenKrupp higher, Rheinmetall, Leonardo, Rolls-Royce, all of those a little bit higher than this morning. Retail is pretty flat, but also just into positive territory. Interesting, the basic resources story, Guy, that you referenced, we're down by 0.3% on that sector overall. So despite the fact that we see a new high on copper prices, that is the verdict of the equity traders.
What's driving London higher is Rolls-Royce, BAE Systems, GSK and AstraZeneca. That's where the point story is this morning. So it's defence and pharma that are doing the heavy lifting for the FTSE 100 in terms of where we're seeing maybe some outperformance coming through there. As you say, defensives are off. Unilever is the biggest drop, but there's Magnum ice creams to think about this morning. Always a good thing, even if it is December. And some of the energy stocks are also softer as well. But you've got HSBC a little softer, Shell's a little bit softer. So banks, some of the commodity stories dragging that market down to the other side. But that seems to be the story this morning across Europe as well. It's interesting that ASML is the biggest points gainer, but Roche is the second biggest gainer. So pharma is where the lift is coming from.
Yes, absolutely. So we'll keep that in mind. Leave that to settle for just a moment. The start of European trade, the Xetra DAX just not yet open. We're pretty flat overall. US futures pointing a little bit higher. Let's broaden the lens. Talk to Fabio Bassi, cross-asset strategy head over at JP Morgan, about his thoughts, his thinking ahead of 2026. Really nice to speak to you, Fabio. So thinking ahead to 2026, you talk about uneven monetary policy. And yes, we're in a situation of flux when it comes to monetary policy in a number of places, where we could see US rates being cut, the ECB on hold, and the BOJ hiking. We might not see those things, but that seems to be what the market is expecting right now. How does that play out for you in terms of your strategy?
That is our baseline as well. We are actually expecting the Fed to cut this week, to cut again in January. And after that, we believe that they will stay on hold for the rest of 2026. With actually the removal of some of these insurance cuts in early 2027.
Yep.
So the most important year for me, for the Fed, is the fact that we are reaching a sort of the end of the insurance season. 50 basis points have been delivered, 50 are more to come. And to me, it's interesting that given the ebb and flows around the December pricing that declined initially and now is almost fully priced, you're still in an environment where the market is still not sure about the cut in January. In our view, it's coming because we expect further weakness in the labor market in current quarter, but we also believe that the current gap that you have between GDP and labor is probably going to close down in 2026 with an improvement in the labor market. And that's basically where we have a sort of the resilience growth outlook that has the, if you want, the downside of sticky inflation as well.
Okay, so that's the US view. I mean, this uneven monetary policy is just one area where you see a lot of dispersion within 2026. You talk in your notes about deepening multi-dimensional polarization in stocks, the US economy, and across consumers. I wonder if you could just expand on that a little bit, Fabio, on this multi-dimensional nature of the global economy in 2026.
Yeah, I think that polarization for me is the key word for 2026. We have polarization in the equity market between the AI stock called Max 7 or AI 30 and the rest of the market. We have a polarization in the economy between a strong capex and the rest of the economy that is not doing so well. And then when we think about the consumer, we have clearly a polarization between the top end and the bottom end of the consumer that people talk about K-economy. To me, the unfolding of these polarized dynamic are basically going to be a driver of macro and clearly markets in 2026.
Yeah, central banks are going to have a lot to think about next year. If you think about all of those various polls that are going to be factored into their thinking. Can I just come back to your views on the Fed, though? So you think they cut this week?
They cut again in January.
And they cut again in January, and then they're done, and then they hike in 27?
Well, I think that is more a balance of risk, in the sense that the official call is that they cut again, they hike early 2027 with the removal of 50 basis points of insurance cut. But to me, the important point of that message is that we are close to the end of the easing.
Exactly.
Market is overpricing the terminal, and the reason why the market is pricing the terminal is that clearly market needs to balance the risk of the downside. There is a left tail of the distribution that in our view is still there. We have about 35% probability of the economy ending in recession, and clearly conditional on that, the cutting cycle of the Fed will be much lower.
How does the equity market react in that kind of scenario? If we're done in January, and the next move is a hike, the equity market seems to be priced for a lot more cuts at the moment, and that is supporting valuations.
No, sure. I think that the challenge there is probably coming first from a repricing of the terminal.
Yep.
And if the terminal is going to be priced higher and is going to be repriced higher, with still a slight inversion of the money market curve, so let's say in line with the last dot between 1 and 2 for this year and the one after, so you have a slow adjustment, then I think that the equity market is not going to take that badly, in the sense that probably you end up in a situation, and you have done some work, where if you have a repricing of the OAS terminal higher, what would you buy? You buy growth, you buy tech, you buy quality growth.
You still get double. You're talking about double-digit gains.
Our baseline is that they cut twice. Market will not focus on the pivot, because the pivot is going to take place only later in the year. And that's why we have an S&P target at the end of 2026 at 7,500. Clearly, if the market is going to deliver as much as what is priced, the upside is higher. But I also want to consider a situation where they pause, and later in the year you may see a potential pivot. That is clearly a challenge, probably more for the second half of the year.
Fabio, what's in all of this for Europe then? Defence stocks doing okay this morning. A lot of conversation about Europe standing on its own 2 feet, of course, when it comes to defence. That's going to continue to be a theme for investors, I guess, into 2026. What's your European focus?
I mean, we are tactically positive on European equity. We believe there is still upside here. And this is basically coming from the macro outlook that is resilient, by fiscal story in Germany that is basically putting growth rate that are higher than potential. We're talking about quarterly growth rate in Germany around 2%, at a regional level at 1.75%, which is something that is good by European standard. While I embrace the short-term tactical optimism on Europe, I'm still aware, as an X-ray strategy, of the permanent structural challenges that the Eurozone is facing.
Yes.
You know, the lack of banking union, lack of capital market union, energy dependence, lack of AI investment. To me, these are factors that should matter over the medium term. But clearly, we are happy as a tactical trader to basically ride the wave and benefit from the fiscal impulse. On the ECB side, clearly a lot of debate this morning. My baseline is that it's most likely they will remain on hold for 2026, and our official call is still even 2027. I think that you have two tensions here. On one side, if I look at the projection of the ECB of core inflation at the end of the period, which has typically been the guide of ECB policy over the medium term, it was at 2, 1.9, 1.8. So there is an indication that maybe rates at 2% are not enough to trigger organic inflation in the Eurozone. On the other side, you have the new information coming from the German fiscal. Schnabel has a lot of faith in that dynamic that could counterbalance. Our projection on weight dynamic don't give us enough confidence that the next move is up. So I would say maybe 60% probability of rate on hold.
Okay.
25 down, 15% up.
Okay, so probably on hold. What would the market make of an Isabel Schnabel lead at the ECB, do you think? Given what you just said there about the sort of German view and the German fiscal push and what that could do to inflation.
Well, I think the dynamic within the council is where the president of the ECB can clearly set the tone. But I don't necessarily anticipate a massive hawkish shift if you don't have the macro data warranting it. We're talking about a situation where inflation in the euro area is not going to be particularly high because of domestic reason, because of the wage dynamic, because of the currency, because of China. I think that the message from an hawkish president is not going to worry the market, particularly at current juncture. Clearly, if you move in a macro outlook where the rebound becomes stronger, then it could have a bigger implication.
October 27, I think, is when Lagarde's term ends. Talk to me about the dollar next year. So if the Fed's done after January, and we start thinking about does the dollar go up or down? This is the bit that I'm wanting, because this, from a European perspective, this is really important. The performance I've seen on the screen in front of me is telling me I have not done well in US equities if I'm a Eurozone investor.
Yeah, sure. I mean, we still believe that the dollar has downside. We lower our euro-dollar target from 122 to 120. But we acknowledge that the risk of the Fed pivot is clearly the major risk here. But typically, if you are in an environment where the rest of the world growth is particularly strong, tend to be an environment that is good for the euro. And that's basically the environment that we are anticipating in 2026.
We're at 116 this morning, so that does imply, even at 120, some upside. Have a great Christmas.
Thank you.
Thank you very much. We'll see you again in 2026. Looks like it's going to be an interesting year. Fabio Bassi, cross-asset strategy head, joining us from JP Morgan. Core 6 looks like this morning. Let's focus on what we're seeing at the centre of the story. Defence stocks are up. ASML is up. You're getting some mixed performance coming out of the pharma sector this morning. We're going to focus on ice cream, though, because that's the big story in December. Ice cream, Magnum Ice Creams. Chloe Mellick, over to you.
Yeah, absolutely. Good morning, guys. So Unilever is down quite a lot this morning after the spin-off of its ice cream unit is now done. So the shares in the Magnum Ice Cream Company will be starting to trade in London, New York and Amsterdam today. And so this puts kind of the focus back onto the prospects for Unilever as a standalone company. And it seems that investors may be a little bit worried about those prospects, and therefore we are seeing quite a bit of weakness in that stock this morning. Moving on to the Italian bank Monte Paschi, which is up this morning after an Italian newspaper reported that Italy's market regulator had ruled out that there was an undisclosed pact between Paschi and some shareholders in the bid for Mediobanca. So the news of that probe had really put pressure on those shares, and this is now lifting that pressure this morning, and we are up 3.3% for Paschi. Staying in Italy, and we have got Ferrari this morning that is down after being downgraded by Morgan Stanley, and that is because of Ferrari's decision to limit volume growth until 2030. So the idea here is to create desirability and exclusivity, but what Morgan Stanley analysts are saying is that this will also limit growth, and therefore we are down at 2.3% on the back of that downgrade. And finally, Bayer is up this morning after being upgraded. Well, Galderma and L'Oreal, let's start with that first. L'Oreal is down after doubling that stake in Galderma, which is an injectables maker. But Galderma is up on the back of that. It went up 2.6% this morning.
Chloe, thank you. Chloe Melly from our equity team with a host of movers then. Plenty to discuss, including the listing of Magnum. So coming up on the programme, Magnum debuts in Amsterdam after Unilever completes its ice cream demerger. That conversation coming next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back. 17 minutes into the equity market session. At a top-down level, there's nothing to see. Nothing really happening. At bottom-up level, there's some actually quite interesting stock stories developing this morning in Europe. Take a look at what's happening with Ferrari. Some of the defense stocks are on the move as well. There's also the story around what is happening with Unilever. The world's largest ice cream maker begins trading today in a rare triple listing: Amsterdam, London, and New York. We've got the demerger of Magnum ice cream taking place. So this is coming out of Unilever to sort of standalone status on these markets. Now, the reference price was $12.80 Friday, so we're trading a little softer than that. I am going to make a big effort here to push as many ice cream jokes into this section as we possibly can, because I know that Charlie Wells is going to do exactly the same. And I feel there's some sort of competitive spirit here. So I've already got, it's got a 1 to me so far. You're here with the scoop. I think that's 2 to me. What else have you got?
Guy, I think I need to just stop while I'm ahead because I'm just going to crumble.
Okay. I'm not sure that counts, but
that
okay.
hardly counts. See, case in point. But look, I mean, this is a really interesting story because basically it speaks to the standalone pressure that Peter Terkulva, who is going to be the CEO, who is now the CEO of the standalone company, he's got to communicate a complicated story to investors, right? This idea that the Magnum ice cream company is stronger alone, that they can, focus less on delivering returns and more on growth. This is a really difficult time to be a junk food company, right? Because we've got GLP-1s everywhere. We've got consumers less inclined to eat these unhealthy foods. How do they change that narrative? How do they roll out products that they can meet the consumer with, right? Healthier products, products that can, say, hydrate the consumer. I think looking at this business, we know that analysts like management. They like Terkulva. They think he can deliver. They also like the balance sheet, right? It's free cash flow positive. It's profitable, and the estimation is that this will start trading at about, or at least eventually land at trading about 10 times EBITDA. So we might see some gyrations early today, but once it settles, it could look pretty healthy.
Okay, where does that leave the demerger from Unilever? Where does that leave Unilever? Because, decades ago, this was a food company. Now it is much less a food company.
And we already saw Chloe talking about how share prices for Unilever are under pressure this morning. And so, I think there was one story where, freed of this ice cream company, they could focus more on high-margin businesses. I think the other story is one about the conglomerate, right? And is the conglomerate dead? We've seen conglomerate discounts across Europe, across the board, as investors kind of have questioned, does this diversification actually play off in a time when the world seems to be deglobalizing, when supply chains are really complicated? And I think that was one of the issues with the Magnum ice cream company, is that supply chain was really complicated. Does spinning that off kind of benefit Unilever? At least in the short term, it doesn't look like it is right now.
Triple listing? Why?
3 scoops.
Oh, yeah, okay.
I recycled your joke.
Set you up for that one.
I recycled your joke. And look, there was a lot of jockeying, right? There's been, as fewer companies in Europe and elsewhere go public, as fewer lists, there's more competition, right? London competing with Amsterdam, competing with Stockholm. Primary listing in Amsterdam, that's not going to bode well in London. And the government here has really been trying to amp up the attractiveness of the city for listings. They lost out on that. There was talk that this could happen in New York, but there's also some procedural issues, and I think we'll see this play out throughout the day, of forced technical selling. And so there are some concerns that, funds may have to sell, because this won't be automatically in Stocks 50, et cetera.
Okay, so small or large, Magnum, personal choice, almond, my favorite choice, but there are other ice creams available out there.
The bigger the better, the more chocolate the better, but cocoa prices have really been putting that under pressure.
Okay, so you're not in the white camp. Some people are in the white camp.
No.
Oh, no, Anna's not.
8:21, it's too early for all of this. That is December, which is a strange time to be talking about ice cream. Charlie Wells, we thank you very much for joining us. Bloomberg's Charlie Wells with the latest on that spin out from Unilever. Let's go to other corporate news flow this morning. US President Donald Trump has raised potential antitrust concerns over Netflix's planned acquisition of Warner Brothers. The $72 billion deal would combine the world's top streaming player with the number 4 service, HBO Max, which has raised red flags from regulators.
He's done one of the greatest jobs in the history of movies and other things. He's got a lot of interesting things happening aside from what you're talking about. But it is a big market share. There's no question about it. It could be a problem.
Joining us for more, then, is our deals reporter, Manuel Bagori. Thank you, Manuel, for being with us. So how seriously should investors and deal makers maybe take Donald Trump's antitrust warning? He did say this has got to go, into a process, but he was certainly raising a few concerns.
And it's a great question. It remains to be seen how smooth or how bumpy the regulatory approvals for this very large transformative deal will be in the months ahead. Obviously, investors are watching that closely. Deal makers in general, it's in everybody's head, right? It's like, okay, this is a really massive deal, but how plausible is it that they go from signing the agreement into completing the deal? We've seen other major deals falling apart in that process. There could be a lot of holdbacks, whether the FTC or whether other regulatory bodies will look into it and will analyze the critical issues, how that will ultimately impact consumers and how much market share Netflix will ultimately have, whether or not there might be some asset disposals that need to come out of that. It's still too early to call it, but obviously the first step, Netflix prevailed in that auction for Warner Bros. A really large deal. Yeah. Also a very kind of rare move for Netflix, but it's still not quite a done deal for sure.
Could they restructure this deal? Is there anything they can do to this deal to make it more regulatory friendly?
Yeah, Guy, I mean, that obviously is something that during the negotiations of this deal and any deal is always analyzed. What is the plan B, whether if antitrust regulators, kind of step up and scrutinize a deal, what are the alternatives? I am sure there has been a lot of analysis, going on behind the scenes, and obviously the lawyers, especially the antitrust lawyers, will kind of, look very, very deeply into this. For months, obviously, they've been analyzing that. Now, how and when and if the deal could be restructured remains to be seen. Also, just bear in mind there is this massive $5.8 billion breakup fee, right? So that also gives some reassurances to, especially Warner Bros. In the case that the deal doesn't materialize in the end and they have to start it all over again. Obviously, it's a massive distraction for the companies during that process. And there will be a lot of questions raised. There will be a lot of people who are more or less vocal about the benefits, the pros and cons of getting this deal, through the finish line. But in terms of restructuring the deal, obviously, different options will be on the table.
Yes, Manuel, I want to ask you about tech and media coming together. I mean, Phil, Netflix is a media business, surely, but sometimes we think of it as a tech company. In the past, that's raised eyebrows, tech and media coming together. It's not always told us great things about valuations. I wonder what this means for the industry, this particular tie-up.
Yeah, Anna, I mean, if you look back at the industry within not just tech and media, but actually the overarching telecoms, media and technology, also known as TMT, we've seen a number of permutations within the three segments, right? We've seen telecom companies building and buying tech companies. We've seen media companies converging with telecom, and we've seen tech companies converging with media and telecoms. I mean, the three of them come together, and there is different iterations across different times, over the years in which we see the three of those kind of coming together and then kind of like separating. Now we're seeing, as you well said, the media and tech coming together. I think it sets a precedent for other potential deals in this space, but I wouldn't draw too much of a conclusion because these different entities across the TMT spectrum come and go all the time over history. Some of them are successful, many of them have proved unsuccessful, so remains to be seen on this one in particular.
Okay, Manuel, great stuff. Thanks for the update. Manuel Baguri joining us on what is happening with the Netflix transactions as they go ahead. Coming up, we're going to look into the corporate AI integration story. Melissa Mulholland, CEO of enterprise software provider Software One, joining us next. This is Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time we went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi, but Peru use fresh fish, make the called ceviche, cooked with lemon juice. You know, never use soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change, combine to Japanese style and another country food, then make novel style.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back. This is the opening trade, 30 minutes into Monday's session. Let's have a look at how that session is developing. Well, it's a pretty mixed bag, actually, Guy, right now. The CAC 40 getting some losses. Elsewhere, we're pretty range-bound, pretty flat across these European equity markets. Not a huge amount of corporate news flow to trade around. There is the listing of Magnum ice creams. Maybe that's where everybody's thoughts are heading this morning. But we have a fairly flat picture. US futures look a little bit more positive. We'll wait to see whether that is delivered on. And, of course, midweek, we get to a Fed meeting, and that perhaps is going to remain the sort of news overhang into the middle of the week, Guy.
Absolutely. Let's take a look at the internals and figure out what is happening here. As Anna says, balanced is the word of the morning. 272 up, 330 down. I think that's quite balanced. In terms of what we're seeing on volume, it is weak. Now, what is interesting is that actually this number has been weak over the last few days. Now, remember, this is a 20-day average, which tells you actually maybe the average is also coming down. So just bear in mind that we are going into December, despite the fact we've got the Fed, the ECB, the S&B, so many other things that we need to be thinking about as we work our way towards the end of the year. The BOJ could be the kicker towards the Christmas period. Let's talk about where we're seeing some of the leaders and laggards in this market this morning, just to delve into the single stock stories. Tech is bid. ASML is up by 0.5%. Obviously, that's going to do a heavy lift considering its weighting. Bayer is also up. There's a very positive JP Morgan note out this morning. Keep an eye on that. Rolls-Royce, some of the defence stocks are also gaining ground as well this morning. So you've got Rolls up, you've got Rheinmetall up. The aerospace sector generally catching a reasonably decent bid. Downside looks a little bit like this. You've got some pharma stocks that are on the back foot as well, which are worth watching out for. Novo soft. It's interesting to see what's happening with Bayer. You've also got split in tech. So you've got the chip sector up, SAP down by nearly 1%, and Unilever. Unilever's the ice cream story. This is the Magnum story that we've already talked about this morning. Unilever dropping nearly 4%, Tanner.
Let's focus in on some of the other news flow that we are keeping on the agenda this morning then, Guy. The ECB Executive Board member Isabel Schnabel has said she'd be willing to take over as president when Christine Lagarde's term ends in less than 2 years. Front runners for the role are thought to be the Dutch Central Bank chief Klaas Knot and the Bundesbank president Joachim Nagel. In a recent interview, Schnabel also signalled that she's, quote, rather comfortable on bets the European Central Bank's next rate decision could be a hike. President Trump has expressed his dismay at Volodymyr Zelensky's handling of a U.S. proposal to end Russia's war in Ukraine. The statements contrast with some recent, more optimistic comments from Washington suggesting a framework of security arrangements had been agreed with Kyiv. Trump's comments come ahead of President Zelensky's planned meeting in London today with the leaders of France, Germany and the UK. And China's trade surplus has topped $1 trillion for the first time, despite a deepening plunge in shipments to the United States. Exports returned to growth in November, rising 5.9% from a year earlier, after an unexpected drop in the previous month. Meanwhile, China's Xinhua news agency reports that the country's top leaders have made strengthening domestic demand their top economic priority for next year. We keep, Guy, getting these comments from the Chinese authorities that they will focus in on domestic demand.
The data's not there, though. You look at the data this morning and figure out what is happening in terms of the export story. The November data and the surplus that China is delivering on exports, extraordinary. 1.1 trillion is the number that we are looking for here, have got here. And what is interesting is that exports to the United States are down by 29%.
Yeah.
But they're making up for that in Latin America and in Europe, which takes us on to the Macron comments. He's just come back from China. He is deeply concerned, clearly, that actually China is not going to play ball and is not going to balance the trade between Europe and China. And as a result of which, he's saying maybe the Europeans need to follow the US route and start to make tariff noises and potentially start to sort of cut that trade off.
Yeah, I mean, Chinese competition in focus on many fronts, possibly on the tech space, the AI space as well. Let's talk about AI. We do that daily, it seems. 3 years into the AI boom, agentic AI is supposed to be the next productivity catalyst. But our next guest from Software One says that the economics doesn't always add up, with hidden costs and barriers to scaling eroding the return on investment. I should also point out that whilst we're talking to the company recently confirmed it was the target of alleged insider trades, with authorities across Europe carrying out searches as part of an inquiry. Software One has made clear that the company itself is not under investigation or accused of any wrongdoing. Joining us now is Melissa Mulholland, the co-CEO of the global technology solutions provider Software One. Melissa, nice to speak to you. Thank you.
Thanks for
joining us. So let's just deal with this latest news flow, I suppose. Let's start with that first, and then we'll get back to the AI conversation, which is really where we wanted to focus our time with you. So you put out a statement. The searches of various offices of Software One have taken place in connection with alleged insider trading by non-executive employees. Any update? Anything else you can tell us about what's happening on this front?
No further comments outside. The company is fully complying with authorities. And as I mentioned, this is only subject to a few individuals in the company, not at the executive level.
Okay, but the investigation continues and you're complying with authorities. Okay, so now we've dealt with that one. Let's turn to the pivot to the AI conversation, because we are looking for clues always as to how AI is actually making a difference on the ground for corporates. It's all very well to think about the data center build out, but what are companies really going to do with it? Will it deliver on productivity? And you raise a few warning flags. Tell us your experience.
AI is transformative, that's without a doubt. However, most companies don't think about the implied costs. It takes discipline. It just takes decisive action, as CIOs across the world are faced with multiple cost additions. For example, when you have agent sprawl, so multiple agents being deployed across an organization, data governance, security, also cloud costs. So oftentimes, it's not just about implementing an agent and it solves and delivers return on investment, but in fact, oftentimes companies experience higher costs because of the other aspects that they have to think about with people.
There's this whole expectation at the moment that companies are going to deliver massive productivity as a result of agentic AI, the use of AI. You're telling me that that actually looks harder to achieve than maybe the zealots of the AI world are suggesting?
Absolutely, AI will deliver productivity gains, and we know that to be a fact. But it also requires holistic business planning. Oftentimes, organizations don't think about that end-to-end because you have to think about employing your people. You have to make sure that those people know how to use the agents, as well as to maintain and the governance associated to it. So you have to look at the holistic cost. And oftentimes, companies just assume implementing AI, they're going to have return on investment immediately.
But you're saying it's more expensive at the moment. Is that what you're saying? You're saying it's more expensive at the moment to use this stuff than maybe to employ humans? Am I correct in that assumption?
It depends on the use case, and it depends on the model. So if you have a very specific use case you've planned out and you've organized your people to be able to deploy it, then it can deliver return on investment.
How many companies have you seen doing that well?
I would say probably 30% if I were to articulate, and most companies don't think about the holistic aspects. So, for example, we have a Swedish-Finnish finance company where they actually deployed agents. They resulted in 13% revenue savings, but they overspent their budget by 80%.
Wow.
So that's what can happen if you don't have an articulated plan and businesses aren't thinking about how to ensure that their people are trained and are using the AI agents.
So what are these quiet costs then, Melissa, that get into this process that are not foreseen?
Security, data governance, also making sure all of your data is in the cloud. There are a reason that hyperscalers and companies want to have these agents be deployed. So making sure that your data is in place is key. Also, retraining and ensuring that people, the employees, know how to use the agents is vital. Because at the end of the day, it's an adoption and change management. For all of us, learning how to prompt and use this to get ROI is essential, and that is a key component of it.
Is the reality that a lot of businesses are dealing with a lot of legacy? I mean, you mentioned a financial services business where I think of lots of systems that need to be very carefully managed. Security is really important, and sometimes these systems are pretty old. I mean, is getting all of the data into a system that is modern enough to give you the benefits that you need from agentic AI, is that part of the problem as well?
Absolutely. A lot of companies, especially here in Europe, actually aren't fully in the cloud. Think public sector, government, that needs to be fully transmitted into the cloud in order to access all of that. And then if your IT
just on
security...
that though, why does it matter if it's in the cloud, or can you not have it on premise and still use the data that you own as long as it's structured in a way
You can, but of course it's more complex. And so depending on how that data is structured. So that adds additional element and costs. And I always say that you need to have a human in the loop. AI is not going to replace humans entirely. At the end of the day, you need to make sure that all of that knowledge and business capability is also factored into the agents. And so these are costs and these are elements that companies have to think about. So yes, AI can deliver ROI. And yes, will it be transformative to our society? Absolutely. But it also is important that companies think holistically about how they're going to deploy this.
If the cost of AI, how big a problem is the cost of AI that I'm being charged for using AI at the moment? Because obviously we've got this huge data center build out, chips are incredibly expensive, GPUs are incredibly expensive. There's a lot of kind of expense at the moment. And at some point you do wonder whether there's going to be a kind of clearing and ultimately we end up with a cheaper cost of AI, which actually allows it to be integrated into many more companies. So how big a factor is the actual cost that companies are being charged at the moment, not just they're sorting out their own security and all their own internal costs? How much is the external cost of AI a problem at the moment?
It is a problem. I would say that for a lot of companies, you have to count the additional cloud costs, including my own company. At Software One, we're going through a big integration process, and I have to think about the costs incurring with it as well. So that is a factor. But I do predict that the costs will decline over time and become basically the essential costs of electricity as we have more data center capacity in market, which is, of course, what most of the large cloud-based public cloud companies are working on.
And do you see that decline being smooth, or do you see it being choppy?
I think it will be steady going down. I don't think it will be smooth. I think it's going to take some time for this to actually go through, as a lot of data centers are being built out across the world.
Melissa, thank you very much. Thanks for giving us your time. Melissa Mulholland, co-CEO of Software One. Coming up on the programme, we will be talking about commodities. Tulan Nguyen joins us, Commodity and FX Research Head at Commerzbank. Copper hitting a record high, actually links in to that tech story we were just talking about, the role of copper in the AI build-out, just one of its use cases, of course. That's next. This is Bloomberg.
cidade estava sitiada.
Nisso, ao começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg. Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
45 minutes past the hour. Welcome back. You're watching the opening trades. This is what we look like 45 minutes into the equity market session. It looks remarkably similar to how we looked at the open. We have moved a little bit, but not much in 45 minutes. There are things happening in other markets, though, that are worth paying attention to. Look at what's happening in the bond market this morning. Look at what's happening in the commodity market this morning. Copper is at an all-time fresh record, I think, this morning, or close to it. I think, what are we up, 30% so far this year? I can't quite read that number, just over 30%. It's an amazing performance that we are watching here for copper, and there's a number of different drivers. Clearly, the AI trade is part of that. We've also got China this morning out setting domestic growth as being its top economic priority. That's certainly a driver of the copper story. Tulan Nguyen, Commodities and FX Research Head at Commerzbank, therefore perfectly timed in joining us to discuss all of this. Tulan, good morning. Copper's up over 30%. How much further has it got to go? How much of a problem is this high price? Do we see substitution? What happens next in this trade?
I think there's actually still some more room to the upside. We ourselves, we forecast that copper can hit the 12,000 mark next year on the back of obviously supply constraints and at the same time demand increasing. We've also been saying this for a while. Structurally, copper is obviously strongly in demand due to the energy transition, and I think now with the supply constraints, this is leading to a sort of a supply squeeze in copper at the moment.
Okay, sounds like you're having a busy morning. Let's carry on with where this could take us. If we get to these kind of elevated levels, do I get into the aluminium trade? What happens next in some of the adjacent trades around the copper narrative?
Well, I think right now the focus is very much on copper. I mean, if you look at the trends on the base metal markets, you've seen quite divergent trends in prices. Obviously, aluminium has been up, but on the other side, nickel or zinc have been underperforming. So this is really a copper trade because the focus is on supply. It's very special in the case of copper, where we have these issues in the mining sector, which we don't have in the other sectors. Yeah, maybe to some extent, we will see a common uptrend due to economic recovery in the course of next year. But really, this current copper price strength, this is only common due to the supply situation in copper. And much will depend on how metal production next year will eventually evolve. If we will actually see, especially in China, that production starts to stagnate or even decline, and that will be essential in how far the copper price can still increase. At the same time, we need to remember that a higher copper price is needed, in fact, in order to attract investment in mining. So further out, over the medium term, long term, the mining production can increase again. And for that, a higher copper price is actually necessary.
Again, you mentioned China and the relationship between copper and Chinese demand. Tu-Lan, good morning to you. What about on the oil side of things? What are you seeing now in terms of China's buying of oil and what that tells you about the Chinese economy and where we are there?
Well, in terms of the Chinese economy, actually, we're seeing that it's kind of two-way, right? The domestic economy is actually weakening. So that stands in contrast to the observation of very, very strong crude oil imports that we're seeing. We just received the newest numbers, which hit a two-year high, as far as I know. But what is happening is that the oil is not being consumed, but it is put into inventories. So what is happening, not only on the energy market, but in other markets as well, that we are seeing sort of a stockpiling in China. I think this is a preparation also for the medium to longer term in order to have enough essential commodities in order to meet demand. But right now, it's not needed. Consumption is weak, so all of this is going into stockpiling.
Tu-Lan, what's at stake for the commodity sector when it comes to the Fed this week and the Fed conversation going into 2026?
I think in the short term, actually, the Fed could provide some headwinds for commodity prices because obviously a rate cut is already priced into the market and has supported certainly cyclical commodity prices. But the focus obviously is on what will the Fed communicate as regards the medium-term outlook. And we could imagine that seeing that the FOMC is quite divided in terms of how to go further with rate cuts, that we will see a rate cut, but at the same time, communication will be rather hawkish in order to appease the rather hawkish members in the FOMC. So that actually could provide some headwinds for commodity prices if rate cuts further out are being priced out.
All right, we'll see if that hawkish language comes to pass and what it does to commodities then, Tu-Lan. Thank you very much for joining us. Tu-Lan Nguyen, Commodity and FX Research Head over at Commerzbank. Let's round out the hour with a look at what is still to come this week when it comes to the data points we're watching, the set-piece events. We get US JOLTS data today. We're still catching up, aren't we, from the shutdown and some of the data we missed. Rachel Reeves will be testifying to the Treasury Select Committee. Of course, we get a rate decision from the Fed middle of the week. The SNB, their rate decision on Thursday, and UK monthly GDP for the UK rounds out Friday. Who on earth could we talk to about all of these things, Guy?
She's over there.
She is.
Set me right up.
Okay.
My favorite topic.
Fed
decision. Fed decision on Wednesday, and honestly, I mean, I don't want to say this lightly, but it could be historic in terms of the amount of the dissents that we get.
Yep.
If all of those hawks who flapped their wings a few weeks ago decide to dissent against the rate cut, we could be looking at 5 dissents, which is something that hasn't really happened very often in modern Fed history, going back all the way back to the 70s, for instance. So all of this disagreement is really about cutting interest rates alongside inflation still being above target. We had many hawks saying they're uncomfortable with proceeding to do so.
Yeah.
Yet you have, on the other hand, the more centrist parts of the FOMC Council, that be it John Williams, who said he was supportive of a rate cut. Many see him as sharing Powell's views. The market is pricing in a cut on Wednesday, but it's all going to be about how muddled of a message are we going to get as Powell tries to appease both hawks and doves.
I have no idea who's going to make all the decisions next year at the FOMC. Is it Kevin Hassett? Is he going to be the Fed chair? Who's going to be sitting on the FOMC? How does this whole process work? We've got the Lisa Cook case coming up, which feels hugely significant to me. I'm looking at 2026 and thinking, it is so hard to call what the Fed is going to be doing. Are the dots useful today, therefore? I don't know. What's the story going into next year? There's so many imponderables around this organization.
Yeah, really a fractured Fed. This doesn't really happen often. Again, though, we're very likely to get a dovish Fed chair. That's something we do know. Who is it going to be? Kevin Hassett, maybe, but still, there's a long process for the nomination to then go through the confirmation in the Senate. We have until May, obviously, until Powell steps down. And then we also have to remember the Supreme Court case, not only the one on Trump tariffs, but the one overhanging Lisa Cook. The U.S. Supreme Court isn't expected to hear those arguments until the end of January, but they are hearing arguments around the dismissed FTC commissioner. That is happening today. Give us some clues on how the Supreme Court might be lining up to treat Lisa Cook.
Yeah, I'm wondering about the level of dissent in 2026 then. And I mean, you know, maybe that's bad for risk assets, but maybe it's cathartic. Maybe it's a good thing. We get all these views expressed, Val. Let's not discuss that now because that will take us longer than 4 minutes, which we have left on this conversation in this program. Let me ask you about Wall Street and the risks they're pricing in, because Wall Street has been assuming that we get lots of rate cuts. Not sure how that rubs up against the hawkish language. But is Wall Street just looking ahead to 2026 and going, we'll just carry on doing what we were doing?
Yeah, no, it's, I guess, you know, it's refreshing to see all these 2026 outlooks, everyone out with their rosy views of what the year could entail. Obviously, we have no idea, but many of them assuming we are headed towards double-digit gains for the S&P 500. That's when it comes to Wall Street and the banks, the trading houses' views. Bloomberg also did a big survey of the more large asset managers, be that BlackRock and Allianz. A huge majority of them are very optimistic on global stocks. A very large majority optimistic, not only on U.S. stocks, but global stocks in nature. Maybe a lot of this is contingent on the Fed continuing to lower interest rates, but that is also contingent on where the inflation narrative goes here. And I want to bring in China into all of this, because I think the data that we got overnight can be really quite interesting to what how people view inflation going into next year. China is clearly having an issue with overproduction. Their exports are screaming higher, a lot higher today, at least for the month of November, than the market expected. And this could lead to many assuming that China is going to be a big disinflationary impulse when it comes to goods prices across the globe.
But their exports to the US are down by 29%.
No stretching and no pilling ever again.
It's a differential factor for different central banks to worry about.
The right way, and they shrink down like a sweater. So easy once you try it. 6, flatten the hood, then fold it down. That's the secret to folding hoodies. Every fold should be clean and space-safe.
Well, maybe.
Pocket holds for almost every item. Rewatch if you need to. 7, pajama sets deserve a matching fold.
And she's already introducing the idea that there's a
Wrap the
debate
top around the pants like a bundle. Next season, you'll find them instantly.
Clock is ticking, and it's funny. I mean, obviously, most policymakers are more European politicians do want an accommodative central bank, and here she is out saying that she's comfortable with the next move being a rate hike. But it comes alongside some pretty unusual comments made from Macron. He did talk about the sole mandate of the ECB, which is just inflation, and hinted that perhaps that they should look at targeting things like growth or like employment, like the Fed does. So perhaps we could see a politicized ECB when it comes to their reappointment.
So it's interesting. I read a piece over the weekend talking about the Fed should go back to a single mandate on inflation, because the growth stuff is so all over the place.
Growth is looking so good.
I'm not sure what Trump would make. President Trump would make of that. Not sure that's speaking his book. Thank you very much, Valerie. Thanks for joining us. Bloomberg's Valerie Titel with a look ahead on the markets. US futures fading a little bit just now as we get towards the get into our stride here in Europe.
Yeah, they are. We're up a little bit, but not by much, as you say. Anyway, that wraps things up for today. What have we done today? European markets have started the week. We spent a whole kind of focus on ice cream. Anna doesn't like white magnums. I think that's a story we can take away. Anyway, hope you enjoyed the show. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
China's top leaders are making boosting domestic demand their top priority for 2026 as they seek to protect the economy from global trade. ECB policymaker Isabel Schnabel suggests interest rates have reached the bottom, saying she's comfortable with bets that the next rate move will be a hike. Plus, Ukraine's president heads to London as European leaders seek to steer U.S.-led peace talks. President Trump says he's disappointed in Volodymyr Zelensky. So there is quite a lot going on, especially for Monday morning. Then Wednesday, of course, it's Fed Day. U.S. stock futures seem to be drifting higher at the start of a week, again, in which the Fed is widely expected to cut interest rates. Now, stocks definitely have rebounded in recent weeks to approach their October all-time highs. The dollar, little change, Bitcoin trading below 92,000, and then copper, you can see 11,676. Let's also take at the European markets map. Again, a lot of the focus will actually be on geopolitics, on the geopolitics of things. When you look at, they're opening up, they're kind of warming up, I have to say. The UK and actually the DAX are pretty much unchanged. It's only France that's a little bit on the downside. And then I'm also looking at Japan leading declines in global bonds as the country's economy actually shrank in the 3 months through to September. Relations with China, they're continuing to deteriorate. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, China's top leaders have made strengthening domestic demand their top economic priority for 2026. During its December huddle, the Communist Party's decision-making Politburo had reiterated the need for more proactive fiscal policy and moderately loose monetary policy. Now, for more on all of this, we're joined by Bloomberg's Jill Deeses. Jill, what kind of tone is China actually setting for next year, and can we expect any stimulus?
Well, Francine, I think what you're looking at here is what the statement tells me is that we're looking at sort of moderate expectations for next year, a measured approach potentially to stimulus. So I wouldn't expect anything that's like extreme super bazooka style. But China obviously is acknowledging with the statement that that idea of boosting domestic demand continues to be a really critical one for the Chinese economy. Remember, concerns about sort of a lack in consumption this year has been really dogging this economy, particularly when you're framing it against what the overall trade environment looks like. Obviously, China's exports have surged this year, but there's a lot of questions about how much momentum that can ultimately maintain going into 2026. One thing that really stood out to me with the statement was that in addition to really these reiterative policies, including that idea of keeping a moderately loose monetary policy stance, was the return of some language referring to cross-cyclical adjustments. That's a phrase that normally appears when China's talking about taking the longer view. So clearly there's a need to balance, the idea of sort of short-term, needs for the economy with what their overarching longer-term views actually will be.
So, Jill, what kind of economic challenges is China still facing, and I guess trends that could accelerate in 2026?
Yes, Francine. Well, I do think that when it comes to consumption, so again, hinting at this idea of those concerns about domestic demand within China, that continues to be an issue. We also saw some significant challenges to investment this year start to weigh on economic growth. So I think that's one thing that China is going to be looking at. And again, I think when you're looking at the trade environment, maybe there's a trade.
I think we're just having a couple of audio issues with Jill. I don't know if it's only me, but Jill Dice is from Hong Kong, laying out some of the groundwork that, of course, China has to do into 2026. We'll get back to Jill a little bit later, maybe when we can reestablish a connection. Now, the European Central Bank, Isabel Schnabel, says she's comfortable with investor bets of a rate hike. The executive board member is warning of risks to the economy and inflation. Meanwhile, in the U.S., Fed Chair Jay Powell expected to push through another quarter-point interest rate cut on Wednesday, despite growing unease among fellow policymakers that inflation remains too high. I'm delighted to be joined by Ann Walsh, Chief Information Officer at Guggenheim Investment, who joins me now. Chief Investment Officer, not Information Officer. And do you want a new title? Anything goes.
I can do lots of things.
What would you like to be? Okay. And I'm so happy to speak to you because actually it's all about the Fed this week.
Yes, it is.
The Fed on Wednesday, you're expecting a cut. Is it a done deal? Markets are pricing in like an 80% chance of a cut.
Well, Francine, it's great to be with you. It is really baked in at this point in time. The markets have given the Fed opportunity to go ahead and cut that 25 basis points. We had been predicting it for quite some time, that we were going to see 75 basis points of cuts this fall, which is what we're going to get, and I think for all the right reasons. The Fed, notwithstanding the hawkish tenor that's coming out from some Fed officials, is really trying to get to a neutral rate of interest rates at the Fed fund. So our view is that's about 3%. Which means they have the room to cut this week, and they have the room to cut some in 2026 as well, to get to neutral.
How much does it depend on who becomes Fed chair?
Well, I think considering all the candidates for Fed chair at this point in time are all pretty dovish, I think that it really is going to be part of the trajectory. And the Fed chair, when they come in or when they're named to come in, I think that's still going to drive that trajectory down to that neutral rate of interest. Question is, do we go through that? In other words, do we go to 275 on the neutral rate? And right now, we're saying 3%.
And overall, what kind of U.S. economy do we have now? Is there a worry that actually the U.S. consumer weakens, that we're going to have more defaults? When you look at the K-shaped recovery, I mean, a number of things could actually go wrong.
Right. We've been in a bifurcated economy for the last 2 years at least, and that is small businesses, low-end consumers have been struggling as interest rates rose, inflation rose, and the cost of living offset their ability to gain additional income benefits. The larger part of the economy, those companies that have access to capital, as well as high-end consumers, have not actually suffered because of the wealth effect that's come from the stock market appreciation and value appreciation in real estate and other assets. As a result of this, the cuts in interest rates, while they won't have a meaningful impact in terms of the broader economy, I think, unless we were to get to stimulative levels of interest rates, which is not what we're predicting, but it will help that part of the economy that's interest sensitive a bit. And I think that's what we can all look forward to in terms of helping that part of the economy. And then it stabilizes. So essentially what we're looking at is an economy in some level of equilibrium. We're projecting a 2% approximately GDP growth level in 2026. That's a long-term average. 2% real GDP in the U.S. is really a long-term trend line. And as a result, that, again, should stabilize, get us to an equilibrium state, a 3% neutral rate on Fed funds, and it looks like a pretty good potential year for 2026 from that perspective.
What about inflation? So the market has largely looked through, actually, a lot of the tariffs and trade. Does it come back with a vengeance in 2026?
So inflation's interesting. I think, generally speaking, we can see that some inflation levels are going down. In particular, one of the elements of inflation, which is rents and owner equivalent rent, particularly in CPI, has been stubbornly high. It's starting to finally decline. The headwinds, of course, still continue to be costs of insurance and other costs to the consumer, but that's going to be it's a big component of CPI, and so it's going to be a very substantial tailwind. Having said that, let's go old school for a minute. Money supply is actually rising in the U.S., and that has a stimulative effect. It also has an inflationary effect. Very few people talk about it. And additionally, the Fed has determined that they've stopped quantitative tightening, and in fact may be starting to re-increase the balance sheet, which also has a stimulative effect. So they're going to have to watch inflation, less so from a tariff perspective, but more so from these sort of old school monetary policy actions. That's something we're going to watch.
I don't know how to read AI, whether it's a valuation story or actually the kind of impact it could have on inflation longer term. So do you worry, first of all, about valuations in 2026?
I don't necessarily worry about valuations just in the short term.
Right.
I tend to think of this being a very substantial macro phenomenon that's going on in the backdrop, if you will, a technology super cycle. Yeah. And as a result, it's going to have a very long-term effect. Historically, technology is overpriced in the short run and overpriced in the short run and underpriced in the long run. And as a result, the valuations will take a long time to play out. Short run, we're in a bit of a reflationary world, but not like 4%. I mean, just like around a 3% risk, only because there's a big build out that has to happen to get us to the infrastructure that we need in order to support this technology super cycle.
But the deployment of capital in this space is nothing like I've ever seen before. How problematic is it that actually there's a time lag of the deployment of capital for everything from also the data centers and the fact that you don't get returns for a lot longer?
Well, and I think there's sort of two chapters to this, maybe multiple chapters, but at least in terms of a very high level. You have the immediate investment that's going on in the infrastructure, the data centers, the chips, but you have the investment that's going to be taking place in the broader economy in order to make use cases work for artificial intelligence and this technology build-out. And by the way, I don't want to limit it just to artificial intelligence. Robotics, communications, there's a whole lot of dynamism that is happening in technology right now. All of that will play out over the course of time. And as those use cases and as those use uptake that occurs, then I think we'll start to see the productivity gains that will offset those costs in the longer run. So I think there's a real benefit here, and I worry a little bit less about the short run. And I also very much dispute the belief that this is a dot-com bubble valuation risk. I don't see it as that. We have real earnings in this cycle relative to the late 1990s, and I think that's fundamentally, we've got a better narrative here than we did then.
How do you construct the ideal portfolio? I mean, there's a number of worries about geopolitics. It could be with China. There's a number of concerns in Europe that actually the U.S. just sees Europe as redundant and over-regulating. So can you see value in stocks in Europe, or actually do you wait for this to all play out?
Well, I think if investors waited, then they might miss opportunities too. I believe in a diversified portfolio. It mitigates risk, but it also allows for the opportunities. And not just in Europe and here, but also in Asia. For example, Japan's still got a pretty good story happening there. So moving away from the U.S.-centric and U.S.-only investing, I think that's prudent at this point. And I do think that as particularly the regulatory story in Europe is going to take a while to evolve, but it will. And defense investments continuing. And so there are geopolitical dynamics that are positives for equity investors.
So again, I mean, there was quite a lot of news with Japan, and actually bonds really on the move last week. And again, this week we have this Bloomberg scoop with the ECB's Isabel Schnabel about actually the next rate move in Europe being up. Do you play it from the currency or bond level, or do you actually go into equities?
I think you probably go into equities in Japan and in the EU area relative to bonds at this point in time. There's a lot of noise in particularly out the yield curve in whether or not we have inflation, whether or not we're going to see rate hikes. I don't really see much movement. I'm in the camp of being a little skeptical. Bank of Japan will raise rates a bit more, but I'm not sure that the headwinds that they have relative to demographics and other really long-term macro trends work to raise rates too much. I would say the same thing for different reasons here in Europe, because the story of stagnation is still looming, and rate hikes, sure, you could talk about they could happen. I'm in the camp of being a bit more skeptical.
And when you look at Bitcoin and we look at gold, what are these two asset classes actually? How do you tell some of the your investors to play with those?
Bitcoin's interesting. I tend to think of it as a proxy for risk appetite as much as anything. And the fact that it's sold off of its highs quite considerably tells me that there is nervousness. Market sentiment is edgy at this point in time, and there is a risk that some investors start to really pull back. So I think that's what that's telling us relative to gold, which is still an alternative to other dollar-based investments from non-U.S. investors in particular who are looking to diversify away from U.S. Treasuries, which I think is also keeping the long end of the U.S. Treasury curve sort of in a range. On the 10-year, for example, we're between mid-3s and mid-4s. We're going to stay there. We're entering year 4 of that trading range. I think that continues. Gold's an investment alternative, and I think precious metals, whether it's gold or silver, still have more room to run as a result of being an alternative investment choice, not necessarily just a measure, as it historically has been, of inflation risk.
And is there anything that you think is mispriced at the moment?
I think there are areas of value that investors can take advantage of. I think infrastructure there's a huge need for infrastructure. It's not just technology infrastructure, but it's across the board, energy and transportation and the like in the U.S. and in other parts of the globe. The build-out that needs to happen is important. Real estate in some areas is undervalued, so hard assets offer a lot of value. And believe it or not, in the U.S., investment-grade fixed income actually offers a nice nominal return for investors. It's not a bad place to be. It's, like I said, it's sort of stuck in a trading range. That's fairly stable. And
what a pleasure to speak to you today on this Monday morning to get us started for a big week. Ann Walsh, Chief Investment Officer at Guggenheim Investments. Now, coming up, Smith & Nephew unveils a new strategy after completing a 3-year turnaround. We'll be speaking with the Chief Executive next, and this is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise.
With some fun along the way.
This is Bloomberg Surveillance. Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Ray Dalio, the founder of Bridgewater Associates, says investors aren't paying enough attention to the debt dynamics playing out in the world. He spoke to us in Abu Dhabi.
We are having too much debt. Now, this is not just the United States. You're seeing this in England. You're seeing this in France. You're seeing this in China. You're seeing that dynamic. So that they can't increase the debt the way they did before. And then related to that is the politics. But when you have these large wealth gap differences, who has the money? And when there's the accumulation of a lot of wealth that then isn't taxed, there's a tendency to want to tax that wealth. And that creates bubbles. In other words, when wealth is very different from money. In order to spend money, you have to sell wealth and get money. And when there's a lot of wealth that needs to be sold. So quite often interest rates play that role. But you could see wealth taxes play that same role, meaning the need to sell them. And that creates a bubble. So we have a debt bubble going on. We have that other kind of a bubble going on in the economy and related to politics. And then, of course, geopolitics. Capital flows and trade flows are different because we have a world in conflict. And in that world in conflict, no country could be secure. So that's why the United States wants to build self-sufficiency in these areas. Or China, which is that model where China would export to the United States and earn money and then invest in bonds, is no longer a viable path because the Chinese worry that they won't get paid on their bonds like the Russians don't get paid on the bonds. So that dynamic is what is behind now what's happening, and it's becoming more precarious as we go forward. Like if we go into the 2026 elections, it's likely that the Democrats will take the House, significant possibility. If that happens, the political conflict will continue to be more difficult, and so on. And that's creating this risky environment. Particularly also, debts are maturing. So you have to roll over your debt at a higher interest rates. This confluence of factors is making the environment more risky as we're going ahead.
Well, that was Ray Dalio, the founder of Bridgewater Associates. Now, Smith & Nephew is planning to pare its portfolio further as part of a new effort to boost growth. The medical technology company has also unveiled a new strategy following the completion of its 12-point plan transformation. Well, Deepak Nath, the chief executive, is with us now. Deepak, thank you so much for joining us. I mean, first of all, I know this was a thoughtful plan. The end game is to be, I guess, more nimble in the face of adversity. What does that adversity look like in 2026?
Well, Francine, first of all, thank you for having me here. It's a pleasure to be here. It's an exciting day for the company where we unveiled our new plan of Rise. It's an ambitious strategy, but it is achievable that elevates Smith & Nephew to levels that we haven't reached before. What's exciting about it is that, as you mentioned, there are significant macro headwinds that we're faced into, but we've got a plan that allows us, I believe, to navigate these headwinds and deliver what would be significant acceleration, both from a growth standpoint and actually deliver better returns than we've achieved so far. But it is built on a strong foundation. After the 12-point plan, we are now a stronger company, more agile, and actually more growth oriented.
I mean, there's a couple of things. You know, there had been a little bit of pressure, for example, to break up the business and separate the orthopedic segment. Is it something that you're still thinking about?
Look, we feel very confident in our portfolio, and what this plan lays out is how each of our businesses plays its part in delivering performance. We expect to drive growth and above-market growth in our sports business and wound business and ENT. We're strongly positioned. In orthopedics, we've been focused in the last 3 years on addressing the challenges that have held back that business. But because of all those efforts now, we believe that we can get orthopedics growing at or above market in this strategy. So we feel that each part of our portfolio plays a role. Some parts deliver growth and above market growth. And in our case, our margin growth and our expansion in terms of return on invested capital improvement comes from, in fact, orthopedics performing well.
I know there's been questions and concerns about the sale of U.S. knee replacements. How do you address that? And actually, what exactly are the challenges?
Yeah, so over the last few years, we've tackled systematically the issues that have held back orthopedics. Some have been in commercial, others have been in operations, the ability for us to connect supply and demand, down to a very detailed level as well as we could be done. So as a result of all of those efforts, most of the orthopedics business is actually in great shape. Our hips business is in great shape. Our trauma business is in great shape. Outside the U.S., we're in great shape. In knees is the last area that is currently lagging, but the plans that we've got in place now allows us to do in knees what we've already done in hips, and that's going to come from the commercial execution improvements we've done right across our portfolio. And what we are planning to launch here over the next few quarters is further products that strengthen our portfolio, and that'll be a key kind of unlock for us as we get knees to where hips and trauma and the rest of our orthopedics portfolio already are.
How heavily invested are you in AI, and how much more will you do?
AI has been a part of what Smith & Nephew does for quite some time. In orthopedics, our robotics platform, in fact, has AI as part of it. It's what enables surgeons to develop plans, execute the plans that they've developed, and ultimately get better outcomes for patients. And that's been part of our robotic platform now that's been on the market for about 6 or 7 years. On the sports medicine side, where we enable surgeons to do soft tissue repair in the same way, and we've got AI built in to our products. In fact, we're bringing forward a radical new offering to the market called TESSA. It's a new paradigm of spatial surgery that allows sports medicine surgeons to do something they've never been able to do before. And that's got AI built in, the way we process images and the way we allow patients, surgeons to actually perform their surgeries better. So AI has been a key part of our product offering. But as with other companies, we're trying to use AI now to make ourselves more productive, more efficient. And there we are on a journey just like the rest of the world is in terms of how we make, essentially drive more productivity across the organization.
We've seen a lot, some actually companies listed here in the UK wanting to move to the US or having moved to the US. How committed are you to the UK?
Look, we are proudly British. We're 170 years old. In fact, we'll celebrate our 170th birthday next year. We've been proudly listed in the UK for many decades now. We, of course, have a secondary listing in the US, and that's served our interests well. And so we're committed to so far been driving the turnaround plan, but now as we start a new chapter, we believe we've got the kind of setup that we need to realize our ambitions.
So not changing and just going to the US?
No, we're
access
happy
better capital?
We believe with our current structure, primary listing in the U.S., the secondary listing in the U.K., and the secondary listing in the U.S. allows us to access the capital that we need.
Is there anything that the U.K. could do better for companies that are listed?
Look, I think the U.K. has been a good environment for us. Like I said, over the many decades, it's served our interests well. Of course, there's always opportunities that any company or any country can be doing better. But right now, we're focused on what we need to do as a company to drive performance improvement and make the investments that we need. And I believe we've got an environment here to be able to do that.
Thank you so much for joining us, Deepak Nath there, the Chief Executive of Smith & Nephew. Now, coming up, Magnum Ice Cream starts trading in Amsterdam, London, and New York in a rare triple listing. So we'll talk, you've guessed it, ice cream. That's next, and this is Bloomberg.
climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Beirut, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. China's top leaders make boosting domestic demand their top priority for 2026 as they seek to protect the economy from global trade. ECB policymaker Isabel Schnabel suggests interest rates have reached the bottom, saying she's comfortable with bets that the next rate move will be a hike. Plus, Ukraine's president heads to London as European leaders seek to steer U.S.-led peace talks. President Trump says he's disappointed in Volodymyr Zelensky. Now, emerging market currencies are in flux ahead of a busy week for global central banks. EM equities edging higher, supported by improving sentiment around U.S.-China trade relations. Joining us now, James Lord, head of FX and emerging market strategy at Morgan Stanley. James, thank you for joining us. I mean, it is a big week simply because of Fed. So what are you expecting the Fed to do on Wednesday? Is it a done deal that they cut?
We're expecting them to cut. I mean, nothing's ever a done deal until it's done, but with market pricing where it is, it would be a big surprise if the Fed decided not to cut. So we're expecting that 25 basis points to come through. Yeah. We're expecting Chair Powell to essentially make a reasonably hawkish kind of press conference and statement suggesting that future cuts from this point on will be very data dependent. Nothing is set in stone. But ultimately, by the time we get round to the January meeting and the April meeting next year, we are expecting those meetings to result in cuts as well, largely because we expect the data to justify that.
So data, not personality driven, because of who's the next Fed chair?
Well, for the time being, the FOMC committee is what it is, and we'll obviously see changes in that next year. But for the next couple of meetings, for this one in January, we do see that cut coming through, and then ultimately in April as well before Chair Powell steps down.
James, what are you expecting overall dollar to do? And then we'll talk a bit about emerging markets and maybe your favorite pairings.
Yeah, so I mean, this year has been obviously a year of big dollar weakness, particularly in the first half of the year. It's been on pause for the second half, but as we're moving into next year, we do expect to see that weakness coming through again. I mean, it is largely based around the story that we described, more cuts than what the market is currently pricing. And as the Fed delivers those cuts, we expect the market to ultimately price more. So we're quite bullish on the front end of the US Treasury curve. And ultimately, the data as well, we are expecting that to softening over Q4 and in Q1. It's not just a government shutdown story for growth weakness in the fourth quarter. Our economists are also expecting to see high inflation eroding real purchasing power of consumers, that leading to a consumer slowdown and ultimately a weaker dollar as well.
So, Jim, how much does this actually have to do with some of the policies and the economy where you're seeing quite a lot of weakness, or at least some weakness that warrants cuts? And how much does this have to do with also proving investors just moving away from U.S. assets and therefore selling dollar?
Yeah, so I think primarily this is about a traditional business cycle, monetary policy reaction, where growth slows, the Fed cuts, the dollar weakens. But clearly there is an element here where we're all talking about who the next Fed chair is going to be. We're all talking about how the regional bank reappointments may go in February. If markets come away from those outcomes with this impression that the Fed is going to be more tolerant of higher inflation going forward, then it will increase incentives to hedge dollar exposure and potentially move to other markets like EM.
So how do you look at EM? Is it really blocks like Latin America versus Asia, or is it individual countries?
I mean,
a little bit of both.
Yeah, I mean, this year you can see pretty clear regional differences in performance. I mean, LATAM and CEMEA have all done pretty well. I mean, it's hard to find currencies in those time zones that haven't done well. In Asia, it's much more of a mixed bag. So you've had Korean won, Indian rupee weakening, you've had Thai baht strength, renminbi strength. It's much more of a diverse kind of range of outcomes. But for CEMEA and LATAM, we've seen very strong performance. And we're expecting that regional preference to largely be maintained because we're expecting risk appetite to be strong, and we're expecting this kind of continued kind of search for yield, increasing in interest in EM local currency government bond markets by global investors. We're expecting those trends to continue and really favor LATAM and CEMEA. We are expecting some rebound in some of the currencies that have weakened in Asia this year as well, but still it's likely going to underperform the stronger stories that we see elsewhere.
It does feel like the biggest surprise of this year is actually, despite all the trade and tariffs, a lot of the countries and emerging markets did okay. Yeah. Is this because of some of the pain or the structural reform that they've done in the last 5 to 10 years?
Yeah, I think EMs are benefiting generally speaking, they're benefiting from some of the policies that have been put in place, some of the reforms. But I mean, I would say if you had to look at the single most important variable within EM that has driven currency strength, it's been the hawkishness of monetary policy. So if you look at in Brazil, you look at Hungary, you look at Turkey, you've seen a lot of the markets where you've had the strongest FX performance has been from those markets where you've had a very strong anchor from monetary policy. And so when you put that against what we just described about the Fed, there's a clear kind of tension or differential in the rate kind of dynamics that are putting upward pressure on these currencies.
In Asia, I mean, a lot has to do with what happens to China. And we had a good story today saying, look, is there going to be stimulus in 2026? They're trying to definitely stimulate some of the domestic demand. How do you see China panning out?
So, I mean, growth we're expecting to be a kind of around a 5 handle for next year, but there's clearly some softness in some of the current indicators. When you look at investment, retail sales, it's all reasonably soft. So we're expecting some rate cuts to come through next year and a little bit of fiscal support as well, but nothing that's going to drive a significant upswing. China's going to remain in deflation, and that will maintain kind of the export competitiveness will be intact, but we're not expecting some big growth upswing that causes significant amounts of capital inflow and therefore currency strength. The currency will remain very low volatility. When you look at implied vol on dollar renminbi, it's close to 2%. I mean, it's on an annualized basis. It's become a very, very low vol currency. And so when we're in a bearish dollar environment, there are probably other currencies that are going to be outperforming the renminbi.
In the region?
In the region, but also around the world. I mean, in the region, we're expecting Korean won to rebound. It's obviously had a very weak 2025. But now that the Bank of Korea, we think, is basically done with the easing cycle, and that as U.S. growth next year, we're a bit soft on U.S. growth for Q4 and Q1, but as next year it accelerates with stronger growth, we expect the kind of domestic demand and the capex cycle that we're seeing out of the US to really benefit countries like Korea. So a broadening out of Korea's export cycle that will ultimately cause the Korean won to rebound.
Thank you so much, James, for joining us today. There's a lot to unpack. What's your craziest thought for 2026? Do you have an outlier call?
I don't think we have super crazy thoughts at Morgan Stanley, really. But I mean, it'd be interesting to see how the Brazil market opens today because of all of the vol that we saw on Friday. I mean, I'm expecting eventually that BRL will rebound because the BCB is going to be quite hawkish, quite sensitive about volatility ahead of the election. And as I said before, hawkish central banks, you want to be buying into those currencies.
James, thank you. James Lord, head of FX and emerging market strategy at Morgan Stanley. Now, the ECB's Isabel Schnabel is comfortable with bets of an interest rate hike, warning of risks to the economy and inflation. The central bank's last batch of forecasts suggests that growth would slow to 1% next year before picking up again in 2027. Well, let's bring in Bloomberg's Jana Randau. Jana, this was a great interview. Congratulations to you and the team. What's your take on Schnabel's comments?
Yeah, we were a bit surprised about the hawkish nature. Of course, we knew that she has these thoughts, but hearing her being so clear about the next step, potentially being, or very likely being a hike, albeit not anytime soon, that was definitely news that we did not quite expect out of her mouth. You know, what's surprising really underlying this expectation is the relatively optimistic economic outlook she has. So she's arguing that, you know, core inflation, the slowdown we've seen over the past couple of months has come to a halt. Core inflation, of course, is at around 2.5%, slightly higher than the ECB would like to see, at a time when the economy is starting to pick up, at a time when the output gap is closing, at a time when fiscal policy will offer stimulus. Remember the investment packages for infrastructure and defense spending. And she sees price pressures there. She sees, risks to the upside on inflation, for growth as well, which she says will probably be have to be reflected in the projections coming up. So overall, a very optimistic take on the economy from Isabel Schnabel there, you know, in contrast to some of her colleagues, of course. Yeah. So yeah, we're hoping for an interesting meeting. Yeah.
Yeah, I mean, it's quite incredible, right? She's the first one to actually not say that interest rates are in a good place, but she's actually put a floor, that this is a floor. Is it dangerous because then market expectations kind of change?
I don't think so. I mean, she also said interest rates are in a good place for now. So she doesn't expect those to change for quite some time. She was very clear on that. But she did mention market expectations. She did mention economist expectations for a rate hike down toward the end of the horizon. So not next week, not next month, potentially not even next year. But you know, the bias is there, and then data will tell.
So interesting. Such a great interview. Jana, thank you. Jana Randau there from the ECB team. Now, the world's largest ice cream maker has jumped in its debut in London and Amsterdam and will begin trading in New York later in this rare triple listing. Magnum Ice Cream Company, a spin-off from consumer giant Unilever, is debuting a month later than initially planned after the U.S. government shutdown delayed its listing. Well, Bloomberg's Charlotte Hughes-Morgan joins us now from Amsterdam on the story. Charlotte, I mean, the newsroom is all in a tizzel. Are you like team white chocolate or almond, or are you know, dark chocolate? But how might investors be interpreting the company's trading debut?
That's a very good point. It's a very exciting day. Magnum finally debuting on Amsterdam, New York, and London this morning. So at the open, so in Amsterdam, Magnum is valued at 7.8 billion euros. That's 12 euros 20 cents per share. And you know, as you mentioned, you know, it has risen since the open. Now that opening is slightly lower than the kind of technical reference price that was set. But when we speak to people in the market, they're saying, look, this is kind of in the range we're expecting. Jefferies analysts saying this is bang in the middle of what they were expecting. Some saying, you know, they'd hope for a bit higher. But really, you know, what we're seeing at the moment, it really is, in the short term, a wait-and-see game with Magnum. There is a lot going on here. It's a very complex listing. You know, it's not a capital raise. It's not an IPO. So what actually happened is Unilever shareholders, for every 5 Unilever shares they owned, they automatically received 1 Magnum share. And, you know, some of those bigger investors, these are 2 actually very different companies. You've got one pure play ice cream company, and Unilever, this big kind of personal health food giant. So some of those investors, you know, Magnum doesn't fit in their portfolios anymore. It's Netherlands domiciled. It's not going to be in the FTSE 100. So what we've seen is a bit of kind of forced selling, likely at this opening stage. And, you know, the market is saying, okay, it could be a few more days. It could even be next week that we get a more stable price, that we're able to really see what that valuation is. It's also one of the only, if not the only, pure play listed ice cream company. So the peer group is quite a tough one to discern. They're kind of situating themselves in the snack refreshments, but it's quite hard to tell at this stage.
So, Charlotte, what does this demerger mean for Unilever?
So Unilever is saying, look, you know, the ice cream company is the ice cream business, very capital intensive. storing and distributing frozen products is, requires a lot of capital. It's also obviously a very seasonal business, ice cream. So without the ice cream business, Unilever is saying we'll be able to focus on our kind of core areas of personal health, beauty, our other food business. The CEO has said actually ice cream kind of didn't fit with our portfolio. And on the Magnum side, Magnum is saying, freed from Unilever, we'll be able to allocate capital, to the best advantage for the very kind of unique business of ice cream. So both parts of the business are saying, look, we're free to go our own way, focus on, the areas of the business that are really important to us.
Charlotte, thanks so much. Charlotte Hughes Morgan there on Magnum. Now, PIMCO's Chief Investment Officer has emphasized the importance of doing work, your own credit work, as part of a discussion on inflated credit ratings and private credit. Dan Ivinson has been speaking to Bloomberg's Odd Lots podcast on its 10th anniversary.
It is very, very dangerous to assume something has an investment-grade rating just because the rating agencies assign a rating to it. It's critically important that you do your own credit work. Today, all too frequently, you'll have an investment-grade rating from one entity. And again, market participants for years have always joked, if you can only find one investment-grade rating, it's pretty fair to assume everyone else is below investment grade.
And you can catch more of that interview in the full episode of Odd Lots, which has just launched. Find it wherever you get your podcast. Now, coming up, President Trump chides Ukraine for its response to a proposed peace plan as the UK prepares to host European leaders. More on that next, and this is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the UK Prime Minister Keir Starmer will host Ukraine's president and other European leaders today to discuss US-led peace talks between Kyiv and Moscow. It comes as President Trump expressed dismay with Vladimir Zelensky's handling of a US proposed framework to end Russia's war in Ukraine.
We've been speaking to President Putin, and we've been speaking to Ukrainian leaders, including Zelensky, President Zelensky. And I have to say that I'm a little bit disappointed that President Zelensky hasn't yet read the proposal. That was as of a few hours ago.
Well, joining us now is Bloomberg's chief Europe correspondent, Oliver Crook, in Brussels. Ollie, there's been little indication of a major breakthrough. What do we actually expect to come from these peace discussions?
That's right. There's been no shortage of negotiation of the last couple of days, really beginning with Friday, where you had the Ukrainian delegation speaking with the U.S. delegation in Florida, and they said kind of in a joint statement after that that they've developed a framework of security arrangements, and this is obviously, remember, one of the main sticking points of security arrangements for the day after in Ukraine, but that's not clear in terms of what the actual the details of that is, if this is just a sort of effort to keep momentum in the discussions. We also understand that Zelensky spoke with Mr. Witkoff and Kushner on Saturday, and there you heard President Trump saying that basically Zelensky had not been fully briefed on the proposal. We expect Zelensky to receive that briefing from those discussions in Miami a little bit later today, in addition to a meeting with President Zelensky, with Keir Starmer, Emmanuel Macron, and Friedrich Merz. We should say that with these sort of meetings at the high level of European leaders, they very seldom have generated anything really concrete. There's a lot of, behind closed doors discussions, but it doesn't tend to be sort of breakthrough formats. I think this week, Francine, what we're really looking forward to is looking at basically the Russian position. Are they going to fully endorse this peace process yet? Remember, they've been much more guarded than the Trump administration has been throughout. And then, of course, this question of the frozen assets within Europe. There's basically a week and a half left before the EU leaders meeting next week. If European leaders do not make an aggressive move on this over the next couple of weeks, really within the next sort of 11 days or so, this may not happen at all. So I think those are the main key points to watch out for over the coming days.
Trump's approach to Russia and Ukraine is part of a broader U.S. foreign policy, which the White House articulated on Friday. It doesn't seem like it's good news for Europe, Ollie.
I think that's a pretty fair assessment, Francine, and I think that anyone reading this document, as I've been doing this morning, would come to that very same conclusion. I think the main point that we're getting from the document more broadly is what they're calling it the Trump corollary to the Monroe Doctrine, which is basically a U.S. foreign policy posture that basically wants to focus exclusively or majoritarily on the Western Hemisphere, basically wants to end the Russia-Ukraine war, and basically wants the Europeans to take care of their own situation. Now, that is something that we've heard from the Trump administration many, many times before, but this is sort of formalizing it in a way that we haven't really seen before in a single document. And there are a couple other things here, Francine, that I'll quote for you that I think will be very concerning to those that are here in Brussels, saying that basically that Europe is, the continent faces civilizational erasure, and that the United States would like to cultivate resistance to Europe's current trajectory within European nations, saying that they'd like to encourage patriotic European parties within the European system, and especially those that are combating what they call loss of national identity, which is, is sort of one of the terms we hear a lot from J.D. Vance and many on the right in the United States. But I think more prominently within this discussion, they talk about NATO, and they say that in the next couple of decades, potentially these European nations may be so filled with so-called non-Europeans that they may not be interested in honoring the initial spirit that brought NATO together. So, of course, that will be very concerning to the Europeans watching very closely. And, of course, we should say there's also a self-interest side for the United States. More nationalism within Europe is a less unified EU, which makes it less coherent in terms of negotiating on big issues with the U.S. like trade.
Ollie, thanks so much. Bloomberg's Chief Europe Correspondent Oliver Crook. Now, for more on this, we're joined by Natya Siskoria, International Security Associate Fellow at RUSI. Natya, thank you for joining us. I mean, if you're Europe right now, you're trying to look at the document that the White House put out on Friday. I guess you're worried. You're worried about security. You're worried about defense. And you're just worried about the allyship. What does this mean for Europe?
Thank you very much for having me, first of all. I think it is very concerning indeed, because we see the U.S. changing its face. U.S. is no longer the traditional ally that Europe has known for a very long time. And of course, the main question is to what extent there will be some tangible progress when it comes to peace in Ukraine, because this will ultimately reflect on European security in the future.
But Natya, so what do we know that Vladimir Putin wants? At the moment, he hasn't really said that he'd even go behind this plan, and so it's unclear why the U.S. keeps on pushing it so hard.
I believe Vladimir Putin does not want to achieve peace in Ukraine. And even when it comes to the 28-point plan, which was very much in favor to Russia's interest, I do think that Putin still believes that he can fight this war and he can achieve battlefield successes. Hence, I do think that Vladimir Putin is unwilling to accept any concessions when it comes to his territorial claims, as well as Ukraine's future as a demilitarized state as he sees it.
So what does it mean going forward? Why is the U.S. It's unclear to me, actually, the relationship that Vladimir Zelensky has with Donald Trump right now.
It is a very difficult relationship. I think Volodymyr Zelensky has a very difficult task to somehow change the U.S. positioning, which has been more or less clear, because President Trump wants to end this war as soon as possible, and he does not care much about what sort of outcome will be there in Ukraine in terms of Ukraine's future prospects as a sovereign and independent state. So this is most concerning part from President Zelensky, who is unwilling to make concessions when it comes to his country's sovereignty.
I mean, can Europe go at this alone? There's a problem of money. There's a problem of weapons. I know Volodymyr Zelensky is being, greeted today by Keir Starmer with other EU leaders. But what can Europe do if the U.S. doesn't involve them that much?
I think Europe has a very important role in here because, of course, Volodymyr Zelensky will rely mostly on European allies. And I think it was articulated very well in the U.S. official positioning that U.S. sees Ukraine war as Europe's problem to deal with.
When you look at what we've seen, the optics of last week with Vladimir Putin showing up in India, when we have Wang Yi's visit to Moscow, giving this diplomatic spook to Russia, is Russia slowly being accepted back on the diplomatic front worldwide?
I think it's early to say so, but Russia has its traditional allies. And I think with the recent diplomatic visits and exchanges, Vladimir Putin is trying to send a message that regardless of the Western isolation of Russia, he still has powerful allies. And of course, India and China are very important for Russia's economic lifeline. So in that sense, I think he's sending a message to the West as well, that he's capable of continuing this war effort in a long-term perspective.
So what can Europe do?
Frozen assets, I think this will be one of the main areas of discussion, and Europe needs to make a decision over this issue that has been much discussed over the past years, and of course scaling up the military support to Ukraine, because I think the battlefield, when it comes to the battlefield, that is one of the most crucial parts of this war.
But not yet. We understand through Bloomberg reporting that actually certain U.S. officials have been briefing European country heads not to use the frozen assets. Is this because of monetary deals with the U.S.?
Well, the U.S. has a very ambiguous, very confusing standing when it comes to Ukraine. And I think, because Europe will be the main actor dealing with the Ukraine war, I think, in a way, Europe needs to make a sovereign decision over this issue, because this will be crucial for Ukraine. And I think any ambiguity over this gives an upper hand to Vladimir Putin.
But how long can Ukraine last without U.S. government support?
It depends how much Europe is willing to support Ukraine, and I think there is still a potential for Europe to scale up the military and financial support to Ukraine. It will be very difficult, of course, because U.S. has been one of the main providers when it comes to intelligence, military support, but I think there is still a space for Europe to play a very important role and scale up this support for Ukraine.
So how do you see the next 6 months developing? I know this is a very difficult situation, given there's been so much upheaval also in the last 2 weeks, but what's your main prediction?
I'm not expecting that there will be any progress, any tangible progress, or any peace deal signed anytime soon. I think this process will be stalled pretty much. There will be negotiations back and forth, but I think ultimately, whatever the deal will look like, Vladimir Putin will be unwilling to accept concessions. So I'm expecting, unfortunately, that the war will continue and Ukraine would need crucial support on the battlefield.
Is it difficult to see what happens on the battlefield?
It is difficult because Russians have been advancing slowly, and of course winter is coming, winter is here, so the advances will be even slower during this time. But I think Ukraine and Ukraine's allies need to look further, and when it comes to spring, summer, Ukraine would need very much tangible support to make any advances on the battlefield or defend itself against the further Russian aggression.
Natya, thank you so much for joining us. Natya Siskoria, they're International Security Associate Fellow at RUSI. Up next, Bloomberg Brief. I know the focus today will definitely be on that ECB scoop on Isabel Schnabel, the executive board member, saying she's comfortable with investor bets, actually, that the ECB's next interest rate move will be an increase. The other story is the Fed on Wednesday, so we'll have a full roundup of all of the market moves shortly. This is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Markets in anticipation mode ahead of the Fed's last interest rate decision of the year, along with an updated summary of economic projections. President Trump raises market share concerns around Netflix's planned acquisition of Warner Brothers. The Justice Department will review the transaction. And $1 trillion. That's China's trade surplus in the 11 months to November. Exports rebounding, just not to the U.S. All right, let's take a look at these markets as we kick off the trading week. Futures pointed higher. Remember, we did eke out a gain in the S&P 500 last week. And we, in fact, gained 1% for the NASDAQ 100. To that point, we have a new call today. Ed Yardeni finally finished with his IT and services and technology overweight call that he's had for the last 15 years. He's now saying add to what's already an overweight in financials and also add a new overweight in healthcare, also adding to an overweight in industrial. So a very big call there from Ed Yardeni, one of our favorite guests on the show typically. Let's take a look at the bond universe because those yields have been climbing. We're right up to 480 now on the 30-year yield. Some money coming out of bonds ahead of the FOMC meeting. And then I want to point to copper as well. Already up 30% year to date on the London Metal Exchange. It is at a record. This, of course, on the China news. Also the news that the Politburo is going to prioritize domestic consumption in 2026. And that should call for some copper. All right, let's get to some individual market movers now. Over to London and Valerie Teitel. Valerie.
Good morning, Vonnie. Let's start with a check in the entertainment industry. As you mentioned, President Trump throwing a bit of cold water on the proposed merger between Netflix and Warner Brothers. We're seeing the share price move reverse a bit of yesterday. So we have Netflix in the green, Warner Brothers in the red, reversing some of the Friday's move as the odds of this deal closing in 2026 has fallen quite steeply on Polymarket as Trump flags some regulatory concerns on the horizon. Let's move over to the tech space. There is a Wall Street Journal report that IBM is eyeing a acquisition of Confluent for around $11 billion. Vonnie, this would mark one of the biggest acquisitions that IBM has ever made. We're seeing shares of Confluent trade higher by the tune of 32% in pre-market. IBM, little change, flat to the downside. This marks IBM attempting to make up lost ground when it comes to the AI race. Lastly, let's talk about quarterly index rebalancing. S&P 500, as of December 22nd, will now be including the shares of Carvana. It seems like the market, this found the market a bit unexpected. We are seeing shares of Carvana up some nearly 9% so far in pre-market trade. Bonnie?
Fascinating. Valerie, thank you so much and happy Monday. Also coming up in this hour, we'll be looking ahead to a busy week of data and that Fed decision with Sonia Martin of DZ Bank. Our top story this morning, President Trump responding to the Netflix-Warner Brothers deal.
Well, that's got to go through a process, and we'll see what happens. Netflix is a great company, and they've done a phenomenal job. Ted is a fantastic man. I have a lot of respect for him. But it is a big market share. There's no question about it. It could be a problem.
Joining us now is Bloomberg Deals reporter Manuel Baigori. So, Manuel, we have exclusive reporting that said that Ted Sarandos spoke to Trump about this in November, and Trump said that Warner Brothers should go to the highest bidder. Now, he didn't say anything about antitrust concerns. How much can the president actually sway what happens next?
Yeah, Vonnie, what an amazing deal, right? I kept that so busy in the run-up last week and to see it announced. I mean, now after the deal has been agreed, you know, the tough job to basically get these to completion phase starts, and antitrust will be a key issue. Just piecing regulators and you know, overcoming those potential hurdles is going to keep the lawyers on this deal really busy. I mean, it's still too early to call it. I mean, obviously, large deals of this magnitude, which are very transformative, not only for the companies, but for the whole industry in the U.S. and globally, will be highly scrutinized, and ultimately it will come down to how it may affect the market share that Trump was referring to, but also how it's going to impact the consumer. That is something that regulators will watch very, very closely. Netflix is offering a $5.8 billion breakup fee, also to assuage concerns by, you know, including Warner Bros.
Yeah, really putting their money where their mouth is. They also lost no time in informing their customers, including me, on Friday that they had taken Warner Brothers into their fold already, which I was shocked at. Isn't there a concern that I will have to decide to either pay more when this happens for my service or leave altogether?
Yeah, I'm sure Netflix, you know, if this deal comes together in the end and it gets completed, when it comes to the integration part, they will have to think that very thoroughly how to potentially pass some of that onto the consumer, like yourself, Bonnie. But obviously, they'll have to be very, very careful, very mindful about how that reflects into, say, the final price of subscriptions, because obviously consumers can be quite price sensitive as well. And there is other offerings, right? But needless to say, Netflix has been very successful in the subscription model in streaming, and they have a very unique global franchise. There are other competitors out there that are trying to ramp up as well. Whether or not and how it impacts the final price for consumers is still a little bit early. But yeah, you were right. They were quick to make that clear for their subscribers as well.
Okay, I have to ask, are you a subscriber, Manuel?
I am, indeed.
I knew you were. You were hiding that detail.
And I got that too.
That is Bloomberg's Manuel Baigori. Thank you. The Trump administration is preparing to unveil a farm aid package offering $12 billion in assistance to farmers hit by high crop prices and tariffs. Let's get more with Bloomberg's Brendan Murray. Brendan, if this is a one-off payment, how is it going to help farmers into the future?
Yeah, exactly. It sounds like the checks that are going to go out to farmers are going to amount to something like $6,000 or $8,000 per farm. That'll get them through the next couple of months until the planting season comes around in the spring. And so it will basically buy the president some time with American farmers who are growing frustrated that they're not the beneficiaries of these trade deals that the White House is going around the world and negotiating. So soybean prices have saw a nice boost after the truce with China was negotiated in late October, but they're coming back down now. And so the timing of this help for American farmers, couldn't come at a better time here right before the holidays.
Yeah, exactly. At least it helps for now. But what other markets can these farmers tap? I mean, if China doesn't come back in the way it was, then they're in real trouble. And, you have to remember the EU, butter mountains, the wine lakes and so on. That went on for decades and everyone lost out, including the people who were trying to store all of this surplus butter, wine and what have you.
Yeah, exactly. I mean, this is the big the argument against some of these trade negotiations that the Trump administration is doing. They impose higher tariffs on trading partners, and then the question is, will those trading partners continue to buy U.S. goods, or will they themselves go seek other markets and leave American exporters at a disadvantage? So this is really the culmination of a year of trade policy that we've seen a lot of disruption in, and we've talked a lot about how importers are hurt by tariffs, but this is the other part of that story. Will the Trump administration be able to open those export markets for key political constituencies like farmers heading into the midterm election year of 2026?
Brendan, can you give us an update on SCOTUS and when we might anticipate some kind of a decision on trade from the Supreme Court? Not that there aren't other avenues open to the administration even when we get that decision, but at least we need that decision first.
Yeah, exactly. We don't know exactly when the Supreme Court is going to hand down that ruling. The people that we have talked to have said it could come before the end of the year, but it's still the Supreme Court works on a much slower timetable than a lot of the participants in that case would like. But no doubt that is going to be a key question answered as to whether the president can use that broad use of tariffs, or if the court rules against him, as a lot of people, including prediction markets, anticipate, he'll have to use other more legally sound authorities. The Trump administration says they feel like they can replicate the whole suite of tariffs with those other authorities, but it's going to be a slower, more deliberate process, and could also lead to more lawsuits of a different variety than the one that's currently before the High Court.
Definitely very thorny. Brendan, thank you so much for joining. That is Bloomberg trade czar Brendan Murray. And in China, the nation's annual trade surplus exceeded $1 trillion for the first time, despite a deepening plunge in shipments to the United States. Exports rose 5.9% over last year overall. Bloomberg senior reporter for Chinese economy and government, James Mager, joins us now from Beijing. James, if China has expanded trade with other countries to replace the U.S., does it even need the U.S. anymore?
I mean, Chinese companies, I should say, are still selling about $1 billion worth of stuff to America every day. There's still $1 billion of phones and everything from T-shirts to phones going into containers to cross the Pacific Ocean to go to LA port, to go to the other ports in America. So you can't just take that away and have nothing happen. Obviously, the companies that are still selling those goods depend on American customers, even though, as you're saying, you've seen double-digit falls in exports to the U.S. For the last 8 months. I mean, America is still a substantial market for Chinese companies, and lots of Chinese goods are making their way to America via third countries now. Vietnam being probably the most, the biggest one, but Thailand, Malaysia, the Philippines, Indonesia, Mexico. There are lots of Chinese components and Chinese goods that are going to those places, being transformed or not transformed, and then eventually making their way into America. So, the Chinese companies cannot do without American, or they would make a lot less money if they had to do completely without America's market. But, I think what you're seeing here today is in the data today is two things. One, there are other markets in the world. America is not the only place that wants to buy things from China. There are other companies in other countries around the world that do value Chinese goods. They see them as increasingly good quality. They see them as cheap. And they want to buy from China. And the second thing we're seeing is really the biggest story, I think, is how weak Chinese domestic demand is, and how much more they're able to fulfill their own needs domestically, so they don't have to go and buy from other countries. And I think that's where you're seeing this massive trade surplus coming from.
So on that point, the Politburo has also now decided to prioritize boosting domestic demand in 2026. But China has been trying to boost consumption for a long time, right? So does this mean we're going to see some kind of stimulus getting rolled out or some kind of a one-time incentive?
I think, if I can't explain the difference between prioritizing domestic consumption this year for 2026, then last year's aim for 2025, which was boosting domestic consumption. These are very, very, it's kind of how many angels can dance on the head of a pin kind of questions, trying to pass the difference in that. I think the people who are looking at this are, saying that there's going to be a little bit more stimulus, there is going to be a little bit more of a focus on the domestic market, but it isn't really a massive change in, I think, how the government is seeing the domestic economy. And also, I don't think that's then going to flow through to foreign exporters who might want to try and export to the Chinese economy. And the reason for that is, as I said, the stimulus that people are expecting is not very large, so the effect is not going to be that large. And secondly, Chinese companies are more capable and more able to fill those holes, fill those gaps. China is less reliant than it's ever been really on imports. And so even if there is a boost in the domestic economy, a lot of that is just going to be taken up by Chinese companies, which are more competitive and often cheaper than their foreign competitors. So even if there is a domestic rebalancing in China, the flow-through effects of that to foreign countries is going to be much less than, say, in 2008, when you saw a massive stimulus from the government, and that flowed through all over the world. It was one of the things that really brought the world out of the global financial crisis. I don't think we're going to see something like that this time.
James, amazing context. Thank you so much. That is James Maker there in Beijing. Now to other top stories trending on the terminal this morning. ECB Executive Board member Isabel Schnabel says she's comfortable with investor bets that the central bank's next move will be a rate hike. She warned that risks to the economy and inflation are tilted to the upside. The ECB meets next week. Wall Street research veteran Ed Yardeni now recommends effectively going underweight Mag 7 stocks, reversing his firm's 15-year bet on tech. He says every company is evolving into a tech company.
The U.S. now accounts for 65% of the market cap of the world stock market, so it's hard to recommend overweighting something that's already quite overweight.
And President Trump expressing disappointment in Ukrainian President Volodymyr Zelensky's handling of a U.S. proposal to end the war with Russia. The U.S. says its negotiators had agreed with Kyiv on a framework of security arrangements. However, there was little indication of a major breakthrough. Coming up, Jamie Dimon says Europe has a real problem, and that's bad for the United States. More from Dimon at the Reagan National Defense Forum coming right up. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
bringing you up to the minute news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. JP Morgan CEO Jamie Dimon raising concerns over Europe and suggesting that the U.S. needs to help them for their own good. He spoke over the weekend with Bloomberg's Carolyn Hyde at the Reagan National Defense Forum.
Europe has a real problem. You know, it's very hard to look at the world and, you know, we have moving tectonic plates. You've heard us spoken about. It's AI. You know, the enemy's in the satellite up above and in your computer systems right now. You know, and the world changed. The other tectonic plate is the rise of China, huge global deficits, social network programs that probably can't be maintained over a long period of time. So Europe has a problem. I think they accomplished an unbelievable thing with when the Euro got together, the EC, and they said, you know, let's live in peace and not war. You know, they had World War I and World War II, but they had the Franco-Prussian Wars, the Napoleonic Wars, the 100 Years' War, the War of the Roses. You know, and so living in peace is a good thing, but it got bogged down. They never finished the common market. It takes 27 nations, you know, to make a decision. They let their military drop dramatically. It's very bureaucratic, which is why part of the reason that, you know, they lost Britain to the EU, which I think makes it bad for both of them, by the way. And so you got to be honest about this. So, and those tectonic plates may move over 20 years. But if we ever write a book about how the West was lost, it will be because of the following. It will be because of we didn't get our act together here, and we go through all the policies here, that we didn't have the strongest military in the world, and that we allowed Europe to fall apart. And so I have a slightly different point of view about Europe. They have some wonderful things, but they've gone from 90% of the GDP of America to 65. That's not because America did anything bad to them. It's their own bureaucracy, their own costs, they do some wonderful things on their safety nets. But they've driven business out, they've driven investment out, they've driven innovation out. It's kind of coming back. I think the leadership, Merz, Macron, Maloney, Starmer, I think they know. I just think politics is really, really hard. Therefore, the fragmentation of Europe, if they fragment, that's exactly what some of our adversaries want. They want to go back to a world like that, and then you kind of have a world that was like it was before World War I, everybody out for themselves. Everyone's got different national security interests, whether it's food or energy or water, and you know, China is a huge country who wants to do bilateral negotiations with every country. If they fragment, you know, then you can say that, you know, that America first will not be around anymore. It will hurt us more than anybody else because they are a major ally in every single way, including common values, which are really important. So therefore, I think we should be using our American capability, strength, coercion, democracy, trade, investment to urge them to do what's in their own self-interest, which is military and the economic is equally important. You know, if they go to 60% of our GDP, then 55, then 50, they won't be able to afford the military. They'll have more polarization. They won't be able to afford their safety nets, et cetera. So I think we need a long-term strategy to help them become strong. A weak Europe is bad for us. It's bad for the civilized world. It's bad for the free and democratic world.
JP Morgan CEO Jamie Dimon speaking alongside RTX CEO Christopher Callio at the Reagan National Defense Forum on Saturday. Coming up, IBM nears roughly $11 billion of a deal for Confluent. A look at what's making headlines in your front page news next. This is Bloomberg.
phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and the downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bloomberg Brief, I'm Bonnie Quinn in New York, and it's time now for your front page news. First up, the New York Times leading with Thailand launching airstrikes on Cambodia in a new wave of violence in a border dispute. The Times says it's a sharp escalation between the two nations that President Trump claimed to have ended. The neighbors share a near 500-mile-long boundary, but large parts of it are undefined and home to centuries-old temples. Next up, the Financial Times reports France is shielding Russian assets worth 18 billion euros from the EU push for reparations loans to Ukraine. The FT says France has withheld any details on the institutions holding the Russian state funds and how any interest accrued is used. France claims it's an issue of client confidentiality. The assets in France are the second biggest accumulation of frozen Russian central bank assets in Europe. And finally, the Wall Street Journal is reporting IBM is nearing a roughly $11 billion deal for Confluent, which manages streams of real-time data used in big AI models. The Journal reports a deal could be announced as soon as today, but the talks could still fall apart. All right, well, let's have a look at what we are seeing. Futures-wise, we are looking higher this morning. Don't forget, there's only 8 trading sessions left, so that Santa Claus rally, if it's supposed to come in the 5 sessions leading up to Christmas, well, it better start soon, right? And, of course, we are looking forward to that Fed meeting, the 10-year yield, just a few basis points higher than last week, so little money coming out of fixed income, and really not much change to the U.S. dollar index. But coming up, we're going to get to that dollar index because we'll be looking ahead to the FOMC decision with Sonia Martin of DZ Bank. That and all of the other central bank decisions, of course, in the coming days. This is Bloomberg.
much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Beirut, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Markets in anticipation mode ahead of the Fed's last rate decision of the year and that updated summary of economic projections. President Trump raises market share concerns around Netflix's planned acquisition of Warner Brothers. The Justice Department will review. And farm aid. The Trump administration plans to unveil a package offering $12 billion in assistance to farmers hit by low prices and tariffs. Let's take a look at markets now. We have a few hours to go, obviously, for the open, but we are kicking Monday off on a positive note, at least regarding equities. Futures pointed higher across the major indices, and don't forget the Nasdaq 100 put on 1 percentage point last week. The S&P 500 was up 0.3% last week. So we could be looking at a Santa Claus rally. A few more sessions to go, and I guess it's the last 5 sessions before Christmas that are technically part of that Santa Claus rally. But we do have the Fed, of course, on Wednesday as well. Ed Yardeni out with a call, retiring as IT and communication services overweight, essentially the Mag 7. He's now recommending overweighting more financials and industrials and beginning an overweight in healthcare. Let's take a look at bonds, because we're certainly keeping an eye on where those particularly longer end yields go, and of course the 2-year yield, which is sensitive to Fed decisions too, all rising today by about a basis point. They put on a few basis points last week. And copper then at a record as well. It's up 30% already this year, but news out of China sending that metal to a record. Let's get to some individual movers now. Over to London and Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with a check in the entertainment industry around this Netflix Warner Brothers tie-up. We did hear from President Trump, as you mentioned, throwing a bit of cold water on the deal, making investors a bit worried about some regulatory action off the back of this. So we are reversing around a quarter of Friday's move when this deal was announced. Warner Brothers Discovery in the red, down 1.7%. Netflix higher by just 1%. This also follows with what we've seen in the prediction markets. Bonnie, take a look at Poly Market. The odds previously were around 60% of this deal closing. They've now dropped all the way down to 23. Moving on to some maybe perhaps more acquisitions to be announced today. The Wall Street Journal talking about IBM is nearing a deal, an $11 billion deal in its acquisition with Confluent. This would be the biggest acquisition by IBM in recent memory. Goes back to all of them buffing up their tools when it comes to AI. The Wall Street Journal mentioning that this deal could be announced announced as soon as today. We're seeing shares of Confluent higher by nearly 28% in pre-market trade. Lastly, let's talk about S&P 500 index rebalancing. The quarterly rebalancing to happen on December 22nd is now going to include Carvana in the index. It does seem like this caught the market a bit on the wrong side. We're seeing shares of Carvana higher by 9% in pre-market trade. Bonnie?
All right, Valerie, thank you so much. A lot of big movers there. That's Valerie Teitel. Back to our headline, the Trump administration planning to unveil later a $12 billion package to help assist farmers. Joining us now from Washington is Bloomberg's Enda Curran. Sounds like a lot of money, Enda, but if trade routes are completely suspended for these farmers, a one-time payment is not really going to help that much in the long run, is it?
Yeah, Ivani, this has been a growing source of contention with farmers. As you know, farmers are a big political supporter of President Trump, so there is an announcement coming today at 2 p.m. in the White House with a group of farmers where that aid is expected to be announced. And what's happening here in particular is the fact that farmers are worried that the market for their goods in China has dried up in recent years and that China isn't buying the volume of soybean in particular that they talked about in that recent trade agreement. Of course, we know that China has diversified its markets to source products from other areas anyway, such as Brazil and Argentina, for example. So it's kind of a repeat also of a playbook from Trump's first administration when, of course, he had tensions with China, trade tariffs, trade negotiations, and during that period, the president also rolled out support for farmers. We are now seeing a repeat of that. I think the critical thing to watch out for in the weeks and months ahead will be the continued pace of China purchase of agricultural goods. The trade representative, Jameson Greer, said they're on track to buy the volume of soybeans they promised you in the recent agreement, but that's one that will need to be very closely watched, I think, in the weeks and months ahead.
You know, and if it weren't all bad news for farmers, you know, the farmers that decided to get out of beef because it just wasn't paying them, now they're having to pay more for their beef. And Trump advisors apparently are looking for ways to bring down the price of beef for the American consumer. How will they do that more than they have already?
Well, that particular point, that's a report in the Wall Street Journal this morning, Vonnie. We do know that the administration is talking about food prices in general, inflation, cost of living, and they have identified beef prices. For example, White House officials have spoken about the efforts the White House made earlier this year to bring down the price of eggs, which they say was a success, and now they're talking about doing the same thing with beef. But they're also warning it's more complicated. You know, in recent interviews, officials have been saying there are issues there around drought, around supply. It's going to take longer to fix that beef supply chain than it did to fix the egg supply chain. So we'll have to see what details they come up with. But the important point is here, it nods to the economic story, which is the inflation pressures haven't fully gone away yet. And of course, it nods to the political story heading into next year, that the White House is clearly worried that voters continue to be concerned about prices, and they're going to try and get that fixed ahead of those November midterms next year.
Well, you said the word inflation, and we are obviously looking at a Federal Reserve that is very likely, according to the market, to cut this week. It's an almost certainty. But if that inflation rears its head again, will they be making a mistake?
Well, this is a big question, Vonnie. They are expected to cut. The market's fully priced, but, you know, we know there's a lot of tension among the policymakers. Some are more worried about prices. Some are more worried about employment, for example. We haven't had a lot of official data going into this meeting. We've had very little, obviously. So that's kind of obviously complicated the picture. Private sector readings and sentiment surveys suggest the labour market is softening. We just don't know by how much. The one school of thought is that if the Fed does cut this week, they will probably say, look, we're maybe going to go on hold for a little while after this, see how things play out. Inflation remains above our target, around 3%. The core PCE on Friday was encouraging, however. That will certainly give some comfort to the doves in the committee. But the thinking is they might say, let's go month by month next year and see where inflation is. But I think right here, right now, the thinking is they will go this week because they are more concerned about the jobs market. And then as we get more official data coming in over the months ahead, they'll have a clearer picture on where jobs and inflation are and probably give policy a sharper focus as we head into the new year.
And Karen covers the gamut for us there in Washington. Our thanks to you for joining us this morning. Let's continue that conversation now because we do have a week of central bank decisions likely to keep FX traders pretty busy. A little pressure on the dollar in the run-up to the FOMC as traders weigh the health of the U.S. economy and, of course, a potential Hassett succession to the current Fed chair. Joining us now is Sonia Martin, Head of FX and Monetary Policy at DZ Bank. Sonia, just following on from what Enda said there, what can Powell say on Wednesday, assuming there is a cut, given that he already said you slow down in foggy conditions? Did the conditions suddenly get less foggy in the last few weeks?
No, they certainly haven't gotten less foggy. They will get a little bit less foggy after the FOMC, because that's when we're going to get some key data points coming in, the CPI and, of course, the labor market report. The Fed is likely to cut, as was just mentioned, and I think the best strategy for Jerome Powell is to accompany this with some very cautious wording. He's likely to highlight the fact that the future path for monetary policy in the U.S. is not set, that the market should not expect successive rate cuts at the upcoming meetings. And I think that's going to be designed to sort of make clear that the Fed continues to act in a very data-dependent manner and will not be pressured into more aggressive cuts, also by the White House. So I think that's going to be the wording to accompany this cut. So it's going to be a cut with a cautious, maybe slightly hawkish tone in the statement.
Sonia, does the decision or the SEP, if it changes, or even if it doesn't change, move the dollar? Or do we have to wait for decisions out of the Bank of Japan and the ECB as well?
I think the market obviously is set for a rate cut from the Fed. It's fully priced in at this point, so it's not going to be a massive surprise. Maybe depending on how careful Powell is in his wording, that could give the dollar a little bit of a lift. But having said that, we are waiting for the announcement of his replacement. We all know it's probably going to be Kevin Hassett. The White House has yet to officially confirm this, and to be honest, I wouldn't be surprised if Trump chose a moment soon after the upcoming Fed meeting to maybe make this announcement, which could then put some pressure on the dollar yen.
Why would it put pressure on the dollar yen? At least we'd have some kind of certainty, although obviously if it was a nominee, that person would have to go through the process of getting confirmed and so on. But there would be some kind of certainty as to at least what the lookout would be.
Well, I mean, Kevin Hassett is probably one of the more controversial suggestions or nominees that we had for this job. I mean, I think the market had other preferences. Kevin Hassett is considered to be very close to Trump, and he's likely to be quite dovish. I mean, I'm not saying that the Fed independence is going to be, necessarily will be threatened severely next year. But of course, there is that issue. We don't really know how that's going to play out. We don't really know exactly who's going to be on the board. There are some other question marks. Who's going to replace Steve Moran, and what's going to happen to Lisa Cook? So there's a few, there are some question marks. There's also some concerns that Trump may try to influence the rotation of the regional Fed members. So there's that uncertainty. But Kevin Hassett is certainly seen as someone very close to Trump, and I think it sort of suggests that we're definitely looking at a more dovish Fed going forward.
Sonia, what does the steepening of the yield curve, and indeed just the yield curve going higher this week, what does that tell you as an FX strategist?
Well, I mean, we have seen obviously a lot of volatility in this market this year and the previous years. The fact that the yields have risen again, I think there's several factors at play. On the positive side, you could note that people have become, I think, somewhat more optimistic on the prospects for the U.S. economy in general. We have seen some pricing out of more aggressive rate cuts, over the last few months. We have also seen some concerns on the other side on fiscal policy and the fact that, we had a long shutdown that's going to place an additional strain on the economy. Fiscal spending is an issue in the U.S. and will remain so for the years to come. So that's kind of the factors that are playing out here. I think the 10-year yield in the U.S. is going to continue to rise moderately, sort of very much reflecting fiscal concerns, whereas, of course, in the short end, we have more Fed cuts coming our way. So that does suggest that the curve will steepen somewhat more.
I have to ask you about the ECB and particularly Isabel Schnabel. She told Bloomberg exclusively that, if she were to be the next ECB head, if she were asked, that she would be ready to do the job. Would she make a good person to succeed Christine Lagarde, whose term is up in less than 2 years?
Well, I think she'd certainly stand for a very credible policy. I'm not sure, to be honest, what her chances are. I mean, there's a lot of politics involved in this choice. She is definitely known for having strong views on monetary policy. So I think that's a good thing. Again, I'm not sure what the probability is that she will succeed Lagarde, but I think it's the most important skill to have when you take that position is to communicate clearly with the market. And I think we've seen in the past, we've certainly seen some ECB presidents that have had some issues with this. Christine Lagarde, I think, sets a very high standard for whoever is going to succeed her.
for sure. The euro has been strengthening, right, in the last few days. Is that more of a dollar story? And where do you see it, given all the cross currents? Where do you see it, into the new year?
Well, yeah, I agree with you. I think it's mainly been a dollar move. We've seen the dollar weaken pretty much across the board as the market focuses on this upcoming Fed rate cut. The euro has very little, strength of its own right now. We are in a very difficult economic situation in the Eurozone, particularly when we look, obviously, at Germany, a government that's been struggling to find majorities for key laws that had to be passed through Parliament last week. And of course, a big reform agenda that doesn't seem to be tackled at all at the moment. So all of that is speaking against the euro right now. Into next year, I'm a bit more optimistic on growth in the Eurozone. So we are looking for a somewhat stronger euro. But I think, to be honest, something slightly above 120 is probably going to be the end of that story, just because, it's easy to be dollar bearish. It's much harder to be euro bullish.
That's a good way to end things. Sonia, thank you so much. Enjoy the week. It's going to be fun. That's Sonia Martin of DZ Bank. Now to other top stories trending on the terminal this morning. President Trump expressing disappointment in Ukrainian President Volodymyr Zelensky's handling of a U.S. proposal to end the war with Russia. The U.S. said its negotiators had agreed with Kyiv on a, quote, framework of security arrangements. However, there was little indication of a major breakthrough. Unilever's Magnum ice cream starts trading today in Amsterdam, London and New York. The spin-off was valued at more than $9 billion. The company, which owns the Ben & Jerry's and Cornetto brands, is debuting a month later than initially planned after the listing was delayed by the U.S. government shutdown. Billionaire Alan Howard, whose hedge fund is the largest operating out of Abu Dhabi, said the Gulf city was well on its way to joining Western centres like London and New York as a global financial hub. The region's pro-business regulation, UK rule of law, and time zone that allows trading across regions have transformed Abu Dhabi, according to Howard. Coming up, President Trump throwing cold water on the Netflix Warner Brothers deal over antitrust concerns. More next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Bersachi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. President Trump has responded to Netflix's plan to acquire Warner Brothers. Take a listen.
Well, that's got to go through a process, and we'll see what happens. Netflix is a great company. They've done a phenomenal job. Ted is a fantastic man. I have a lot of respect for him. But it is a big market share. There's no question about it. It could be a problem.
Joining us now is Bloomberg's Lonnie Prinsloo. So, Lonnie, what is next? Does it potentially happen that Netflix has to reconfigure this kind of deal, or that the other bidders might even be back in the game?
Yeah, so as you heard, Trump came out with concerns around the combined market value of Netflix and Warner Brothers, saying that it will have to go through a lengthy process with the U.S. Department of Justice over antitrust concerns, and that he will be a part of vetting that deal. That, of course, is significant because Trump also has ties with Paramount CEO Larry Ellis, and Paramount came out with the first moves on Warner Brothers. So there is a number of antitrust concerns, and we will have to see how Warner Brothers go about this. Even the polls, Polymarket said 60% chance of this deal coming through in 2026. Before Trump's comments, after his comments, it was only at 23% that the deal would come through in 2026.
The betting markets obviously think Trump's got some sway, or that his word means something about the antitrust division of the Justice Department. But Netflix does have an argument for the deal. It obviously is going to say that it's going to be better for the consumer. What is that argument?
Sure. So Netflix is coming out saying about 75% of HBO's streaming customers are already part of their platform, and of course customers can benefit from bundle pricing. There's also an argument that their competitors are not just a Paramount or a Disney. Their competitors is a TikTok, it's a YouTube. Even so, if you take the combined revenues of Netflix and Warner Brothers, their revenues are already more than that of YouTube. And of course, it's a massive platform that will be created with more than 450 million subscribers.
Yeah, a lot of subscribers. Lonnie, thank you so much. We'll continue to follow this with great interest. That's Bloomberg's Lonnie Prinsloo. Ed Yardeni of Yardeni Research is now recommending investors underweight the Magnificent Seven tech stocks versus the rest of the S&P 500. He spoke with Bloomberg's Haslinda Amin.
I've been recommending overweighting information technology communication service since 2010. The problem is it's worked all too well. The two sectors now account for a humongous 45% of the market cap of the S&P 500. Of course, their earnings share has also increased, but nowhere near as far. And the same thing can be said about looking at the U.S. versus the global economy. When you look at the U.S. MSCI relative to the world MSCI index, what you see is the U.S. now accounts for 65% of the market cap of the world stock market. So it's hard to recommend overweighting something that's already quite overweight. I mean, if you just told people just to maintain the current weight of the index, that would still be an overweight position relative to what most people would think would be a diversified portfolio.
And what's fundamentally changed? Because when we talk about, overstretched valuations, they've been that way for a very long time now. And when you take a look at the AI cycle, people still point to how it is still at the nascent stage.
Well, I would say with regards to the Magnificent Seven, what's I think has changed is they're competing more aggressively against each other, and they've got more competition coming out of nowhere and somewhere on a regular basis here. We recently saw that Google introduced Gemini 3, which suddenly made everybody kind of reconsider just how strong the position is of OpenAI and OpenAI's relationship to lots of other AI-related companies. And then just at the same time, DeepSeek came back. Remember, DeepSeek, when it introduced its model back in January of this year, kind of shocked everybody because they were able to put together a pretty good AI model that worked as well as some of the other ones in the United States, but apparently it was trained on chips that cost a lot less. And now it looks like they're doing it again, and there's some talk that the latest version of the DeepSeek model is just as good as Gemini 3. So there's a lot of competition. The profit margins have been awfully high for the Magnificent Seven. That usually invites a lot of competition, and that's exactly what's happening.
Ed Yardeni there. Coming up, we'll get you set up for your trading week. This is Bloomberg.
Coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
On a visual.
And the analysis you need.
China's not going anywhere, nor are we.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week. One more piece of jobs data ahead of the Fed decision, with JOLTS job openings coming out on Tuesday. Then the main event, a Fed rate decision Wednesday, plus, of course, Powell's news conference and the SEP. And Fed Speak returns with Paulson, Hammack and Goolsbee all set to speak Friday. Let's take a look at some micro movers now, the ones that are moving before the bell. Warner Brothers, for example, down 1.5% on Trump warning that the Netflix-Warner deal may pose an antitrust problem. So you have Warner Brothers lower, Netflix actually higher this morning off the back of that. IBM down about 0.2%. The Wall Street Journal is reporting that it's close to buying Confluent. It will be an $11 billion deal if it does in fact happen. And Carvana will join the S&P 500. So it is up close to 10% in the pre-market. Let's take a look at the macro environment now. We have futures pointed higher and indeed gaining ground as we head through the morning. This, of course, as we look towards a Santa Claus rally, potentially. The two-year yield up another basis point. We did move a little higher last week, 357 now. The whole yield curve has moved higher. And copper at a record. China is going to boost domestic consumption next year. That's just one of the things going on with that precious metal, up 30% already year to date. That's it for Bloomberg Brief.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Financial conditions are easy. I mean, the stock market is hitting new highs almost every day.
We prefer to take our risk in the large cap space. We just want to be where the earnings are.
We're going to see a broadening out. We think that more boats are going to be rising.
We see another year of above average earnings growth next year for the S&P 500.
The U.S. bond market has been the envy of the world.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Looking ahead to a key Fed decision as traders position for more rate cuts. Oracle earnings on deck with Ed Yardeni underweighting big tech for the first time in 15 years. And Netflix's big deal sending reverberations through Hollywood, but Trump casting a shadow of doubt where suddenly it seems like less of a given that this deal is going to go through.
Well, it needs to go through a process, which the president did say last night. But then he also said, quote, but as a big market share, it could be a problem. The issue is the president normally doesn't get involved in these types of issues. His DOJ, though, of course, will review this. At the same time, in the same breath, the president was talking about how he did meet the co-CEO of Netflix. The conversation went well. So potentially, he's looking at some of the other players in the arena, like his friend, Larry Ellison and his son, and looking at potentially if this deal falls through, could there be another bidder at the end of the game? But you saw immediately in Poly Market, those individuals that are betting that this was going to have a clean-cut, easy approval when it comes to Washington, those quickly sank.
Yeah, 60% to 25% chance this would actually go through, and you see the pricing start to reflect that. A question of the politics of this with respect to President Trump, his relationship with the Ellisons, and the potential reemergence of Paramount Skydance, and then the debt market side of this, the sort of market acceptance of this, given the fact that there's a $59 billion bridge loan, and a real question of how much appetite there is to finance M&A that seems to be coming fast and furious.
Well, we've already seen that with some others, that there has been questions in the debt market that is this just too much when it comes to the AI space. Also, when it comes to Netflix, how are they going to talk about this? I think for Netflix, it's not just the fact that it's YouTube. They're going to talk about things like TikTok, Disney. There are other streamers that they're going to say, actually, we need this to maintain a competitive advantage.
And a key focus is going to be on the Fed decision and just how much the Fed does make a more accommodative backdrop for these deals, for the debt markets. On Wednesday, a sort of lame duck Fed chair has to come out and say something that everyone will ignore. But there is this issue that we have not gotten 4 dissents on the FOMC board going back 30 years. Yet this could be the most split decision that we've seen in decades.
So it's going to be interesting as everyone pretty much thinks the Fed's going to cut. Who dissents, how many that number is, and then, of course, what is the rhetoric that Jay Powell comes out with? How does he talk about this interest rate cut, given the fact, as you said, we have been in a data desert? They are really relying on what we had before the government shutdown, second-tier data, and how do you say that you are data dependent when at the moment it is still quite foggy?
Right now, this is the last big week of the year. Really, it feels like that.
Well, then we have jobs.
We have the jobs report. Okay, trickling out on December 16th. We do have a pretty big week of data, of earnings. Tomorrow we get JOLTS data for both September and October, or October and November, I should say, coming out. It gives a sense leading into the Fed rate decision. We get the employment cost index ahead of that rate decision. Then Oracle earnings, Powell's press conference that will give us an indication potentially of where the dominant strain is on the committee. And then jobless claims on Thursday. We also get Broadcom earnings and a
issues that we're dealing with right now.
Part of RFK Jr.'s legacy or what he's building out.
I guess we'll see how this all plays out. Sam Fazeli, thanks so much for joining us. Sam Fazeli, he's a director of research for global industries. I have no idea what that title means. I know he is the senior pharmaceuticals analyst. Yeah, it was much more straightforward when I was involved.
Well, he is important, so.
Oh, he's very important, I know. But he's at Bloomberg Intelligence. The most important thing is he's one of the top healthcare voices in global Wall Street, so we appreciate getting a few minutes of his time. He's based there in London, ostensibly. It's debatable. S&P 500 off 22 points, the Dow off 180, and the NASDAQ off 46 points. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning. This is the second hour of Bloomberg Intelligence on Bloomberg Radio and streaming live on YouTube with Paul Sweeney and Scarlett Fu. We've got a packed show coming up for you. Anwar Agrana, Bloomberg Intelligence technology analyst, will be joining us to talk about IBM's latest acquisition. It is M&A Monday, and IBM is buying Confluent for $11 billion, including debt, to expand in AI services. Then we've got Michael McKee to give us a look ahead on the Federal Reserve meeting on Wednesday. It begins Tuesday. The decision comes out on Wednesday. This is the last Fed meeting of the year. Marianne Bartels, Chief Investment Strategist at Sanctuary Wealth, will be joining us next to discuss her market outlook and give us her sense of where things are headed for 2026. And Chris Palmieri will be speaking with us to give us the very latest on what's going on in Netflix versus Paramount Skydance for Warner Brothers, whether we're talking about part of it or the whole thing.
Yeah, I don't know. And Chris has covered the media industry for decades, so he's a good guy to have.
And he's our voice from LA, so we want to hear what everyone in the industry is thinking as well. But first, let's go now and get our Bloomberg Business Flash right now. And for that, we go to Alexis Christoforous.
Thanks, Scarlett and Paul. We've been talking about it all morning. The plot thickens in the bid for Warner Brothers Discovery. Paramount Skydance taking its bid for the media giant directly to shareholders with an offer of $30 a share in cash. Of course, this comes just days after Warner Brothers Discovery agreed to a deal with Netflix worth $27.75 in cash and stock. Of course, Paramount's bid is for the entire Warner Brothers. Netflix only interested in the Hollywood studios and streaming business. Paramount CEO David Ellison on CNBC this morning.
If this deal is allowed to come to pass, it is anti-competitive, and it is a horrible deal for Hollywood. And as someone who spent the last 15 years of my life producing movies and television shows, this is an industry that I love. This is an existential moment for our business, and we believe that what we are offering is better for Hollywood, it's better for the customers, and it's pro-competitive.
Okay. Ellison, they were, of course, talking about that possible hookup between Netflix and Warner Brothers. President Trump raised potential antitrust concerns around Netflix's planned acquisition, noting that the market share of the combined entity may pose problems. On Wall Street, we've got some red arrows with the Dow now off 229 points, the S&P 500 down 28. We've got the NASDAQ Composite down 70. Yields are higher with the 10-year at 4.18%, 2-year at 3.60%. Gold down about 0.5%. Now at $41.80 the ounce, and Bitcoin about flat, just under $90,000. That's your Bloomberg Business Flash. I'm Alexis Christoforous. Back to Paul and Scarlett.
All right, Alexis Christoforous, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Again, as Alexis is reporting, he's got some red on the screen here. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Nora Melinda. Nora, what are you looking at?
Well, we've been talking about this all morning. I've got my eyes on Paramount Skydance, says ticker PSKY. Of course, we're also looking at Netflix, Warner Brothers Discovery. This is all about the war that we've been seeing in terms of both Paramount Skydance and Netflix, both being some of the top companies vying for Warner Brothers Discovery. We saw Paramount Skydance launched a hostile takeover bid for Warner Brothers Discovery at $30 a share in cash. This, of course, would value value of Warner Brothers at $108.4 billion, including debt. So we really are seeing a back and forth, a tug and pull here. Shares of Netflix down about 4%. This, of course, after it's been hit with several downgrades as it's really been tussling for this company. Both Pivotal and Rosenblatt both downgraded the company in terms of just reflecting the implications that could happen in the event that they were to proceed with this deal here.
All right, let's stick with the M&A theme because IBM is also on your list.
Yes, IBM's on my list. We're looking at shares up just about 0.8% right now. It is buying Confluent for about $9.3 billion in cash. This would mark its latest takeover yet, one of its largest takeovers yet, and a major bet, particularly on the enterprise software that AI tools really desperately need here. We're seeing shares of Confluent, that's ticker CFLT, roaring. They're up 28% right now as we speak. Earlier up as much for their biggest gain since 2024, February 2024. So you really are seeing the street really taking a liking to this, clearly.
Yeah, absolutely. So it's a nice move for, I think, strategically. We'll talk to Anurag Rana coming up in just a moment. He's the analyst that covers IBM for Bloomberg Intelligence. Carvana,
ticker CVNA. We're looking at shares up about 9% right now. This is after news that it'll be joining the S&P 500 index starting December 22nd. Wow. Bank of America did raise its price target on this company. Of course, really talking about the announcement here of it joining the S&P 500. We're looking at shares of that company up about 115%. For investors so far this year.
But go look at that chart. GP on the Bloomberg terminal, and then go max for the time frame. This thing is an absolute roller coaster over the last 8 years. Fortunes have been made and lost on this stock alone.
All over the place.
Amazing.
You always need the long view for the stock because that tells the story. All right, Nora Melinda, thank you so much. Nora Melinda is Bloomberg Television market correspondent with our Stocks on the Move. And for more conversations like this, subscribe to our Stock Movers reports. You can listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Nora had mentioned IBM as one of her movers. And of course, we want to dig into that deal a little bit more. IBM buying Confluent for $9.3 billion in cash or $11 billion if you include debt. Anurag Rana is Bloomberg Intelligence's technology analyst, and he joins us now. So, Anurag, what can you tell us about how this fits in with IBM's ambitions? In particular, its AI ambitions, which it's really been repositioning its business around.
Acquiring software companies.
I think maybe the mute button is on.
The mute button is on. He's a
technology
analyst. I don't think so. No, I.
There we go. Oh, there we go. It was a problem on our end. Our apologies.
Okay. No. So what I was saying was, IBM's done a very good job since the acquisition of Red Hat. Not only did they pivot and move towards software, which is a much higher margin business, they actually have margin improvement because the gross margin of those businesses is very high. Since then, they have bought a number of companies, HashiCorp, Apptio, and now Confluent. The big thing what we want to think about over here is enterprises do not always go with either AWS or Microsoft. They do, look at open source as a way of building their infrastructure. Confluent specializes in open source streaming data platform, which is when you are looking at real-time data, whether it is, something that comes from a telemetric device or even transactions that are happening at a retailer or a bank, you can ingest that data directly into your system and then make sense out of it. Now, that's going to be helpful as enterprises infuse more AI into their applications. So strategically, smart move, financially also a smart move.
Red headline crossing the Bloomberg terminal, the BLS to not publish October PPI data.
Which I believe makes sense given that, if I recall correctly, the BLS already just told us that it's not publishing October jobs or CPI data either.
Right.
So
that's kind of what we heard from a lot of economists. We'll talk to Mike McKee about that.
Yes, absolutely.
Yeah, that's coming up. All right, IBM, this is, as a kid, IBM was technology. That was the epitome of technology. Then the internet came along and they kind of missed it, so you didn't think about them a whole lot. Now, if you put up a stock chart, over the last 5 years, the S&P has compounded at about 15% per year. IBM over that time frame, 26% per year. Anurag, what is the turnaround of this aircraft carrier over the last 5 years?
No, as I said, I think it is the acquisition of Red Hat. I think the CEO has done a very good job of blending that particular, you could say, operations within their services platform. Because when you think about the IBM prior to that, it was very services heavy. That's a business that has 40-50% gross margin, not as profitable as software businesses. By being open, by going out and buying software businesses, their financial profile has changed, their cash flow has changed, and I think it's more stable in nature. They're still not at a point that their sales growth is going to be in double digits, but they're inching towards that target, and it may be 2 to 3 years before they get there.
So, Anurag, what's interesting about this particular acquisition is IBM is definitely making inroads or greater inroads into AI, but this is not a data center-driven acquisition. What do you think that means in terms of the next stage of M&A that we're going to hear from the tech industry when it comes to taking advantage of opportunities in AI, but not necessarily buying AI data centers?
You see, everybody has their own strategy, what they are focusing on. IBM, luckily, and it's good for them that they don't want to be in that, a capital-intensive, heavy data center business, because this is a company that generates, let's say, 14-15 billion in free cash flow. They can't go out and buy another, expand into a data center space where the capital investments is multiples of that. They are doing the smart thing of buying software companies that are not capital intensive heavy. When you are going out and creating a new application, the raw material, you need the raw materials to create or embed that, and that's where they are focused on. And I think for what they do, it's a very smart place to be in.
Anurag, thanks so much. Appreciate it. As always, Anurag Rana, he's our senior technology analyst, really drives our global technology coverage along there with Mandeep Singh, two of the best out there on the street. And of course, he's based where we need him, Chicago, Illinois. And the bustling tech hub there. Again, that red headline, BLS to not publish October PPI. I feel like I need to talk to an economist to see if that's important.
We have our own economist in the house.
Oh, okay, Michael McKee. He's our economist. He's in-house. He's in our studio here. This shouldn't be a surprise, should it, Mike? Because we don't probably have
It's not a major surprise.
Okay.
There was some thought that because a lot of the PPI data comes from companies who submitted electronically, that they might be able to put out a version of PPI, but apparently they've decided that they don't have enough information or that it wouldn't be valuable enough to just do some certain areas. And they're not doing CPI for October, so we're just going to have a blank space in the future, which makes it really hard to make graphs. But we will get a November PPI, and that's like the CPI going to come after the December Fed meeting, so neither one is going to particularly help.
Does the fact that we're not getting October CPI or PPI, consumer inflation or wholesale inflation data, put into question the quality of the November data at all?
Well, it does, because you don't have a reference point, and probably what they will do is extrapolate from the September numbers to give you a reference point to see how much prices have changed. Not having a PPI or a CPI for October does mean that there are going to be questions about the PCE report that comes for the month of October, because there's not going to be any data for it. So, because much of the data comes from those two reports.
And the PCE is what the Fed watches.
Yes,
that's the preferred inflation gauge.
Yeah. All right, Wednesday, you going down to D.C.?
I'm going down to D.C.
Flying.
You never train it, do you?
No,
well, I do.
I'm working on this.
The last couple times I have trained,
okay,
because the weather was bad and there was a question about.
So the fact that you fly, you give up all optionality to complain about the flying down to D.C.
Oh, I agree.
Okay.
I mean, it's like, I'm putting the gun to my own head.
I can't think it doesn't want to experience Penn Station in New York City.
Moynihan Station is very nice, but it's not. It's the flying is. When everything works, it's faster.
It's old dog habits, things like that.
Well, you know what? Mike does a lot of hits for BTV, so he needs to be in the office till pretty late, and then he's got to make his way over.
Okay.
So it makes sense.
True.
What do you expect here this week, Mike, from the Fed, given the timing of Fed Chairman Chowell?
It's going to be very, very interesting, because the Fed is more divided than we've seen them in years. It's not the most divided in history, and the division isn't that great in that we're talking about hold or cut by 25 basis points. Never mind Stephen Myron. But there are strong feelings on both sides, and that's because the Fed's dual mandates are going in opposite directions. So which one do you think is the biggest danger? And that's what the divide comes down to. Now, it appears from the way things have been set up that the chairman thinks that the labor market is still the biggest concern, and he is trying to corral the votes to get another cut to help the labor market. What we might see is then the Fed announce it's going to basically take a pause in January and wait and see how things go, sort of a sop to those who believe that the Fed might be going too far. But we're also going to get the dot plot, and we're going to get the summary of economic projections, and both of those will have some fascinating information. The dot plot will be telling us what they think of for the number of cuts next year, and they had priced only 1 in. Now where do they go? The markets are pricing in 3, and so what's the guidance going forward that you pull out of the dot plot? That's going to be very interesting. And the summary of economic projections, where do they think unemployment is going? If they think unemployment is getting worse and could get much worse very quickly, how high do they think it'll go and at what point? So a lot of interesting questions that we'll be getting on the sidelines of the actual decision itself.
Right, which makes the news conference all the more fascinating as well. The body language, the tone that Jay Powell takes when he answers questions. So it sounds like we're going to get a cut because that's what the market is pricing in. And from what you were suggesting, maybe a hawkish cut, meaning cut and then pause for in 2026. When it comes to that summary of economic projections, how much credibility does that have, given that we're not getting October data, as we mentioned, we're not getting October PCE, and we know there's going to be a leadership change after Jay Powell's chair term ends in May?
Yeah, you can't. I wouldn't even bother looking at the long run beyond 2026 numbers that they put out, because those will change, and they're never accurate anyway. I mean, they're just taking a stab in the dark at a lot of those
forecasts. It's like a thought
forecasts.
exercise.
Yeah, but you have to look at the SEP for what it is. It's 19 different projections, and then we pull out a midpoint and say that's the Fed's view, and it's not really the Fed's view. And it shows when they're divided like this. If we get everybody agreeing that we're going to get 5% unemployment by June, then you've got something to worry about there. But it's probably going to be distributed across a curve, and it's not going to tell us a whole lot other than the general direction of where they think things are going. And because they are divided, we will probably see some differences among them in that.
So it's still a fair assumption that Chairman Jay Powell will leave the Fed when he gives up his chairmanship?
That's the open question. Historically, they have done that. I mean, there's only been 1 or 2 in those situations who've actually left in that way. But Powell's term is going to be up as chair. The question is then, is Powell's he can stay for 2 more years as a governor, and that will depend primarily, what we've been told, is on who the president appoints to the seat and whether Powell thinks that it threatens the Fed's institutional independence. He doesn't want to stay, but he would stay to protect the Fed.
Out of duty.
And I cannot tell you, I know the next follow-on question is, well, what if it's Kevin Hassett? I don't know what the chairman thinks of Kevin Hassett and what that might mean. But it is leverage. It has been leverage for Powell against Trump in these situations. So I might stay on, so don't go too crazy.
Right.
And so that's going to be one of the interesting decisions that will be made.
Speaking of Kevin Hassett, do we have a sense of when President Trump is going to announce his pick for the next Fed chair?
2 weeks. I mean, that's what the answer always is with President Trump, because Scott Bessent said he would be doing it between Thanksgiving and Christmas, and the president now says he's going to do it in the beginning of the new year. Nobody knows. The president said he knows who he's going to pick, and then he suggested he doesn't have that choice identified. So we just have to wait.
Ever the showman. All right, Mike McKee, thank you so much. Michael McKee is Bloomberg's international economics and policy correspondent on the look ahead for the Fed. Their 2-day meeting begins tomorrow, and it concludes with the 2 p.m. announcement on Wednesday. We've got you all covered here on Bloomberg Intelligence, right here on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
11:21 on Wall Street. I'm Alexis Christoforous, and this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. Get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free. Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Stocks are pulling back here as investors await the Federal Reserve's last meeting of the year happening on Wednesday. Traders have grown increasingly hopeful over the recent weeks that the Fed will lower rates for the third time this year. The Dow Industrials down 150 points at 47,806. In the broader market, the S&P 500 down 20. We've got the NASDAQ giving back about 38, but the Russell 2000 inching up now about 6 points. Kicking off a new trading week with another big deal. IBM is buying Confluent for about $11 billion. This includes debt, and it marks one of IBM's largest takeovers yet, and a major bet on enterprise software that artificial intelligence tools need. And shares of Marvell Technology getting bruised today on a disputed report that Microsoft is in talks to move its custom chip business over to Broadcom. Wall Street reacting swiftly here. An analyst at Benchmark downgraded Marvell today to hold from buy and remove the firm's price target on the stock. Once again, stocks lower across the board with the Dow off about 150 points. That's your Bloomberg Business Flash. I'm Alexis Christoforous. Now back to Bloomberg Intelligence with Scarlett and Paul.
All right, Alexis, thank you so much. We appreciate that. Alexis Christoforous giving us the lowdown on the markets here. Again, we got a little bit of a sell-off today, but obviously when you look at the year-to-date, really solid returns across equities, bonds, across the board there. Marianne Bartel joins us. She's Chief Investment Strategist for Sanctuary Wealth. Marianne, given the positive returns we've had in stocks and bonds and a lot of the commodities here, what's your lay of the land for 2026?
So we're calling it the year of the reset, but we want investors to remain fearless. We don't see the end of the secular bull market. We still think the S&P can hit 10,000 and 13,000 by the end of the decade, but we think the returns next year will have some volatility. We are looking for a year-end target of 7,500, but we don't think it's a straight line. We think it's going to be a choppy year next year. We still think that, technology and tech-related remain the leadership, but they may need to correct in 2026.
So when you say be fearless, are you talking about equities specifically, or does that extend to other asset classes, fixed income, for instance, or even, dare I say, crypto?
Well, we like all asset classes. We do think that interest rates are going to trend down. So we do think fixed income will have a return. We still want to invest outside of the United States. We still think that developed and emerging markets are in a secular bull market. I think this is the first time in my career I've said all equities around the world were in a secular bull market. But we want investors to dollar cost average over time. And we remain bulls on crypto. But again, you have to expect a lot of volatility. Bitcoin has the halving in 2026, meaning the miners get paid less Bitcoin. Historically, during the halving, Bitcoin goes down 80%. Now, we do think that part of the correction that we've seen so far in Bitcoin is front-running in anticipation of that correction. So maybe we don't go down as much, but we do think if the equity markets have volatility, the crypto market is going to have volatility as well.
In terms of leadership in the equity markets here, for the longest time, it's been technology. It's more recently than the last couple of 3 years, narrowed even more so to, AI-related stocks here. Is that theme still hold for 2026, do you think?
Yeah, well, you may not have the same performance, but we still believe that semiconductors are the leadership of this whole cycle. And we do believe that AI will remain the drivers. Because when we look around at the value sector, the only sector we really strongly like are financials. And that's not going to be enough to hold leadership. Because oil prices, we don't expect to go up very much. It's going to be hard for energy to take over. We've had a great rally in healthcare, but I don't see pharmaceuticals as strong leadership. However, we do think biotech will remain strong within healthcare. So, although, value may have some good performance, we really think longer term it's going to be the growth cycle with tech as the leader.
Okay, so tech is still the underpinnings of this market. What is the biggest risk, Marianne, to your views? To be aggressive, to be fearless with your investment goals, what could disrupt everything?
Well, we're still concerned about inflation. We know the Fed is more concerned about the labor market. I'm not as concerned about the labor market as I am inflation. Especially food. I know the Fed takes out, food and energy, but food prices have remained stubbornly high. When we look at ISM manufacturing and services, the prices paid for both of them have had a sharp rally higher. So if we get a hiccup in 2026, part of it could be because the inflation data is not as favorable as the Fed would like.
Earnings, Marianne, they've been pretty darn good across the S&P 500 this year. Are they strong enough into 2026 to support this market?
Yeah, I still think earnings can, be double digit, but can they continue to beat expectations? That's what I'm concerned about. Earnings can go up, but can they continue the same strength? I'm concerned that maybe we don't. But again, I consider that a reset. So I think earnings are strong enough to hold the market so, we can hit 7,500, my year-end target, but maybe not beat expectations where we're up 20%. I think now we understand AI. You do have all the CapEx, and we are seeing a return on investment. We're seeing ROEs in technology remain very high. For tech, it's 30% versus the market at 20%. But maybe this rate of expectations of beating maybe slows down in 2026.
All right, Marianne, really appreciate your joining us and taking the time to share your outlook for 2026. Marianne Bartels is Chief Investment Strategist at Sanctuary Wealth, joining us from New York. And Paul, there's some new headlines on Paramount Skydance. I feel like this is going to be a theme for the next year and a half, 2 years. Paramount Skydance, of course, coming out with a hostile bid for Warner Brothers Discovery, the entire company, of $30 a share. The company now saying Warner Brothers' tender offer to be open for 20 days, and Warner Brothers has 10 days to respond to this offer. This is according to executives speaking on a conference call.
Okay, so we'll keep on top of that as the headlines cross here. But we saw this is a credible bidder, and they're a committed bidder. You have two committed and credible bidders here in Netflix and Paramount Skydance. So the big winner, I guess, will be shareholders of Warner Brothers Discovery, and that's kind of how it should play out. Some changes over there at Berkshire Hathaway, some leadership changes, including the retirement of its longtime chief financial officer, Mark Hamburg, to see what this means for Berkshire and for the company. Matthew Palazzola joins us here, senior analyst covering the insurance biz for Bloomberg Intelligence. He joins us live here in our Bloomberg Interactive Broker studio. Talk to us about some of the turnover we're seeing here at Berkshire Hathaway, and it's particularly of note as we've had Warren Buffett step back more noticeably just recently.
Yeah, I had a busy day in Omaha this morning. So the big news, I think the bigger news of the announcements today was Todd Combs, the one of the investment deputies and CEO of Geico, is moving to JP Morgan. So I don't know if that was a planned thing or what, but that seems like kind of an unwelcome shakeup in light of Buffett leaving at the end of the year. I would say his investment track record at Berkshire, not very transparent. They don't really tell you what the investment managers are doing aside from Buffett. So I think many of the big moves were made by Buffett anyway. And I actually do think that Geico had some issues with loss costs going up. So the cost of car accidents was going up a lot. Combs's reaction was to cut a lot of costs and shed a lot of policies, which is actually the opposite of what I thought Berkshire would do. I thought they'd kind of ride it out and maybe gain some market share. And I do think Progressive handled that environment a little bit better. So I think it will be a manageable loss, but probably the biggest news of today.
Yeah, Todd Combs, we should mention, was already a JP Morgan board member. So he had a relationship with the bank, and he's going to be advising Jamie Dimon and other senior JP Morgan leaders on strategic issues. Let's talk a little bit about the changes that involve a new general counsel position over at Berkshire as well. So this is a brand new position that they're creating versus, I guess, in the past they just relied on paid outside help?
Outsourced it, I believe, to a firm that was associated with Charlie Munger. Not a huge deal, I don't think. I mean, I think it makes sense for them to have their own GC. Why not? I mean, Berkshire Hathaway, I think really the outsourcing was in part due to it being, related to the company anyway. So I think it's important. Obviously, they're going to face tons of legal issues across all of their companies. And I think, probably each one has their own individual, but it would be, probably makes a lot of sense to have this all roll up to someone at the top.
What's the call? What's the sentiment out there on the street for Berkshire Hathaway? I see the stock's up about 8 or 9% year to date here, but what's kind of the sentiment around this stock?
Yeah, I mean, it's tough because you can look at it and say, out of their core competencies, are they going to do any of that any better now, right? You've got Buffett going away. You've got Ajit Jain, who is in charge of the insurance operations. He's getting old. He's been selling a lot of stocks, so maybe he leaves. And he was kind of the magic sauce behind a lot of the insurance business. So, you've kind of got these two titans of the company perhaps being gone and saying, well, how could they be as good in investing or as good at the insurance business? And it would be tough to say that they would be. But when you have Abel coming in, and today I thought was a positive sign of some shakeup, and maybe his strength is he's not Buffett. Well, his weakness is he's not Buffett also, right? But his strength is he doesn't have to do things the same way, and perhaps he takes a different look at capital allocation. So I think the street's hopeful that we see some more capital allocation come out of Berkshire.
Does Berkshire become a different kind of company under Greg Abel? I mean, how much is he going to keep to Warren Buffett's strategy versus just change things up completely?
I don't think, Scarlett, I don't think it's going to be a huge wholesale change. But I think he will. He walks a fine line where he needs to put some kind of stamp on it, but also kind of stay within the ethos of the company. He'll have far less room with the board to kind of Buffett could essentially do what he wanted. I think any bigger deals, Abel will have to face more board scrutiny. By the way, something else they announced today was he's in charge of all of the non-insurance operations, but he's actually ceding control of some of those. So the person will report back up to him, but he's not going to be directly involved in some of the other businesses, which I think is smart and probably leaves him
delegating, right?
Yeah,
a lot more delegation.
Yeah, makes sense.
Did they disclose how much they're paying this new dude to replace Warren Buffett?
His pay is disclosed. I don't have it off the top of my head.
All right, because I just wonder, you're replacing Warren Buffett. I mean,
they're all paid well. They're not, it's not insane pay packages. It's all cash. They don't pay in stock. They don't pay themselves, at all. So all the big executives get paid in cash. Huh. And I mean, Greg Abel also owned a large chunk of Berkshire Hathaway Energy, which Berkshire bought. So he's generationally wealthy beyond all belief.
Plus, it's Omaha. I think your dollar goes farther in Omaha.
Cost of living is probably a little bit lower than here.
That's awesome. Good for him. All right. Well, we'll keep on top of this. See if there's any changes at Berkshire Hathaway now that Mr. Buffett is stepping back in a bigger way. Matthew Palazzola, senior analyst who covers the property and casualty insurance companies, Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker studio. Still a little bit of red on the screen here. The S&P is down 22 points. It's about 1/3%. The NASDAQ off about 5. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
11:40 on Wall Street. I'm Alexis Christoforous, and we've been talking about it all morning long. Paramount Skydance's hostile takeover bid for Warner Brothers Discovery at $30 a share in cash. This values Warner Brothers at more than $108 billion. That includes debt. And of course, it compares with Netflix's offer of $27.75 in cash and stock, with Paramount's offer being for the entirety of Warner Brothers, Netflix offer being for the Hollywood studios and streaming business. Paramount CEO David Ellison telling CNBC this morning his company's offer provides a superior value and is more likely to be approved by regulators.
What we're creating by putting these two companies together is a real competitor to Netflix, a real competitor to Amazon, a real competitor to Disney, not something that is so anti-competitive. There will be no more competition in Hollywood if this deal is allowed to come to pass.
President Trump over the weekend cast doubt on a Netflix-Warner Brothers hookup, saying it could pose antitrust concerns. Also today, Axios reporting the president's son-in-law, Jared Kushner's Affinity Partners, is part of Paramount's hostile bid for the media and entertainment giant. All right, turning our focus to Wall Street now. Stocks are under pressure ahead of the final Federal Reserve meeting of the year on Wednesday, where we are expecting the third interest rate cut of the year. The Dow Jones Industrial Average down 171 points, the S&P 500 off 22, NASDAQ down 39, and we've got oil sliding today. West Texas Intermediate down about 1.5% to 59.21 the barrel. Brent crude off about 1.5% at 62.83 the barrel. Once again, stocks lower across the board. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back over to Scarlett and Paul.
All right, thank you so much, Alexis Christoforous, with our Bloomberg Business Flash. I feel like, you wait 5 more minutes and there's going to be a new headline here on Paramount Skydance versus Netflix for Warner Brothers, but we know that this will be a deal that takes a long time to resolve.
Yeah, exactly right. And I know the Paramount executives are speaking on a conference call right now to investors presenting their case for their acquisition of Warner Brothers Discovery. So we'll see how it plays out. But I mean, again, there are differences. The Paramount deal is all cash, and it is for the entire company. So those two things make it much, much cleaner than the Netflix one, which includes $27.75 in cash plus $4 per share in Netflix stock, which has historically been a great thing to own. But it's contingent upon the separation of the Warner Brothers separation of its cable networks,
which was the plan all along.
Planned all along, and they've already done a lot of work on it. And then, so the total value seems pretty darn similar. It's just probably going to come down to who has a cleaner path to approval. And you could do that math. We talked to Jen Rhee, and that math is pretty darn straightforward. But now we have the added uncertainty, which we historically have not had in M&A. This is becoming politicized.
Absolutely, because
so we'll see.
Paramount Skydance, controlled by David Ellison, son of Larry Ellison. The Ellisons have a very good relationship with President Trump, with the White House, and so they have made the argument, implicitly or explicitly, that this deal has the president's blessing, so therefore it will go through more easily. Whereas we know that there's a lot of concern here about Netflix and its bid for Warner Brothers Discovery assets, not even the entire company here. And it all depends on how you define the streaming market, whether it includes YouTube or not. So there's a lot here to get through. Let's bring in Chris Palmieri, Bloomberg News senior editor and entertainment team leader on this deal. Chris, just give us a sense of what people in LA are saying, because most of these businesses take place in LA, maybe not as much as they once did. And I'm curious to get a sense of how the industry is thinking about it.
Well, I can tell you, I was having dinner Saturday night at a Thai restaurant with some family, and my daughter's friend who's 17. She goes, "Netflix is buying Warner Brothers?" I mean, this is just one of those things that just is shocking to everybody, but particularly to people that work in Hollywood. It's been a really tough few years. We've seen, so much consolidation in the industry already, and job losses, and movies and TV shows being shot overseas, and strikes, and just the promise of another big merger like this is just, people are really unhappy and in shock.
Chris, is there a feeling, It seems like if Paramount were to acquire Warner Brothers Discovery, there would be more overlap, therefore more jobs at risk. Is that the correct way to think about it?
Yes, although, you know, both acquirers, and Paramount and Warner Brothers, are trying to downplay, you know, the job loss as part of it. Netflix did say they looked at $2 to $3 billion in annual savings, much of that basically in overhead, you know, redundant jobs. But they're each trying to make the case that their merger would be a little bit less worse, I guess you could say.
Just a quick note here. We have a correction to make. The Bureau of Labor Statistics will now publish the October and November PPI data together in January. I mean, the net effect is, at the end of the day, Paul, all this data will come out after the Fed's meeting this Wednesday.
Hey, Chris, Paramount owns the Paramount movie and television studio. Warner Brothers owns the Warner Brothers studio. Can you put those two things together there from a regulatory perspective?
Well, what they're doing is they both Paramount and Netflix have said they want to kind of maintain the creative executives as working separately at Warner Brothers. Warner Brothers has had a phenomenal TV business. One of the issues for Netflix is that historically Netflix has produced just stuff for Netflix, and but they have said they will continue the policy of Warner Brothers making shows for other people. And they do, have had a huge track record of that historically. So that's one of the things. Paramount also has said it would keep the Warner Brothers creative team together.
All right, I'm not sure I believe that. I would argue, just from my own perspective, Chris, I'm wondering what the folks in LA are thinking. This is kind of more of a must-have for Paramount Skydance versus Netflix. It's a nice-to-have. Do you think that's accurate?
Yeah, I think if you just look at the public comments from the two Netflix co-CEOs, Greg Peters was initially kind of dismissive of media mergers and was really throwing cold water on this idea. So I think that the idea that Netflix is that all in is definitely a legitimate one. Paramount, I think Michael Moffat-Nathanson put out something over the weekend saying, and I think this is true, Netflix has been the winner historically, and so if you want to find a best home for your, outstanding intellectual property, Batman, Harry Potter, Game of Thrones, on and on, they're the ones that are going to get it all around the globe and invested in all that. Putting two struggling companies together is, it raises more issues. Everyone always sort of seems to suggest that in almost any industry, but it doesn't always translate into outperformance.
Chris, this deal, no matter who wins out, Netflix or Paramount Skydance, will take a while to resolve. There's going to be legal challenges. There's going to be antitrust regulators looking into it. What does that mean, that long lead time mean for Warner Brothers' ability to just do business and be the best performing studio it can be in the meantime?
It hurts it. I mean, David Zaslav put out a note last week, the CEO of Warner Brothers, saying everybody just focus on your work and listen to your business leader. This is gonna take a while. But you don't even have to look very far or very long to find out. If you remember, the challenges AT&T had when it bought Warner Brothers a few years ago. There was a lawsuit by the Justice Department, really extended time to close that deal. Many people believe that it held the company back in terms of, launching its own streaming service and investing in the business. I don't see Warner Brothers' core business helped by an extended regulatory review that really either bidder, Paramount or Netflix, would face.
Well, Warner Brothers has said, hey, we want to wrap this up stuff pretty quickly about who's going to actually buy it, talking about 10 days, 20 days. How do you think this is going to play out?
It's really interesting that Paramount didn't increase its offer from the last offer. They're basically taking their offer directly to shareholders. It's a complicated math, as you guys probably have discussed. $30 all cash from Paramount.
Yeah.
But with the Netflix deal, you get $27.75 in cash and Netflix stock, plus the spin-off of the cable TV channels at Warner Brothers, CNN, TBS, all those. So there's certainly a value to that. How much? Paramount is sort of suggesting $2 a share. I think Bloomberg Intelligence suggested $4 a share.
Right.
There's breakup fees involved.
Yep. All right, we'll stay on top of this story. I mean, you guys out there, you're in the LA, you live this stuff every day out there in the LA bureau. Chris Palmieri, Senior Editor, Entertainment Team Leader, Bloomberg News in LA.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. One area of the economy that is challenged with this administration is just the whole renewable fuel type of part of the economy, going to a greener energy sources. Those folks are really back on their heels given some of the policies of this administration. One of them is the renewable fuel business. Anna Davies joins us. She's head of renewable fuels research at BNEF, joining us here in the studio. How has the biofuel, first of all, tell me what biofuels are. Just give me some names, and then tell me how that business has changed under this new administration.
Sure. So when we say renewable fuels, we're mostly meaning biofuels at the moment. And these are things you might be familiar with, like ethanol and biodiesel that are mixed into your gas or diesel streams. There's some new ones coming as well. There's one called renewable diesel, which, unlike biodiesel, it's basically identical to fossil diesel, but just made from crops or waste feedstocks. So that means you can basically substitute it one for one into your diesel stream. And you don't have to worry about engine performance and things. And then also there's a bio version of jet fuel called sustainable aviation fuel.
All right, so I've heard of those. Now, my understanding is most of that, we do produce some of that stuff here in the U.S., but we also import a lot. So how's that whole world changing?
Yeah, so we produce a lot of it at home, and we're growing our production. Ethanol is the biggest, but there's a growing segment of these drop-in fuels that I mentioned, like jet fuel and renewable diesel. We produce a decent amount of that here in the US, and we're increasing the capacity to do so. There's a lot of old oil refineries actually in California and the Gulf Coast that they're converting to take in bio feedstocks rather than fossil fuel feedstocks. But we also import a lot of these fuels. Neste is a big producer in Singapore and Rotterdam, and a lot of that gets imported here for use in our markets.
So do we need imports, though? Because I'm just looking here, you know, I guess last year we imported over 800 million gallons of biodiesels. This year we're on track to import just 10% of that.
Yes.
Wow. Is that just tariffs?
This is policy.
Policy
Changes. The U.S., the main reason biofuels get off the ground anywhere is due to policy, because otherwise they wouldn't. The economics on their own don't work. Biofuels are more expensive than their fossil counterparts, so you usually need some policy to incentivize them. The U.S. has a main policy called the Renewable Fuel Standard, which obligates refiners to blend in certain amounts of biofuels into their refining streams. We also have tax incentives. And we've both of those have now been changed in the last year or so, which is really causing the market to whiplash. In the tax incentive side of things, there used to be a tax incentive called the Blender's Tax Credit, which was basically $1 per gallon for all biofuels in the US. And that's a pretty attractive offer. It ended in 2024, and it's been replaced by the Clean Fuel Producers Tax Credit, or the 45Z. Now that tax credit is a sliding scale based on your emissions. And most biofuels aren't zero emissions, so they still have some, so they don't get the full dollar value anymore. And now only domestically produced fuels are eligible for that tax credit. So imports no longer get it. And then on top of that, the volume obligation is currently being set by the Environmental Protection Agency. That's the agency that oversees this program. And they have proposed a volume for 2026 and 27 that's quite aggressive, that's quite strong. It would basically require all of the US capacity to be operational in producing fuels, and likely also either imported fuels or feedstocks, because we need to actually meet that, be able to produce that somehow.
Well, this administration is definitely pro-farmer, like all that kind of stuff. Some of the feedstocks you would put into renewable energy. So that's a good thing, right?
It is a good thing. That is, I think, one of the reasons for a lot of these changes is to promote domestic soybean oils use in biofuels. The challenge is that only works if you have access to US soybeans. So for instance, a lot of the biodiesel production, those conventional biodiesel facilities, they're located in the Midwest, right near soybean farms, right near crushing capacity. So it's relatively easy for them to use soybean oil. But a lot of these newer facilities producing renewable diesel or jet fuel are located in California or the Gulf Coast, and there it's much harder. You'd have to bring it in by rail, and there's not much capacity there. And it's a lot easier to bring a shipment full of waste oil from China, say, than to even get access to the soybeans. So it's unclear if those facilities will be able to switch.
So I was at a Bloomberg Philanthropies sponsored conference at the Plaza Hotel a couple of months ago, talking about this transformation, evolution into cleaner energy. And the guests we had on, non-US guests, international guests, their basic message was, hey, we, being the rest of the world, we're moving forward with this stuff. We're not slowing down or stopping. US, if you want to come along, that's great. If you don't, that's great too. Is that kind of how the world's thinking about it, at least in the short term?
It is. I think everybody is taken a bit aback by it, because the US has generally had the most attractive incentives. You can stack all these credits and you get an attractive number that can kind of bridge that cost gap. But there is a lot of policy momentum in the rest of the world moving forward rather than back. And so you can see a lot of the shift happening. For instance, Europe, the EU, and the UK both instituted a sustainable aviation fuel mandate this year. So we anticipate a lot of those volumes from Singapore might flow that way. Singapore itself has a new SAF mandate, so they might even keep the volumes at home. And then China's an interesting one to watch, because they're building a lot of new capacity to produce these fuels. So it's unclear whether their feedstocks will go elsewhere or if they'll keep a lot of it domestically for increasing their own production.
All right. A lot of stuff here, a lot of global policy issues, and we'll have to see kind of where the U.S. plays over in the next coming years. Anna Davies, Head of Renewable Fuels Research at BNEF, joining us live here in our Bloomberg Interactive Broker Studio. Appreciate that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just moments. S&P 500 down 25 points. That's 0.3%. The Dow's off 180 points. That's 0.4%. And the NASDAQ down 52 points, 0.2%. 10-year Treasury yields a little bit higher here, 4.17%. This is good.
This is CBS News on the Hour, sponsored by Steel.
I'm Steve Kathan. Farmers who cried foul over the Trump administration trade policies could be in for some relief. CBS's Stacey Lynn.
The $12 billion assistance program will include a one-time payment to crop farmers. It comes amid mounting frustration over the financial difficulties farmers are experiencing due to low crop prices and the president's tariffs.
New numbers indicate China's exports to the U.S. plummeted last month despite a tentative trade deal reached in October. President Trump has fired back after Georgia Republican Marjorie Taylor Greene's 60 Minutes interview. CBS's Nicole Killian.
A short time ago, we did hear from the president responding to this interview, continuing to call Congresswoman Greene, quote, Marjorie Trader Brown, because he says Greene turns brown under stress. He says that Congresswoman Greene was jilted by the president, and that basically, you know, that is why she kind of said what she said in this interview. But clearly, the president very critical of this interview, still very critical of Congresswoman Greene. So obviously there is no healing in their rift as of yet.
There's word President Trump will sign an executive order calling on the federal government to set artificial intelligence policy rather than individual states. CBS News tech contributor Ian Scher.
Lawmakers on Capitol Hill have been unsuccessfully trying to set similar rules, effectively banning states from setting their own AI laws. And now states like California are setting their own rules around AI use, including in political advertising.
Well, CBS's Jim Krasula tells us the nation airlines have been put on notice.
The FAA has warned airlines that they could face fines up to $75,000 for each flight over the mandated reductions, which varied between 3% and 6%. The 43-day federal government shutdown that began October 1st led to long delays as unpaid air traffic controllers missed work.
A powerful 7.6 magnitude earthquake struck off northern Japan, triggering a tsunami of around 2 feet. Several people injured. Warnings of possibly higher surges were issued. Reporter Matt Wolf now has more on Golden Globe nominations.
Not one thing, it's another.
Paul Thomas Anderson's dark comedy action thriller with Leonardo DiCaprio, one battle after another, rolling into award season, leading the Golden Globe nominations, 9 total, including Best Picture.
I ain't ever seen no demon.
And the supernatural period piece Sinners landing 7 nods, Best Director for Ryan Coogler.
Thank you, Dr. Bacardi.
And checking Wall Street, the Dow is down 200 points. This is CBS News. They're getting more mileage out of a drunken raccoon in Virginia.
A Hanover, Virginia liquor store that was trashed by a tipsy raccoon is unveiling 3 new cocktails inspired by the episode. The lineup includes Rye Rascal Sour, Trashed Panda Old Fashioned, and Midnight Gin Fizz. All are featured on the Virginia ABC website, along with edited photos of the animal holding each drink. The shops also released full surveillance footage of the raccoon poking around the store before it broke open more than a dozen bottles of booze and threw them into the aisles. The raccoon was released back into the wild after sobering up at a local animal shelter. Deborah Rodriguez, CBS News.
A preschooler from India has become the youngest chess player to earn an official rating from the sport's international governing body. Sarwagya Singh Kushwaha is 3 years old and just 7 months into his third year. Steve Kathan, CBS.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
As goes AI, so goes the nation. Welcome to the Monday edition as President Trump seeks to nationalize AI regulations with an executive order to be signed today. Forget the states. We'll have the latest straight ahead from Washington. Did the White House thumb the scale on the Warner Brothers deal? We'll get into all of this with Bloomberg's Michael Shepard here in our D.C. bureau. The Senate set to vote this week on a Democratic health care proposal we've been waiting on since the government shutdown, but we're still waiting to see what it is. We'll update the whole situation in the debate with Nathan Dean at Bloomberg Intelligence. And as Colin Allred drops out of the Texas Senate race, we could soon gain another. We'll have more with our political panel. And it's all after we look at Wall Street. Let's start right there, as always, with our look at the markets. Alexis Christoforous has that for us live from New York. Alexis, how's it going?
Well, Joe, we've got more twists and turns in that ongoing saga for Warner Brothers Discovery. Paramount Skydance is taking its bid for the media giant directly to shareholders with an offer of $30 a share in cash, just days after Warner Brothers Discovery agreed to a deal with Netflix worth $27.75 a share in cash and stock. Paramount's bid is for all of Warner Brothers. Netflix is only interested in the Hollywood studios and streaming business. Paramount CEO David Ellison telling CNBC this morning that the Netflix buyout is not in the best interest of consumers.
If this deal is allowed to come to pass, it is anti-competitive, and it is a horrible deal for Hollywood. And as someone who spent the last 15 years of my life producing movies and television shows, this is an industry that I love. This is an existential moment for our business, and we believe that what we are offering is better for Hollywood, it's better for the customers, and is pro-competitive.
President Trump raised potential antitrust concerns around the Netflix acquisition of Warner Brothers this weekend, noting that the market share of the combined entity may pose problems. We've got shares of Paramount Skydance now up more than 7.5%. Shares of Netflix down nearly 4%. Warner Brothers up about 4%. And on Wall Street, traders declining to place any big bets ahead of the final Federal Reserve meeting of the year on Wednesday, where we do expect the third interest rate cut of the year. The Dow Jones Industrial Average now down 220 points, near the worst level of the session. The S&P 500 down 27. We've got the NASDAQ off about 60. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Balance of Power and Joe Matthew.
All right, Alexis, great to have you aboard today, and thank you for being with us here on the Monday edition of Balance of Power here on Bloomberg Radio. Streaming live on YouTube, search Bloomberg Business News Live, unless you're watching us already on YouTube TV. Flip over to Bloomberg Originals if you want to meet us here in the studio. If you're in the car, it's Sirius XM Channel 121. We've got a lot to cover today. It's a news flow that just never stops. And in this case, a couple of the best stories made for Bloomberg here as we consider AI regulations at the White House and whatever is about to happen with the Warner Brothers deal. We're going to look at them both through the prism of the administration here and the role that President Trump is playing in both. And we can't underscore the role that he's playing in this AI regulation battle enough. It's one that was born on Capitol Hill. We've heard the likes of Ted Cruz talking about this, around this AI concept, and really put the administration's fortunes in it when they put out the AI action plan. Remember this? Here's the president.
Because of the genius and creativity of Silicon Valley, and it is incredible genius. Without question, the most brilliant place anywhere on earth. America is the country that started the AI race. And as President of the United States, I'm here today to declare that America is going to win it.
We recently brought you a conversation with Dean Ball, who helped to write the AI action plan. Then we went on to Genesis, and now today, one rule. You're going to hear that referenced a lot, just like the president did on Truth Social. Trump says he will approve an executive order this week establishing one rule on AI aimed at limiting state-level regulations on the technology. I know I hear Elizabeth Warren calling right now, and we're going to have this debate in Washington. So this is an important conversation for you to hear. We're going to get to the Warner Brothers deal as well with our good friend Michael Shepard. He's senior editor for technology and strategic industries, which brings him around both of these stories in the best way. Shep, it's good to see you. Thank you for joining as always. Let's start with the AI regulations. Just explain to us why it is important, because a lot of states are raising their hands to say, hold on, we need to have a say in this too.
Well, they're not just raising their hands, they're actually moving and acting. And I checked with the National Conference of State Legislatures, and they have already enacted at the state level 38 different states, more than 100 measures of some stripe this year so far. And one of the reasons states are so active is really in the spirit that space abhors a vacuum, Joe, is that the federal government has not enacted its own AI-specific rulemaking or law so far. Even 3+ years after the genesis of ChatGPT, and even after we've been talking about artificial intelligence for many years more than that, we still do not have a comprehensive set of federal regulations and rules to set the rules of the road. And I think part of that is just because it is so complex and it requires so much to kind of put it to one place. It's the energy piece. How do you regulate for access to energy? It's the consumer privacy piece. It is also copyright if you're a producer. And then there is also the doomer question on safety. We've all seen the Terminator movies. And, while we joke about it, that there is a concern that, the machines could somehow take control and override human commands and instructions. So there is that, and yet it is so much to get agreement on. And that is why we see on Capitol Hill such a divergence of views, and there really hasn't been a serious effort yet to try to put it all in one place.
So I think you just answered my question, but are the state regulations, which I know are varied, are they geared more toward the physical regulations of building data centers or the use cases of artificial intelligence in either business or consumer-facing roles?
It does focus a little bit more on the application of AI, and there is also the employment question. What is labor market impact of artificial intelligence? And we've even seen the governor of New York, Kathy Hochul, call for getting companies to disclose when they've cut jobs because of artificial intelligence adoption. We've even seen a proposal at the federal level from Senator Mark Warner looking for something like that. Now, whether that would actually get to the president's for signature, it's a really big road to travel. And we did see in the defense policy bill that was just unveiled last night, the effort to get an AI preemption provision included in it, the one that you referenced from Ted Cruz, that has been discussed. And it was even discussed earlier in the year as part of the One Big Beautiful Bill. It got struck from that. It was left out of this defense policy bill, too. So they are looking for yet another way to perhaps preempt state legislation. But it's unclear, Joe, whether they will actually offer any kind of an alternative. When the president says one rule, it's unclear what that actually will be.
Okay, well, that's really important. So it's one thing to limit states. It's another thing to draft that one rule. But as somebody who covers this every day and understands Washington, understands the urgency of this race, I want to ask you just to reflect on what the president wrote here. There can be no doubt about this, he says. AI will be destroyed in its infancy. 50 states, many of them bad actors involved in rules in the approval process. This is the line. I will be doing a one-rule executive order this week. You can't expect a company to get 50 approvals every time they want to do something. Is there truth to that?
Well, that is something we have been hearing from the tech industry. And Jensen Huang, the chief executive officer of NVIDIA, has really made that argument, but he is far from alone. We've seen leaders of OpenAI. We've heard from Mark Andreessen of Andreessen Horowitz. They have all been arguing, look, what they see as a patchwork of regulations is really potentially a risk for U.S. dominance in this technology. They see China as the top U.S. rival in this field, and China really does not have to cope with such a varied landscape of rules to try to keep up with. And we know that in California, they're trying again with new state-level regulations. But, Joe, it's not truly a one party versus the other question here, because we have seen many Republicans also express at least some desire for a level of control and oversight of this technology for privacy questions, for child safety concerns, and even for some of the doomerism that we just talked about too. They want to see some measure of guardrails and guidelines in place, and we're even hearing objections to this idea of preemption altogether from the likes of Florida Governor Ron DeSantis, from Arkansas Governor Sarah Huckabee Sanders, who had served in the prior Trump administration, and we're even hearing from Marjorie Taylor Greene arguing for states to have the leeway to do what they need to when it comes to regulating AI.
Interesting. Just a quick mention, a couple of important headlines. Adweek is reporting that Google's going to bring ads to Gemini next year in 2026, just something to put in your pocket. And we've been talking about the NDAA. You've referred to it a couple of times with regard to that rule. Marjorie Taylor Greene says she is a no. I want to ask you in our last couple of minutes here about this wild story surrounding Warner Brothers. It's also in your beat on the technological side, but you understand the politics behind this a lot. Paramount is going for it with a hostile bid now. Of course, this is going to compete with the Netflix bid, and the president had some interesting commentary at the Kennedy Center last evening. He told reporters Netflix is a great company. They have a very big market share. And when they have Warner Brothers, market share goes up a lot, so I don't know. He said that's going to be for some economists to tell, and in italics, I'll be involved in that decision too. We know he's talking to the Ellisons. We know Jared Kushner's putting up money for this Paramount deal. There's even 10-cent money in here. What the heck is going on?
Well, the 10-cent money has dropped from the
Paramount
proposal.
Okay.
Yes, when you look at their SEC
Is
filing,
the president thumbing the scale on this?
Well, it's an interesting question because when he talks about market share, he is referring to the streaming market because the one analysis of the Netflix acquisition of the assets of Warner Brothers that it wants to buy, which would be the movie studios and streaming businesses, and spinning off the cable networks and other legacy properties, that would give Netflix will not have all that much difference. What they say is, look, 75% of our customers already subscribe to HBO Max. So what is the difference in essence? But there's another way to look at this too. If you examine the Paramount proposal, they are also combining and concentrating power when it comes to movie studios and TV networks too.
So this is going to go on for the next year or more?
Year and a half.
So lawyers are about to make a lot of money.
Yes, they are.
Fascinating story. We'll stay in touch with Michael Shepard on this. Thank you, Shep, as always, covering our two top stories of the day here right off the bat on Balance of Power. I'm Joe Matthew in Washington. Glad you're with us here on the fastest show in politics. This is
12:21 on Wall Street. I'm Alexis Christoforous, and stocks are pulling back as investors await the Federal Reserve's last meeting of the year Wednesday. Traders have grown increasingly hopeful over recent weeks that the Fed will lower rates once again, which would be the third rate cut of the year. The Dow Jones Industrial Average down about 230 points now at 47,726. The S&P 500 is down 30, and we have the NASDAQ Composite down about 73 points. Russell 2000, though, in the green by just about 5 points. We're kicking off a new trading week with another big deal. IBM is buying Confluent for about $11 billion. That includes debt. It marks one of IBM's biggest takeovers yet and a major bet on enterprise software that artificial intelligence tools need. Shares of Confluent, by the way, up now 29%. IBM up about 1%. We've got shares of Marvell Technology on the downside on a disputed report that Microsoft's in talks to move its custom chip business over to Broadcom. Wall Street reacting swiftly here, an analyst at Benchmark downgrading Marvell to hold from buy and remove the firm's price target on the stock. We've got shares of Marvell Technology down now nearly 9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Balance of Power.
All right, Alexis, thanks so much. We'll have more on the markets with Alexis Christoforous live in New York coming up in about 20 minutes' time here on Balance of Power. Thanks for joining us on this Monday as we get a new week underway. Let's start pushing the rock with a lot that's going to happen before this week is over, including a promised vote on health care reform. We reminded you of this at the end of last week. It's going to be Thursday, according to John Thune in the Senate. Remember, that's why the government's open. That was the promise to Democrats to get everybody, or at least a couple people, on the same page to pass the continuing resolution, knowing that Obamacare subsidies expire at the end of this month. All right, so everybody's back on the same page here. Thursday, likely at least, the Democratic legislation that will extend tax credits for 3 years is what's going to hit the floor here. It is said to be dead on arrival. So the question becomes, well, what are Republicans? Will there be a Republican plan? And we don't really know how this is going to go this week. Speaker Johnson did say last week there'd be a Republican House plan offered at some point before this week is out. We talked about all of this with Lisa McClain, Republican from Michigan, who chairs the Republican conference in the House, right here on Balance of Power. Here's what she said.
The Democrats want just to subsidize the ACA credits. And the problem with that is if we do that, no one's premium comes down. All it does is line the pockets of big insurance companies. And what I might remind everybody is this is Obamacare. The healthcare crisis was started by the Democrats. So I am excited to hear that both sides agree that the Affordable Care Act is anything but affordable and that it needs revamping. And that's what we're doing.
Okay, but how remains the question. Enter Senators Bernie Moreno and Susan Collins. Yeah, Republicans. We're back on the Senate side here. They've got a new one-pager out showing their proposal to extend Obamacare subsidies for 2 years, and then you add the income caps and other reforms to get this through, would cap eligibility and eliminate zero premium plans by requiring a $25 minimum monthly payment. Income up to 400% of the poverty level. And you've heard some ideas like this if you listen to this program over the last couple of weeks. Is that the path to freedom? Let's find out with the help of Nathan Dean. Bloomberg Intelligence senior U.S. policy analyst is with us. And if you subscribe to the Balance of Power podcast, you've already got Nathan's Monday Dive. It's great to see you. Welcome, sir. Is this going to be the next bill to pass the House and Senate?
I don't think so. I mean, I think if you look at it from the Democratic perspective, it's Thursday's vote, 3-year extension or not.
That's the Democratic plan.
That's the Democratic plan.
Not going to pass.
It's not going to pass.
Okay.
But if you look at it from the Republican perspective, you have the Moreno bill that's come out. You have Speaker Johnson saying that they're going to have some type of plan come out. You have Senator Marshall just a few minutes ago even saying he's got a plan that's coming out. And so I'm not exactly sure what the Republican strategy here is other than trying to get something out there to see if it sticks. The problem is we've only got so many days until everybody goes home.
Isn't it a little late for this?
It's a little late for this. So I think the way this plays out is that Thursday Thursday, you're going to have the vote. It's going to fail. And then we're going to go into next week, similar to like we do in a shutdown fight, where you have this deadline, and that deadline is when everybody's going out to Dulles and Reagan.
Right.
And you begin to see, are they feeling the pressure that they need to get something done? And this is most likely on the Republican side. And I think if you give most of the House Republicans truth serum, they don't want to do anything. They want to go home because they're not on board with this idea of raising or extending Obamacare subsidies. We've always been saying, and this is led by our colleague Dwayne Wright, his consistent message to the clients is that President Trump needs to be the one that leads this. And until President Trump steps in and directs the Republicans what to do, the Republican strategy is going to be fragmented, and I don't think something gets done.
You're not running odds on this like you are a shutdown, are you?
No.
Because we've had several folks tell us here that neither party has a reason, actually, to pass this. That if you're a Democrat, sure, you got a plan, but you know it's going to fail, and you'd rather hang this over Republicans for the next year to win the midterms. What do we think of that?
Absolutely. I mean, the Democratic message for 2026.
This is why people love Washington.
Yeah, I mean, the message for 2026 from the Democratic perspective is going to be affordability and health care. And those two messages, the Democrats can say, look, we've tried, you know, and the affordability, that's a whole different issue. But when it comes to health care, we've tried. And if there are 22 million Americans that get hit with rising premiums and 4 to 6 million Americans lose health care as a result, the Democrats will say, talk to your Republican member because we tried. And, you know, it just goes into this plan of trying to win back the House. And so from the Democratic perspective, you know, there's really not a ton of incentive for the outside of the political side. I mean, obviously the humanitarian side is different, but from the political side, they're sitting pretty.
So, but this is incredible, though. So for the benefit of our audience, and you're always honest with our listeners and viewers, what we're about to see in the next 2 weeks is a total charade then. This is a political charade.
No, I wouldn't call it 100% political charade, because if the Republicans begin to feel the pressure here, and let's just say the Senator Collins-Marino bill actually gets some traction here, there's a chance if the Democrats come back and say, you know, we're going to get a 2-year extension, we'll be able to kick the can. I do think the Democrats would ultimately take the deal. The problem for Senator Collins and Senator Moreno isn't the Democrats. The problem is those House Republicans, because Speaker Johnson has said, you know, he's not going to guarantee a vote. And also, I don't think you could get a lot of, you know, House Republicans on board with that idea. Because at the end of the day, for Speaker Johnson to do this, he's going to have to most likely break the Hastert rule. And that is, you don't bring anything to the floor unless the majority of your conference supports that. The only thing that would get Speaker Johnson covered to break the Hastert rule is for President Trump to come in and say, this is what I want to get done. President Trump tried that right before Thanksgiving, and due to congressional blowback, that plan never actually materialized.
Incredible. So what was Speaker Johnson talking about? He said there'd be a plan out, a Republican plan at some point this week. Do you know what that will look like? And does it resemble Obamacare, or is this more about health savings accounts, or a totally different approach?
I think there's two ways to look at this question. Are you trying to solve the immediate problem, or are you trying to solve Obamacare?
Does this try to do both?
Well, I don't know. We haven't seen what that plan is, and it goes back to the idea of what the Republican strategy here. But what I'd say to clients, and I think this is what Dwayne was saying to his clients this morning as well, is the Republican plan that's going to come out just a kick of the can, meaning 1-year extension, 2-year extension, plus some provisions? Or is this a try and resolve Obamacare writ large? Because if it's Obamacare writ large, you're not going to be able to do that via regular order by the end of the month. And that then becomes a question of, are we going to see a Reconciliation 2.0 bill next year that has to do with Obamacare? You know, it's extremely difficult. I mean, you go back to Senator McCain with the thumbs down vote. The margins for Republicans were stronger there than they are now. And so we just go back to the idea that there's two catalysts here, the end of the month and next year. For the end of the month, long odds, skeptical. That's what Dwayne was saying in his notes. For next year, we'll have to see what happens, because there's more time for the Republicans to stew on the idea and get something to the floor.
Do you listen in on Dwayne's calls the way I listen in on your calls?
Absolutely.
You do, yeah. That's how you know what the buzz is, right? I've told you guys this before. We're all in the same row. And when Nathan or his colleagues put the headset on, it's usually about to get good. Are people calling you about this? Is this an investment a question for folks right now, or is it just about the insurers? How does Wall Street look at it?
It's about the insurers. I mean, it's just whether or not are those premiums going to be there next year or not. And, you know, the idea of a healthcare plan writ large, I mean, this is something that, you know, we've got time to talk about this because, you know, from the market perspective, it is the end of the month. That's the catalyst that people are focused on. For the, you know, the larger plan, we've got plenty of time to talk about it.
Big Bloomberg story today about the Farm Bill. If you hadn't heard about this yet, the president's going to sign an EO, it looks like, later on, and we'll cover this. $12 billion in assistance To hit the farmers who have had obviously a lot to deal with when it comes to tariffs, the aid would include up to $11 billion in one-time payments to crop farmers under the Department of Agriculture's newly designated Farmer Bridge Assistance Program. The rest reserved for crops not covered under the FBA. Is this enough to keep farmers afloat?
No.
Okay, then.
The story from the farmers here is trade, not aid. Because what this is going down
they don't
to,
want this.
Well, they'll take it, but obviously this is not going to help them because you have a bad situation where you have low crop prices, high production costs, and you also have China not purchasing soybeans and other agricultural products like they have in years past. You put all three of them together, you get a really nasty trifecta that are impacting U.S. farmers at the moment. Now, in terms of what this is doing, is this is a little bit late to the game. Spring planting season, at least the CapEx purchasing and negotiations started a couple of weeks ago. So if you talk about the government bureaucracy, if this comes out in January, a couple of weeks late. Yeah. But when this happened back in 2018 and 2019, there were about 644,000 farms that took around an average about $22,000 worth of aid. That's not going to save your farm. What's going to save your farm is additional, just essentially a change of those factors that I just mentioned about. And that's why I think that this is just the first step of more aid that's coming in the next year, because, you've had some members of the House Ag Committee on the Republican side float up to potentially as much as $50 billion in aid for farmers. But if you go out to the Farm Belt and you talk to our clients out there, they want trade, not aid.
Wow. How do you guys come up with this? Trade, not aid. James, do we need to be rhyming more, I feel like, on the program? I mean, just to be part of the culture here in Washington. Do you have guys with terminals driving tractors around? I mean, that's part of...
We have terminals all over the world.
Of course, but what do they do in the farm business with a terminal? Is it about gauging prices? Are they like plotting out?
I mean, we have so many folks that have exposure to the commodity markets. Yeah. I mean, wheat in particular, soybeans.
And they pick up the phone and call you on this, which is why you know so much about it. So what are the questions we should be asking then? He's going to sign this thing at 2 o'clock, and Congress then just immediately needs to start working on more for next year.
Well, I think the immediate question is how quickly can the USDA and the Farm Services Agency get that aid out? Because, obviously we have a time crunch with the holidays. Sure. And the way it worked back in 2018 is they actually put a link on the website and said, please call us if you need aid. And then we'll actually start the approval process. Should take about 3 to 6 weeks. I mean, obviously the holidays put a little bit over there, but if you're a farmer, you're looking probably around 3 to 6 weeks before you get that aid. And that's being on the quick side. Then the other perspective is how are we going to do it more? Because ultimately, if you're going to go to a number that's 50 billion, eventually you're going to have to get into congressional authorization. They're doing this under the allocation of already pre-existing funds, and there's only so much you can do. So are we going to do this as part of the light farm bill that negotiations are taking place next year? Is this part of the shutdown negotiations of January? Still to be determined, but I think the farmers who are accepting this right now are saying, look, we're going to use most of this for our fourth quarter CapEx spending, a little bit of seed, maybe try and get some planting out there. But then in terms of like how we're going to survive going forward, are we going to have low crop prices, high production costs, or are we going to get better trade terms with China? Wow. No amount of aid is going to really change that.
This is a big story, proving again that Nathan Dean can talk about anything that I ask him about here when it comes to policy, which is why he is the senior U.S. policy analyst. And with the Patagonia fleece today reminding us that he is America's dad, you need to get some BI swag for all of us now, apparently you as well.
We're trying. We're trying.
There's no mug, there's no T-shirt. Nathan Dean, trade not aid. Which candidate will steal that in the midterm cycle? This is Bloomberg.
1240 on Wall Street. I'm Alexis Christoforous. We've been talking about it all day long. Paramount Skydance launching a hostile takeover bid for Warner Brothers Discovery at $30 a share in cash. This values Warner Brothers at more than $108 billion, including debt, and it compares with Netflix's offer of $27.75 a share in cash and stock, with Paramount's offer being for the entire Warner Brothers studios and Netflix's offer being just for the Hollywood studios and streaming business. Paramount CEO David Ellison telling CNBC his company's offer provides superior value and is more likely to be approved by regulators.
What we're creating by putting these two companies together is a real competitor to Netflix, a real competitor to Amazon, a real competitor to Disney, not something that is so anti-competitive. There will be no more competition in Hollywood if this deal is allowed to come to pass.
President Trump over the weekend cast doubt on a Netflix Warner Brothers hookup, saying it could pose antitrust concerns. Axios reporting today that the president's son-in-law, Jared Kushner's Affinity Partners, is part of Paramount's hostile bid for the media and entertainment giant. Turning to Wall Street, stocks under pressure ahead of the final Federal Reserve meeting of the year on Wednesday. The Dow Jones Industrial Average down 224 points, led lower by shares of Procter & Gamble, Nike, and American Express. The S&P 500 down 30, but the best performers there are Paramount Skydance and Warner Brothers Discovery. Shares on NASDAQ now down about 68 points at 23,509. Once again, stocks lower here across the board. Russell 2000, though, up 5 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Balance of Power.
All right, Alexis, thank you so much. I'm Joe Matthew in Washington, and thanks for being with us here on the Monday edition of Balance of Power on your radio, Bloomberg Radio, and on YouTube. Search Bloomberg Business News Live if you want to watch the radio show on TV. If you have YouTube TV, we're on there already. Flip over to Bloomberg Originals. We'll save a seat for you here in the studio with our eyes today on Texas, at least right now, with the news that Colin Allred is out. Did you hear this? Former Texas Congressman Colin Allred dropped out of the primary for a U.S. Senate seat in Texas. Says he's going to stay in the House, return to the House of Representatives. How does that work now? You start thinking, was that Talrico? No, I don't know. We'll ask Julie Fine, but it sure seems like this story that Jasmine Crockett's about to jump in, and we're going to find out today, right? Can you imagine? I was talking to producer James about this earlier. Imagine a race in which Ken Paxton is going up against Jasmine Crockett. Forget the most expensive race in the country. This would be the bruiser of them all. In a state like Texas, here, I'm going to put it out there right now. James is taking notes. I say we take the show to Texas. We do it next month. We talk to all the candidates in this race. Because we've got a friend down there. She can put her word in for us. It's, well, of course, Julie Fine. Bloomberg's Texas bureau chief is with us right now. She woke up to a flurry of phone calls this morning on this one. And Julie, what's Colin Allred thinking? Did Jasmine Crockett clear the field without even jumping in?
I think that he was thinking quite a few things. I think what he decided eventually was this is a safer path for him. He's been in the House before, and obviously he looked at this race and said, hey, I've got some issues here. This is going to be very challenging. This is going to be a bruiser, as he said in his email this morning. So I think he decided, I'm going to step back from this one now. Jasmine Crockett, of course, likely to get in when she makes her announcement about her future this afternoon. So I think that Colin Allred made this decision. He must have come to it in the last few weeks because he has been out campaigning right up until now. And I think he said to himself, okay, I'm going to step back from this one and see what happens here.
Amazing. The statement from Colin Allred in the past few days, he says, I've come to believe that a bruising Senate Democratic primary and runoff would prevent the Democratic Party from going into this critical election unified against the danger posed to our communities and our Constitution by Donald Trump and one of his, well, he says Republican bootlickers, Paxton, Cornyn, or Hunt. They're all bootlickers. Julie, what's going to happen when Jasmine Crockett talks today? Does she have something scheduled?
Jasmine Crockett is expected to hold an announcement about her future. That is later this afternoon. That's at 4:30 Central Time, which, Joe, you are going to get very familiar with when you visit us in Texas, like you said at the beginning. Let's bring the show here. Let's talk about these races. So It will be at 4:30, 5:30 Eastern time. I mean, clearly she's expected to get into the race. I expect it to be very nasty if it is between Jasmine Crockett and Ken Paxton. However, we have a long time to go. That would be news to John Cornyn, who obviously still continues to campaign for this nomination. And let's not forget about James Tallarico. So you've got James Tallarico, who will likely be going against Jasmine Crockett. Both of them are prolific fundraisers, so it's going to be very expensive before you even get to the general election.
Wow. I think she's in, James. Did you hear she just talked about it like it was already scheduled? So we can come down there to do the show, Julie?
You can. I certainly hope you're here because I've got lots of plans for all of us. I'm so excited to show you the state of Texas. There's so much to do here. I'm already booking guests for you, so you better show up.
Wow. You just say it and it happens. Julie, thank you so much. From the great state of Texas, the great Julie Fine. Yeah, Bloomberg Texas Bureau Chief. She's going to be busy today. Maybe we'll talk a little bit later on here. So we'll pack our bags. I say we go the end of January. This is a March primary, right? Our political panel has their eyes on this, too. Just imagine a world. Jasmine Crockett, James Tallarico on the Democratic side, right? We've got John Cornyn, Ken Paxton, Wesley Hunt on the Republican side, Julie Fine right in the middle of it. Our panel, they're back together today. I'm glad to say Rick and Jeannie are here, Bloomberg Politics contributors. Jeannie Shanzano, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, and Rick Davis, Republican strategist and partner at Stone Court Capital. Jeannie, as our Democrat, I'm curious what you think here. Is Jasmine Crockett the right voice for this race? And is that why Colin Allred decided to do it today?
Howdy, Joe. I hope you have your cowboy boots ready, your hat, you're ready to go. I know I
100%.
am. And yeah.
10 gallons.
That's right. It's going to be a fascinating race. You know, one of the things that Jasmine Crockett has said over and over again is she believes that if the general election, and that's a big if, because of course it's been 30 years since Democrats have won a general election in Texas, but if they win, it's going to be by expanding the electorate. She doesn't believe in what she calls this mythical crossover idea. And that's what Tallarico sort of brings to the table, is this crossover notion that he can appeal to moderate Republicans, independents, and they'll cross over Democrat. She says not so fast. This is going to be about bringing in a new electorate. And that's a battle we're going to see in Texas on the Democratic side. We're also going to see it across the country as Democrats try in these House and Senate races to win in some really, really tough districts and seats. So I think the race between the who can cross over, who can get this mythical crossover people to come versus this expanding the electorate battle is going to be it for 26.
What's your thought on this development here, Rick? I mean, it would be a popcorn popper to have Jasmine Crockett go up against any of these Republicans, but the whole story around James Tallarico was that he had a new approach and that it was appealing to people across the aisle. Jasmine Crockett is a flamethrower from what I've seen, and I know Democrats love her. This would be awfully entertaining, but is that how Democrats win a race in Texas?
Yeah, I feel for Democrats and Republicans this cycle because they really don't have anybody that they can fall in love with. Democrats aren't as liberal as Crockett is. I mean, she's a progressive in a state that has very few progressive voters, and midterms are a base election. That being said, Tallarico, he wants to appeal to people who aren't in the Democratic Party. Well, you got to win a primary first, buddy. I mean, like that's number one. So it's I think it'll be interesting to see. I mean, it's hard to discount anything that Crockett does. She's been wildly successful. She's highly entertaining and very controversial. That tends to be, good combination for a primary. But the Republicans are the same boat. I mean, Ken Paxton appeals to the far right, but only the far right. And so you've got somebody like, Senator Cornyn, who's been around a long time and really isn't a part of that new wave of conservatism in Texas. So I would say the general election could wind up being one of the most polarized and, frankly, expensive elections in the country this coming year.
Boy, it sure seems like it. Jeannie, I don't know if you agree with what Rick said. I mean, if that's the case, when's Beto announcing?
Oh, you're really going back, aren't you, Joe?
Let's go. Absolutely.
Let's go. I think for Democrats, there has been some concern that you have what they see as three really attractive, young, viable Democrats in, Colin Allred, Jasmine Crockett, Tallarico, all vying for the same seat. So I think there is some relief on the Democratic side that Allred has decided to say, I'm going to go to what is essentially his old district and try to make a run for it. Of course, you've got Julie Johnson there. You've got Domingo Garcia may run there. That's going to be a battle. And all of this because, of course, the redistricting that occurred in the Supreme Court's decision late last week to uphold that has put the Democrats in North Texas down from 3 to 2 seats, essentially. So you've got a battle there. If Crockett does go to the Senate, you're going to have a battle in her district, which is the 30th. So it is going to be a battle royale. But again, I would just say this constant refrain, can you bring in new voters? They are looking at people like Donald Trump. They're looking at people like Mamdani and saying that's the way to win versus sort of the more old-time establishment idea of you've got to cross over. And that's why Tallarico has been getting support from people like Obama, Joe Rogan, and others.
You could argue, Rick, that Colin Allred was a special candidate, right? I mean, you've got a celebrity politician here, former football player, former member of Congress. Would you have advised him to go back to the House?
Well, I sure would have changed his press statement. I mean, how about a guy who played in the NFL saying he's worried about a bruising political primary? I mean, really? I mean, that's a bad choice of words. I think I'd have had him stick it out. I mean, the guy raised and spent $95 million in his last bid only a year ago. I mean, that's an enormous amount of statewide name ID that he's already purchased. To not play off of that in both a primary and a general election seems to me to be going in reverse. Look, I get it. Democrats all think they're going to win in the House and everybody can be a committee chair and they're going to have power, and so they want to have that opportunity, and that does not necessarily spell the same for the Senate. So I don't know. I honestly, I rarely ever see someone who was arguably a successful Democratic candidate other than winning in Texas, and to then, turn around and run for the House of Representatives. It doesn't make any sense to me.
What do you make of that decision, Jeannie? I mean, Colin Allred could do a lot of things. In this case, should he be cashing in on that name recognition by staying in the race? But why would you go back to the House?
I suspect, Joe, that Rick is saying this because he wants to bet me again on Colin Allred. And remember, he won last time, so I still owe him a
I didn't want to bring
dinner.
it up.
That may be why he's going with this. I think one of the things that Colin Allred has said repeatedly is that he is getting, again, pressure from Democrats who say we shouldn't be concentrating all of our best young talent, essentially, in the same bruising primary race. And so I think he's feeling that pressure. I also think, he has lost before, as I can tell you. And I think he thinks this could be a winning bid for him. I hear what Rick is saying. I'm not so sure this is going to be a winning bid for him either. But he really felt like if Crockett was in this thing, and it was clear this weekend when she went to this third service at the Baptist church that she was probably in, that it was time for him to make a really, really tough decision.
All right, so would you put a steak dinner on Crockett or Tallarico, Jeannie? You're not getting out of this.
Oh gosh, Joe. Okay, I'm going to go with Crockett this time. Rick, I'll go with Crockett.
Wow, boy.
I can't after the whole Tallarico thing.
You're taking that bet, right?
I'm taking that bet. I'd like to get my first bet paid off at some point, but I would like to take that second. I don't think this is the cycle that Democrats are going to win in the state.
Well, we just made plans with Julie Fine to bring the show down there, so this is going to be at a Texas steakhouse. I just want both of you guys to know one way or the other. This could be like the day after the primaries here. This is going to be a blast. Maybe there'll be a separate bet for primary, general. We'll talk it out and let you know here on the air. Delighted they're back together, right? It's Rick and Jeannie. They're going to be back in our second hour here on Balance of Power, our signature panel, as we like to say here on the fastest show in politics. And we're going to try to get our arms around what's happening with the Farm Aid, Ask Some Farm Bailout executive order that the president is going to be signing today as soon as we get off the air, right around 2 p.m. Eastern time. We're talking about $12 billion, which Nathan Dean just told us is not nearly enough. He says trade, not aid. But the aid is coming, and we'll go through it with our political panel. Also, the foreign minister from Finland is going to be part of our conversation as President Zelensky meets today with our NATO allies, saying just a short time ago there is still no compromise for peace when it comes to the map. And we'll have more on that coming up right here on Balance of Power, only on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
The farmer bailout will be signed today. Welcome to the Monday edition with President Trump set to sign an executive order just about an hour from now that would send billions of dollars to farmers hurt by the president's tariff regime. We're going to get the latest on this in just a moment from Bloomberg Washington correspondent Tyler Kendall. And as President Zelensky today meets with our NATO allies, we'll have a conversation with Elina Valtonen, the foreign minister of Finland, live from world headquarters in New York, following that country's first year as a member of the alliance. Later, we'll talk as well with Small Business Administrator Kelly Loeffler, and we'll have analysis from our signature panel, Bloomberg Politics contributors Rick Davis and Jeannie Shanzano, all after a look at Wall Street. Let's get up to date on the Monday trade right now with Alexis Christopher. She's in for Charlie in New York. Hey, Alexis.
All right, let's do it, Joe. Warner Brothers Discovery has some deciding to do. Paramount Skydance has launched a hostile takeover bid for Warner Brothers Discovery at $30 a share in cash. This values the company at $108 billion, including debt. The bid compares with Netflix's offer of $27.75 per share in cash and stock, with Paramount's offer being for all of Warner Brothers, Netflix's offer being for the Hollywood studios, HBO, and the streaming business. Both bids, though, raise significant antitrust concerns, with both companies laying the groundwork to win over the White House and regulators, and Warner Brothers investors weighing those competing offers. Right now, shares of Paramount Skydance, the most active in the S&P 500, up 9%. Netflix off 4%. We've got Warner Brothers Discovery rallying 3.5%. And on Wall Street, traders are waiting for the next catalyst, which is the Fed's final meeting of the year on Wednesday, where traders are betting on a third rate cut of the year. They'll also be listening for clues on any possible future rate moves in 2026. The Dow Jones Industrial Average bouncing off its lows of the session, still down 188 points. The S&P 500 down 19. We've got the NASDAQ trying to claw its way back into the green, down now about 20. Russell 2000, though, up about 8 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Joe Matthew and Balance of Power.
All right, Alexis, great to have you aboard on the Monday edition here of Balance of Power. Great to see you as well on Bloomberg TV and radio, streaming live on YouTube and always available on your satellite radio, channel 121. We've got a lot to cover as we count down to an important event at the White House about an hour from now. And it involves farm aid. This is a story that came exclusively from Bloomberg and White House correspondent Skylar Woodhouse, as the president prepares to sign an EO that may or may not help the farmers who have been impacted by the president's tariff regime. $12 billion is the number that we're looking at right now, and we have Bloomberg Washington correspondent Tyler Kendall with us here in studio with the details as we know them. Tyler, it's great to see you. This is something that's been perking for some time. The president has spoken openly about sending aid to farmers. In this case, it doesn't seem to be a number that's going to make up the difference.
Right, and this is long-awaited assistance for a real key support group for the president. Now, as you mentioned, we're expecting about $12 billion worth of aid to be in this package. This is going to include these one-time aid payments to crop farmers. This is actually a newly established program from the Department of Agriculture known as the Farmer Bridge Assistance Program. I did speak to one senior administration official earlier today to get a little bit more details about exactly who qualifies for this. This will be for farmers that have an average adjusted gross income of less than $900,000. The administration says that this is supposed to be going towards those smaller family farmers instead of bigger corporations. And there's a few different steps they're going to have to fill out pretty quickly, actually. They have between today and December 19th, Joe, that's the deadline for them to submit something known as their acreage reporting data, because essentially the federal government is going to give them aid based on how much land they are planting. And then this official tells me that the administration has this hard deadline set. It's February 28th of 2026. That is when these farmers can expect the cash to be in their accounts. So they're going to try to get those checks out quicker because, much to your point, they've been waiting for this, we know, for months. And one of the reasons why it was actually delayed is because of the government shutdown. It was our understanding that these local farm service agency offices were shuttered during it. They were not deemed essential, and therefore they had to delay this rollout to give it time to be implemented and properly allocated.
Really interesting. And as Nathan Dean's analysis at Bloomberg Intelligence reminds us, the plans for spring planting season are well underway now. So timing is super critical here. And from what we understand, they'll have to go right back to the drawing board on another aid package for next year. Are you hearing about that at the White House?
Right. So that's actually incredibly important, particularly when we put it into context when it comes to soybean farmers, right? Because this is a group of farmers that has really been squeezed when it comes to these trade tensions with China. And I'll give you some statistics here. One is that after that meeting with President Trump back in October between him and Chinese President Xi Jinping, we did start to see this gradual resuming of soybean purchases from China, but they haven't really reached reached the levels that we would like to see yet. So far, if we look at the data, China's made good on about 23% of its purchase commitments. Now, Beijing does have until February, so there is still time here. We heard from the USTR Jamison Greer over the weekend that said that China is on track to meet those full obligations, but it does raise questions about how much aid could be needed if there is this delay when it comes to purchases. And it's also important to note that while we have seen a run-up in soybean futures after that meeting between President Trump and Chinese President Xi Jinping, this spurt of optimism, really, we're actually seeing these price levels near 2020 lows.
Fascinating. Tyler, I want to ask you, before you leave us, about Slaughter versus Trump. There are arguments being made before the Supreme Court today that our audience should be aware of. We actually spent some time with Rebecca Slaughter here on Balance of Power. This case is being watched very closely when it comes to executive authority over the ability to hire and fire department heads, agency heads to be more specific. And of course, we've all got Jay Powell in mind on this one. What are we hearing?
Right, exactly. So our headline on the terminal is that the Supreme Court is signaling it will back President Trump's firing of agency leaders. Now, we should say there's no decision here yet for anybody that's covered or been to oral arguments. We sort of listen into the justices' line of questioning, their responses, their back and forth when it comes to the case to glean some details on how they're thinking about this. Now, I will say that we had an indication that the Supreme Court was likely going to signal that they're weighing in the administration's favor because we had this document from the Chief Justice John Roberts back in September that actually said that Slaughter should not be in her role while the broader issue of her legality of her firing plays out in court. Now, this is separate from the Lisa Cook case. Those arguments are going to happen on January 21st, but separately, she's still allowed to be on the FOMC as a governor and making these decisions. So there is a distinction here before the cases. Legal experts tell us that we likely won't get a ruling on this FTC case until after the Lisa Cook hearing is done. But Joe, at the crux of this is that we could see the overturning of really important legal precedent known as Humphrey's Executor. That's a 1935 law that protects independent regulators and agencies from being fired without cause. And you're going to hear us talk so much about cause because it's not explicitly defined in the law, but it's typically taken to mean malfeasance or neglect of duties related to the job. So we'll have to see how this ultimately rolls out. Again, I will mention two separate cases, but big implications when it comes to the Fed. But again, don't forget, the Supreme Court had signaled that there could be a carve-out for the Federal Reserve, so they might not totally be intertwined here.
Really interesting. Great reporting, Tyler. Thank you so much. Bloomberg's Tyler Kendall. We're glad to have her back in the mix today with a number of stories coming from the White House, and we'll go there later on after 2 p.m. Eastern when the president signs that EO. Be very curious to see if that's open to reporters' questions, and if so, you can count on hearing it and seeing it right here on Bloomberg TV and radio. All the while, the president making news on Ukraine. This happened last evening at the Kennedy Center when the president, Donald Trump, became the first U.S. president to host the Kennedy Center Awards, and he spent some time on the red carpet with the First Lady, knowing today Ukrainian President Volodymyr Zelensky would be meeting with NATO allies. It says negotiations underway right now are leaving him wanting, discussing a U.S.-brokered peace initiative and remaining divided over territory, including control over the Donbass and eastern regions of Ukraine. There's no compromise yet, says Zelensky. President Trump suggesting before reporters last evening that he's not happy once again with President Zelensky because he hasn't taken this deal or, as it turns out, even read it. Here's Donald Trump.
So we've been speaking to President Putin, and we've been speaking to Ukrainian leaders, including Zelensky, President Zelensky. And I have to say that I'm a little bit disappointed that President Zelensky hasn't yet read the proposal. That was as of a few hours ago.
That's where we start our conversation with the foreign minister of Finland. Elina Valtonen is with us from World Headquarters in New York this week to brief the UN Security Council on her role representing Finland's OSCE chairpersonship, and of course coming at a very important moment in peace negotiations. Minister Valtonen, welcome to Bloomberg TV and radio. It's great to see you, and thank you for being in our offices in New York. I'm wondering, based on what you heard there from the president, if you're concerned that he is turning away once again from Volodymyr Zelensky.
Well, thank you so much for having me. Yeah, well, let's see what happens. I think it's quite clear that Russia's Putin is quite impressed by what's going on at this moment. He admires President Trump. He admires basically the military power that the U.S. can project. But at the same time, he's the one really despising the American way of life, I would say the European way of life as well, which grants freedom to all individuals. And this is ultimately what the Ukrainian people want to achieve as well. And the president of Ukraine, President Zelensky, he is liable to his own people. And a peace deal, which the Ukrainians wouldn't accept, is obviously not something that he will digest easily.
Sure. President Zelensky talked about this moment and the support that he says he needs from Europe and the United States earlier today. Let's listen to what he said.
Things which are very important for today, I think unity between Europe and Ukraine, and also unity between Europe, Ukraine, and the United States. There are some things which we can't manage without Americans, things which we can't manage without Europe, and that's why we need to make some important decisions.
If you're having trouble hearing us on the radio, Zelensky's saying there are some things which we cannot manage without Americans, things we cannot manage without Europe. So that said, Minister, I'm curious your thoughts about the administration's national security strategy that argues that Europe's cultural and political failures like immigration and censorship pose a threat to the continent's way of life. What do you make of the president's posture towards Europe?
Well, first of all, the European countries are democracies, and in our constituencies, our people decide how to rule our countries. In Finland, the share of people with foreign descent is about 8%, and I understand in the United States it's like 15%. So Europe is organized as smaller countries within the European Union. The European Union is our way of organizing ourselves. It enjoys around 60 to 70% of approval rate among the population, which is pretty high. But I wouldn't, in a way, I think it's fair that within the, so to say, the family of the transatlantic relationship that we are also able to criticize each other. I don't have a problem with that. But at the same time, I just hope that the strong link we have will also continue in the future, because at the end of the day, the world would look so much worse if the free world didn't exist or if it didn't hold together.
Well, I'm happy to hear you refer to us as a family, Minister, and I'd like to just zero in a little bit more closely on Finland's relationship with the United States, because your president, Stubb, I should say, has played golf with President Trump. They've talked frequently and have developed a bit of a relationship. How close are they at this point, and to what extent has that helped Finland in trying to keep the president committed to European peace?
Well, I guess it has been a very good avenue both ways in transferring ideas and messages, and of course golf diplomacy apparently works. At the same time, of course, Finland has very strong ties with the United States on so many levels, in trade, in technology, in science, and then of course through strong investments into defense and deterrence. But at the same time, Finland is part of the European Union, and we would hope that there was a possibility very soon in the future to really deepen our trade ties between Europe and the US. Europe has not imposed any tariffs on the United States. There's 15 on Europe. There are many things we should try and work out together. Reducing red tape is an interest on both sides, but we should do that in friendship. And at the same time, we should impose tariffs and sanctions on the true adversaries we face as the free people, and that is certainly Russia and their friends. I'm a little bit worried now, to be honest, what the next days and weeks will bring, in the sense that, of course, we, just like the Ukrainians, want to have peace as soon as possible, but not at any cost. Because certainly if this war isn't Trump's war, which it totally isn't, the peace will be Trump's peace. And I'm sure President Trump is interested in having a lasting peace. And if it's not just, then it typically wouldn't last.
Really interesting to hear you talk about that. And we'll remind our audience that Finland shares 830 miles of land border with Russia. When you talk about your worry there, is there a scenario when you consider the options of the outcome of this war that could make Finland less safe?
Well, you see, we had the NATO ministerial last week in Brussels, and within the alliance, we agreed to 100% that the largest threat that the transatlantic alliance is facing, and unfortunately for the long term, is Russia. And that means that, of course, the threat that Russia is posing is not only visible in Ukraine, but it's actually visible in the rest of Europe as well, but I should say also in the rest of the world. I mean, if people have paid attention, Russia has been organizing military coups in Africa, for instance, to cause irregular migration and, of course, suffering for the people. Russia is active in the Arctic and doesn't shy away of partnering up with other rogue states around the world. So certainly Russia is a threat to entire world peace. I'm not so worried about Finland. We have always invested very heavily in defense and deterrence, and now that Finland, together with Sweden, we also joined NATO a couple of years ago, I think the alliance is stronger than ever, since also now Europe is really chipping in. But at the same time, I'm truly worried whether we understand that we need to deter Russia. Russia is the aggressor in this war, and to find lasting peace for Ukraine and for the rest of us, we need to be showing Russia some strength, and we need to have Russia stay within its borders.
Yes, right. Well, and to that end, you've argued that even after a peace agreement, Russia may well remain a threat, and history certainly reinforces that as Europe seeks a way to use frozen Russian central bank assets to fund the rebuilding of Ukraine. We only have a moment left, Minister. How close are we to getting an answer on that?
We are very close to finding an answer to that. We will have the meeting next week of European heads of states, and we are now quite close to finding a legally and politically sustainable solution to this. And I think using the Russian central bank's assets for funding the survival of Ukraine is not only morally, but in so many other ways also the right thing to do.
She's the Minister of Foreign Affairs in Finland, Elina Valtonen. I hope we can do this in person next time. Thank you so much for being with us today on Bloomberg TV and radio. I'm Joe Matthew in Washington. We'll have much more ahead, including our conversation with the administrator of the Small Business Administration. SBA's Kelly Loeffler will be with us coming up straight ahead here on Balance of Power. I'm Joe Matthew in Washington. This is Bloomberg.
121 on Wall Street. I'm Alexis Christoforous. Stocks are pulling away from their record highs and Treasury yields are higher ahead of the Federal Reserve's Wednesday meeting. The wide expectation is for the Fed to cut interest rates, but also hint at fewer cuts in 2026. The Dow Jones Industrial Average now at its worst level of the day, down 256 points at 47,699. The S&P 500 down 20. The Nasdaq now down just 10 points. Yields are higher. The yield on the 10-year 4.17%, the 2-year yield at 3.58%, and WTI crude now down nearly 2%, slipping to just under $59 a barrel. In stock news, we've got shares of Oracle climbing better than 1% amid investor optimism ahead of the company's quarterly results due out on Wednesday. And shares in Carvana, CRH, and Comfort Systems USA all rallying after S&P Dow Jones indices announced those companies will join the S&P 500 index before trading opens on December 22nd. They'll be replacing LKQ, Solstice Advanced Materials, and Mohawk Industries. Quick shout out to Carvana, up now 13%. To recap, stocks lower with the Dow off 241, S&P down 20. For on-demand news 24 hours a day, subscribe to Bloomberg News wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Joe Matthew and Balance of Power.
Okay, Alexis, thank you so much, and thank you for being with us here on the Monday edition of Balance of Power. Interesting conversation already with our update on farm aid from the White House, courtesy Tyler Kendall. We did geopolitics with the foreign minister of Finland with news today on Ukraine. And we turn to the economy now with the help of the administrator of the U.S. Small Business Administration. That, of course, this day before the president flies to Pennsylvania would be Kelly Loeffler. Around this time tomorrow, we're going to be talking about the presidential trip that is supposed to be the first of many as the president beats the drum on what he sees as the economic advantages coming from his administration. And it's a pleasure to have Administrator Loeffler with us now from our world headquarters in New York. Welcome back to Bloomberg TV and radio. What's the message going to be from the president tomorrow when it comes to specifically cost, inflation, affordability, whatever word you want to use? Administrator, can we say that inflation is cooling?
Well, it absolutely is, Joe, and it's great to be with you. Look, under President Trump, inflation is already half of what it was under Joe Biden, where we had a cumulative 22% inflation over 4 years. What we're seeing now is inflation coming down, interest rates coming down, energy prices, food prices. This is part of the Trump tailwinds that consumers are benefiting from. It's why consumer confidence is starting to climb back up and expectations for inflation are falling, because they also see that their take-home pay is rising. And with the one big beautiful bill, the best is yet to come in 2026 and beyond. It's exactly what happened with the 2017 Tax Cuts and Jobs Act, and that's what the president's going to be talking about, is building in America, getting our productivity, wages, and opportunities up again.
Well, I know that you have high hopes for the year to come. When we look at the matter of inflation, though, it appears largely flat over the year-to-year numbers that we're looking at, having seen, to your point, rampant 9% inflation in the Biden administration, but it's been largely stagnant for the past year. And we learned just 2 weeks ago that consumer confidence fell to its lowest point since April. So how do we rationalize the way people are feeling with the data that you're talking about?
Well, Joe, you bring up a good point. When that data was measured in terms of consumer confidence, we were coming out of the largest government shutdown in American history, where essentially Main Street was defunded by the Democrat shutdown that impacted about 10 million small businesses getting access to $5 billion. We saw government contractors lose about $12 billion in wages, and we saw that America's #1 job creators, small businesses, a record 36 million of them, thanks to President Trump, are primary job creators. They create 2 out of every 3 new jobs. So when that shutdown hit, it hit Main Street hard. But thanks to the Trump tailwinds, it's coming back. He's deregulating. The one big beautiful bill is bringing unbelievable tax cuts for small businesses to build factories made in America, 100% expensing, and all the great things that come along with it for families. No tax on tips, no tax on overtime, no tax on Social Security. It's going to give consumers a big boost, and we're already seeing that in the critical holiday shopping season right now as we head into Christmas, with an expected $1 trillion for the first time ever being spent during this season.
Well, it'll be really interesting to see how consumers get us through the whole holiday shopping season. When we look at the CPI data specifically to inflation, we're at, what, 3% in September of 2025. We were at 3% in June of 2023. And there's a big question about the last mile, Administrator. How do you get this down to 2%?
Well, this is the Trump agenda. This is deregulation. He's already deregulated to the tune of $200 billion. That's a saving of $2,000 per family. That's just a start. We're cutting about 30 regulations for every new regulation. When I talk to small businesses, they say they were crushed under Biden's regulatory regime, Green New Deal that raised costs, not just through his executive orders, but through the agencies, which added additional trillions. So between tax cuts, deregulation, fair trade, we see jobs and opportunities coming back to America, and then $18 trillion of investment coming in. A lot of that's going to play out on Main Street, and that's why small business optimism, according to the U.S. Chamber, is at all-time highs. And you've got consumer confidence on the rise again. So consumers know that the best is yet to come.
You know, we're talking, of course, to the Small Business Administrator. So I want to clarify that you're talking about small businesses. We've been hearing from some big ones, though, in terms of Costco filing a lawsuit against the administration to secure a refund if the Supreme Court knocks down the tariff regime. We've heard warnings from the likes of Walmart with the impact of tariffs creeping into prices, Williams-Sonoma and others who haven't gone so far as to sue. What are small businesses feeling when it comes to the impact of tariffs?
Well, Joe, I've been traveling the country, literally from Alaska to Maine, talking to small businesses and particularly manufacturers. Most of America's manufacturers meet the small business standard, and they're grateful to President Trump for helping them now finally, after decades, compete on a level playing field. One of the biggest pain points for small businesses, besides a skilled workforce, is to have a supply chain that works for them. And right now, they're so dependent on China. They're so dependent on countries outside of our borders that what's happening is they're seeing that their costs are higher than they need to be, and that this fair trade agenda is counter-inflationary, as is much of President Trump's agenda. So they are excited to see the investment coming in. That means our main streets will be thriving again. The hollowing out of America can end. We can reverse that and create good-paying jobs. And my focus now, thanks to small businesses alerting to me this, is their big concern is a skilled workforce and getting people back into the workforce, getting that labor participation up, because wages are rising, taxes are being cut, so families are going to earn more and take home more of what they earn. And that's really encouraging to rebuilding our workforce and our manufacturing base. And no one believes in the American worker or American industry like President Trump.
Just to get back to where we started here, Administrator, to make sure I understand, you mentioned at the beginning of our conversation that consumer confidence was rebounding and that inflation was cooling. Since we haven't managed to find evidence of that in our conversation today, is that your expectation in the near term, or is that something you believe is actually happening now?
It's actually happening. The Trump agenda is counter-inflationary because if you look at gas prices, if you look at interest rates, down double digits since the president came in just the first 10 months. So what we're seeing is major family expenditures are coming down. But look, it's going to take time to dig out of the hole that Bidenomics put us in, and that included inflation, massive overregulation, a hollowing out of our manufacturing and overseas supply chain dependency, massive deficit spending, which we now know can contribute up to as much as 43% of inflationary moves. And so we're having to come back down off an economy that disfavored Main Street and made it harder for families to make ends meet. So President Trump, that's what he's out touting, is this economic agenda is already working. And we see wholesale inflation below expectations, as well as PCE. So we see it going in the right direction. But this is 4 years in the making with trillions and trillions in excess spending. And as the great Milton Friedman said, inflation is always and everywhere a monetary phenomena, and we're having to mop up a lot of money.
Quoting Milton Friedman, yes, indeed. I think the PCE was right on target when we saw that number last week. Kelly Loeffler, we'll keep our eyes on that. We'd love to stay in touch with you throughout that process. She's the administrator of the SBA. Many thanks for being with us here on Bloomberg TV and radio. I'm Joe Matthew in Washington. Want to assemble our panel coming up here with Rick Davis and Jeannie Shanzano. We'll have much more with our panel a bit later this hour, but we just wanted to spend a couple of minutes on what we just heard. Bloomberg Politics contributors. Of course, Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Rick, our Republican strategist and partner at Stone Court Capital. Rick, what do you make of the narrative that we're hearing from the administration? Because I'm guessing that gave us a good sense of what Donald Trump's going to tell us tomorrow.
Yeah, look, I think she's done a good job of sort of presenting the Main Street view that these policies that Donald Trump is espousing, she seemed particularly focused on deregulation, is somehow going to sort of lift all boats on Main Street. I would say a little confused by the discussion of consumer sentiment. Current conditions are still down in the latest Michigan Consumer Sentiment Index. And so even though I think she seems very optimistic, I'm not sure that's shared by consumers themselves. And that's where you see this kind of disconnection when it comes to the polling.
What do you think of that disconnect, Jeannie? We talked about consumer confidence or sentiment, depending on the measure you're looking at, which she said was rising, and I think we established is falling. Prices, in fact, have been either stagnant or rising as opposed to inflation cooling, to her point. So are we getting back to a disconnect between the administration and what people are feeling, or a disconnect between the administration and the actual data?
I think, first of all, it's important that Donald Trump is going out on the road tomorrow, as you talked about, Joe. That is something he has not been doing. And if he is going to convince people about his economic policies, he needs to be out there selling them. Joe Biden didn't do it. He has not been doing it. So it's important that he gets out there. So that's a good sign for him. But again, to your point, there is this enormous disconnect. And I'm struck by how much Kelly Loeffler, Donald Trump sometimes sound like Joe Biden and members of the administration, and trying to wish away the data on consumer sentiment and also the polls, which show whatever you want to say about how the numbers look on inflation and costs. The reality is people are not feeling it. And until people feel it politically, you're going to have results like we saw a few weeks ago in the election.
That can backfire on you, as you're noting here, Jeannie. It's funny, we remember Joe Biden going to the very same, not only state, but town, Rick. He's going to be in Scranton tomorrow. I'm trying to figure out exactly what the administration is thinking, having just seen that playbook so recently.
Yeah, Jeannie mentions it. I mean, it's almost like they're recreating the Biden failure of talking directly to voters about their economic situation, and they even want to go and do it in the same places. It's kind of a head scratcher. I'm not exactly sure that Donald Trump's going to do something that he typically doesn't do and sound empathetic. He's a great cheerleader, and he can cheerleader all the way through a loss. I worry that what's happening is that just like Biden, Donald Trump's talking past the consumer and being overly optimistic.
Well, somebody cue Michael Scott, because the president's coming to Scranton. We'll be talking about that around this time tomorrow, hopefully with Rick and Jeannie. Many thanks to our panel. They're going to come back in a short time from now with much more ahead here on Balance of Power. We're going to get to the Warner Brothers deal, Paramount versus Netflix, and a president in the middle of it all. This is Bloomberg.
1:40 on Wall Street. I'm Alexis Christoforous, and we have shares of Paramount Skydance rallying today now that it's taking its $30 a share takeover bid directly to shareholders. This values Warner Brothers Discovery at $108 billion, including debt, and it compares with Netflix's offer of $27.75 a share in cash and stock, with Paramount's offer being for the entire Warner Brothers Discovery, Netflix's offer being for the Hollywood studios and streaming business. We've got shares of Netflix down more than 4%, Warner Brothers up 3%, and Paramount rallying 8%. Over the weekend, President Trump cast doubt on a Netflix-Warner Brothers hookup, saying it could pose antitrust concerns. And Axios today reporting that the president's son-in-law, Jared Kushner's Affinity Partners, is part of Paramount's hostile bid for the media and entertainment giant. Turning to Wall Street now, stocks are stuck in the red today ahead of the Federal Reserve's last meeting of the year taking place on Wednesday. Wall Street still betting that we're going to get the third interest rate cut of the year that day. The Dow Jones Industrial Average down 280 points. The S&P 500 off 31. NASDAQ down 71. Russell 2000, though, just slightly in the green. And we've got gold basically flat at $41.90 the ounce. Once again, stocks lower across the board. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back over to Balance of Power.
All right, Alexis, thank you so much. And thank you for being with us on the Monday edition of Balance of Power here on Bloomberg TV and Radio. I'm Joe Matthew in Washington as the city recovers from the first Kennedy Center honors hosted by a president of the United States. We won't see it till later this month when it gets on TV. But indeed, Donald Trump took the stage last evening, having compared himself to his role models, Johnny Carson and Bob Hope. 37 freewheeling minutes on stage, according to the Washington Post. And we'll find out in a couple of weeks exactly how well he did. Made a lot of news, though, because before that, the President of the United States spoke on the red carpet, indeed, for almost 40 minutes with the First Lady at his side, and took questions on a range of topics, including what has become our biggest story of the day, and that is the potential sale of Warner Brothers, with the world now looking to Paramount in a hostile bid. Before that news broke, the president was asked about this on the red carpet, having, of course, heard about the Netflix deal that was announced at the end of last week. Here's what the president said.
Well, that's got to go through a process, and we'll see what happens. Netflix is a great company, and they've done a phenomenal job. Ted is a fantastic man. I have a lot of respect for him, but it's a lot of market share, so we'll have to see what happens.
It's a lot of market share, he said. We'll have to see what happens. If you're with us on the radio, the president in front of a step and repeat on that red carpet with CBS logos all over it. They are the ones who run the Kennedy Center honors. Fast forward to the Truth Social post that came out this morning around 9:30, just before the opening bell. The president clearly was watching 60 Minutes last evening, or, well, I guess he played it back because he was probably on stage then. It featured a sit-down interview with Marjorie Taylor Greene, who he refers to in this post once again as Marjorie Traitor Brown. I won't go into explaining why. But if you get toward the bottom of this very long missive, he actually invokes Paramount, which, of course, is now CBS. My real problem with the show, he says, was not the low IQ traitor. It was the new ownership of 60 Minutes, Paramount, who would allow a show like this to air. All caps, they are no better than the old ownership, who just paid me millions of dollars for fake reporting about your favorite president, me. Since they bought it, 60 Minutes, he says, has actually gotten worse. And you're wondering if the president's thumbing the scale, as some have suggested here, exactly who he wants to see win. We'll ask our panel now. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick is, of course, Bloomberg Politics contributor as well, Republican strategist and partner at Stone Court Capital. He knows what it's like to buy a big company. Jeannie Shanzano, Democracy visiting fellow at Harvard Kennedy School's Ash Center. What's your thought on this, Rick? Because you could actually make the argument either way, that the president wants to see Netflix, 'Netflix or Paramount, or is the real story the fact that he's involved at all?
Well, that's got to go through a process. And we'll see what happens.
It's a lot of market share, he said. We'll have to see what happens.
First of all, I'd love to have the reputation of buying a company worth, close to $100 billion in a transaction. So, yeah, thanks for including me in that category. But, look, this may be the biggest mystery in Washington for a while. I mean, short of his comments about CBS last night, everybody would have thought that, he was going to keep this deal from happening and let, his friends, take over the deal. And then the coda of the night was, as you point out, no way was he watching this 60 Minutes episode because, he was in the middle of the Kennedy Center Honors. And so whoever told him about it or whatever video he saw, upset him enough to throw everybody under the bus at CBS. So I'd say everybody got through last night damaged. And who's going to do the best lobbying job from here on out to try and get out from under the thumb? And, the point he made, too, about this current deal is that even though, smart economists will have to weigh in on this, I'm going to be directly involved. So when the president says at the start of a regulatory review that it's going to be my call, then it's going to be his call.
All right. Well, as usual, Rick leads us right to it. Jeannie, here's the direct quote. Netflix is a great company, he said. They've got a very big market share. And when they have Warner Brothers, that market share goes up a lot. All right. We can understand that. He goes on to say, as Rick references, so I don't know. That's going to be for some economists to tell, even though it would probably be for, well, I guess an analyst, right? And importantly, I'll be involved in that decision, too. Where will he be involved, Jeannie?
Any involvement, what he said so far, is completely inappropriate. And I would have wished that the members of the Supreme Court who are hearing this case today, that let's not forget, started because Rebecca Slaughter filed a lawsuit or a claim when she looked up and saw the inauguration of Donald Trump, and he was surrounded not by world leaders, but CEOs of the largest companies in the world who the FTC was in active litigation with. That's who was surrounding him. And so you would hope that the Supreme Court members would have been paying attention last night. And what we hear about this case is they're going to go with the president. And that is most unfortunate, because what happens to the consumer and the American public in all of this? A president, which is completely inappropriate, putting his thumb on a deal this big. And we just heard when Alexis was doing her report, talk about Jared Kushner, his son-in-law. This is all inappropriate. It is unethical. It is not the way we do business. And yet I think we're facing a Supreme Court decision which is going to allow all of this, and consumers will suffer and pay more. And it is not what happens in a democracy like ours. It's not what should happen.
Well, Jeannie throws another log on the fire, Rick. You see Affinity Partners and everybody's eyebrows go up because, that's his son-in-law, Jared Kushner. And this is Saudi money that is partially being used to back this deal. How should Americans consider that? In another White House, this could have been considered a major scandal, Rick. What do you think?
Well, you've got to really do something to be a major scandal in this administration. And the idea that Jared Kushner and most of the GCC would be involved in a mega deal like this, in excess of $80 billion, shouldn't actually surprise too many people. I mean, Saudi's been playing around the edges. UAE's been investing in Hollywood. This is not new. Foreign actors have always been participating in U.S. Movies and television. So I actually think that's the lesser of them. I could imagine what the phone calls were, though, between Jared and the Paramount guy saying, did you have to interview Marjorie Taylor Greene right as all this news was breaking? I mean, these are the kind of fun things you really speculate on. But let's be clear. Donald Trump is not the first president to put his thumb on the scale of a merger and an acquisition in any industry. So the difference is he actually says he's going to do it, and everyone else would deny it. So, I mean, at least you got a president who's transparent about all this apparent corruption. I don't know. I think that this is a long story to be told. And, with the new efforts by Paramount to go after a hostile takeover, the fun has just begun.
Boy, there's a lot there. I thought maybe Bill Owens had come back for a night, Jeannie, when you see Marjorie Taylor Greene on CBS on the eve of this hostile takeover being announced. So what's next here? Will there be a government stake in the WBD when this whole thing is over?
Yeah, Marjorie Taylor Greene. I'm sure you saw Joe had her big flag on her sweater or her
the
shirt.
sweater, yeah.
Yeah, one thing I would say is that what is different about this is not just that Donald Trump is saying he's going to put his thumb on the scale. That is sort of the excuse we hear all the time. Well, at least he puts his corruption out there. What is very, very different is that today, of all days, the Supreme Court is hearing a case. This would go to independent regulatory bodies. It would ultimately be the decision of a judge who we hope is independent. What the Supreme Court is threatening today is that we're not going to have that anymore, that all of those independent regulatory commissions, all of this will be under a unitary executive, whether it's President Trump today or a Democratic president in 2028. That is an incredibly different way in which we are looking at this. And of course, you look at Humphrey's executor, it's taking that power away from Congress to even set up these independent regulatory bodies. So that makes it a very different set of circumstances. And I think we have to be cognizant of that.
Wow. All right. So we're going to go deep here, Jeannie. I'm glad you pointed us. The unitary executive theory, Rick, that presidents should wield ultimate power over all appointments. What we heard before the Supreme Court this morning, and again, this is Slaughter versus Trump, does make you think that the court will rule in that favor. How about you?
Yeah, they've been pretty consistent on this, since Trump's administration, both the first and the second. They're giving leeway to the president. These people serve at the pleasure of the president. In their minds, the president's executive authority is a higher fire authority. With all agency heads is the sort of head tilt that you've got. And at the end of the day, I mean, if the Supreme Court says that the power of the presidency exists for this, and Congress has basically abdicated their check in the system, then it is what it is. I do still think, and it'll be interesting to see if they address this, when the Chief Justice basically created distance between that theory and the Fed. Will they reiterate that in this opinion, if indeed they wind up finding for the administration?
Boy, this is turning into a lightning round, guys. We've got another breaker here before our eyes. The Attorney General has just posted on Twitter news that Alina Habba has resigned. This is, of course, this was President Trump's personal lawyer who was then appointed acting U.S. attorney for the District of New Jersey last summer, and it was then ruled that she was not qualified for that position. The Attorney General writing, following the flawed Third Circuit decision disqualifying Habba from performing her duties as in the U.S. Attorney's Office for the District of New Jersey, I am saddened to accept Alina's resignation. She apparently, I'm reading further down here, producer James tells us she remains with DOJ as a senior advisor to the Attorney General. Jeannie, did you see this coming?
It's hard to tell. I don't think it's a huge shock given the decision that came out. But as we speak about independence, it is a perfect example. This is a president that would like nothing more, as all presidents would, than to have everybody working for him in concert in the executive branch. One thing that was independent for a long time was the DOJ. That is not the case anymore. And even though she's no longer in that position, she will still be at the DOJ. So not a big surprise, but it is in keeping with this push towards the unitary executive, including in the Department of Justice.
Well, after what we saw in the Eastern District of Virginia, Rick, and now this, how should we be thinking about Donald Trump's approach?
Well, I think the approach of not getting people confirmed who are in a confirmation job in the United States Senate is probably the wrong approach. It doesn't do you any good to put somebody in these jobs who tries to prosecute individuals that the president has identified as problematic, and that they get thrown out of court for lack of official standing by the prosecutor. So when it happens a couple times, you should try to learn that lesson, and it seems that they have, and hopefully this sort of ends the dalliance with putting people into these jobs without a Senate confirmation.
Wow, just amazing stuff to think what we've witnessed over the last hour and change. Many thanks to our panel, Rick Davis and Jeannie Shanzano. Bloomberg Politics contributors will be back with us on the late edition of Balance of Power. And if they do take questions from reporters when the president signs the EO next hour, we could have a whole lot more to be talking about here. So thank you to both of our panelists, and thank you for being with us here on the early edition. Much more straight ahead. We'll check markets with Alexis Christoforous, and we'll have Bloomberg Business Week Daily with Tim and Carol ready for you. I'll meet you back here at 5 p.m. Eastern with much more from the nation's capital. Stay with us here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. Across Bloomberg platforms, I'm Carol Masser. Tim is off. He'll be back tomorrow. In his place, Matthew Miller, a devoted fan of our broadcast.
I am a longtime listener. Very excited to be here. I've only got one contact lens in.
So what does that mean?
So I might just be reading like this every once in a while.
It's always something with you, isn't it?
I'm going to put the other one in during the next commercial break.
Okay, you have some time. We'll make sure.
There has been some really exciting developments in this Netflix Warner Brothers deal. And I said last week, I said, wow, they have a $5.8 billion breakup fee at Netflix. I would want to get that broken up and then take the Paramount offer.
Exactly. It's really fascinating. So we're going to dig into it. It's really the fight over the future of Hollywood, and it really has gotten a little bit nasty. So we're going to get into it. I will say, in terms of the trade, folks, we're pretty much near our lows of the session. It does feel like, Matt, that they are looking through what's expected to widely be a Fed cut on Wednesday. So I almost feel like they're looking at, what does the Fed say about 2026?
Yeah, 68.31, the level right now in the S&P. So we're about 60 points away from an all-time closing high. We were only 20 points off this morning, and we were gaining at the open. So a turnaround. Then with most industry groups falling, only IT was holding us back from further losses.
All right. Well, Kevin Gordon over at Schwab is going to be with us to talk about the markets. We're also going to get into the changing of the guard over at Berkshire and perhaps at J.P. Morgan. I am fascinated by Todd Combs coming into J.P. Morgan, so we'll talk about that. And then we're going to get into the world scrambling for all things rare earth. It's all coming your way over the next 60 minutes. Let's get a check on the trade for you on this Monday. Let's toss things over to Alexis Christoforous. She's in for Charlie Pellet.
All right, thanks, Carol. Yeah, Warner Brothers Discovery has some deciding to do as shareholders mull a hostile takeover bid from Paramount Skydance. The $30 a share cash offer values Warner Brothers at over $108 billion. That includes debt. The bid compares with Netflix's offer of $27.75 a share in cash and stock, with Paramount's offer being for all of Warner Brothers. Netflix just wants the Hollywood studios, HBO, and the streaming business. Both bids, though, raise significant antitrust concerns, both companies laying the groundwork to win over the White House and regulators. On Wall Street, we have traders waiting for the next catalyst, which is the Fed's final meeting of the year Wednesday, where Wall Street is betting on that third rate cut of the year and will be listening closely for clues on possible future rate moves in 2026. The Dow Industrials near their worst level of the day now, down more than 300 points at 47,640. S&P 500 down 40, backing away from that near record high. NASDAQ Composite now down triple digits off 110. And Apple's chip chief, say that fast 3 times, Johnny Strugi, is squashing departure rumors, telling staff in an internal memo that he loves his job and team at Apple. Bloomberg had reported over the weekend that Strugi told Tim Cook he was considering leaving the company. We know Apple has been battling recent executive departures. Once again, stocks lower across the board. S&P down 38. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's the Bloomberg Business Flash. Back to Carol and Matt.
Apple's chip chief. Apple's chip chief.
I love
Apple's chip chief. But I had to say it really slowly. Alexis, thanks so much. All right, folks, it is a battle among, I feel like, the old and new media titans. A deal we thought was
left
agreed.
And right.
Yeah. Very much so. And a deal I thought was agreed to, and then we got a hostile offer coming in today, and we've got the White House's commander-in-chief, Matt, definitely watching. I mean, the target is Warner Brothers Discovery.
Yeah, it's interesting that President Trump said there may be too much market share here, which by itself, between Netflix and HBO Max isn't a surprise. But then he said he's going to be personally involved in whether or not this gets through regulation. So I think that should be a bit of a concern for Ted Sarandos, who has tried to do everything right, I guess, of late. But really, Netflix is viewed as this globalist, kind of left-leaning, dare I say, woke, company and entity. And it wants to take over this asset that Donald Trump sued to block Time Warner, AT&T, this deal in 2017. So
way back when, right? Remember that. All right, so let's get to it because we've got our own Felix Gillette, Bloomberg News Media and Entertainment editor. He's the author of It's Not TV, The Spectacular Rise, Revolution, and Future of HBO. He's right here in our New York studio. And then out there at our Bloomberg Intelligence headquarters in Princeton, New Jersey, Bloomberg Intelligence Senior Media Analyst, Geeta Ranganathan. This is such a cool roundtable. So let's start, Felix, with you. The details. We got the hostile takeover bid from Paramount. It does top Netflix's offer. I thought this was a done deal.
Not necessarily. Actually, it does not top Netflix's offer because in the Netflix offer, they're spinning off the cable assets, right? So they're not getting the CNN that Trump probably wouldn't want them to have.
Yeah, they're both saying that they have the higher offer, and it depends on how you value those cable networks.
Is there a deal that's better, that's preferred, Felix? Let's start with you, and one more likely to get regulatory clearance?
I mean, they're both saying that they both, you know, they're pointing at the finger at the other, saying, oh, that will never get regulatory approval. You know, Paramount is saying essentially that, yeah, Netflix has over 300 million paying subscribers. If you combine it with HBO Max, you're going to have over 400 million. It's too much concentrated power in the streaming competition. They have a lot more. So that's Netflix's argument, is that it's not just, the competition isn't just between streaming networks at this point. It's competing for people's attention in the living room, which includes things like YouTube, TikTok. And in that world, they don't control that much attention share.
Which is a fun argument, but I mean, if this were just a technocratic DOJ decision, they try to take the narrowest view possible. So they're not going to include YouTube and TikTok, even if, Carol, you spend a lot of time consuming content on those things. Yeah, but so do I. In fact, I often choose it over Netflix, Prime, and HBO, but that's not how the DOJ traditionally views these kind of things.
Well,
so,
Geeta, how do they view it? And what's more likely to get done? What makes more sense? Or, listen, we're going to be talking about this in the new year.
Yeah, it's really anybody's guess right now, Carol. So traditionally, yes, they have taken the most narrowest definition possible. But I think the government also realizes that this whole video marketplace is rapidly changing. I mean, Netflix has been the biggest disruptor of the video marketplace to begin with. You know, it's streaming disrupted traditional TV. Now, what Netflix is worried about, and this is how a lot of investors are kind of viewing this deal, is does Netflix actually think that they can be disrupted by short form entertainment? And that's exactly the point that, you know, Felix was bringing up. Do we have to broaden the market? And, you know, people will argue, yes, we do, because if you kind of look at just share of online video viewing, Netflix and HBO Max combined actually have a lower viewing share than the dominant force, which is YouTube.
I got my math, by the way, from you this morning, Geeta. So Geeta pointed out that the Netflix bid is $27.75, plus you add about $4, which you'll get for the spin-off of the cable assets. It gets you to basically $32. Okay. That's a little bit above Paramount. But Geeta, if Warner Brothers Discovery, because David Zaslav wants to get as much money as he can, right? If they somehow get broken up with by, you know, the FTC or the DOJ or whatever, and they get the $5.8 billion from Netflix, and then do the Paramount deal, which it seems like President Trump would be much more in favor of, does that end up giving them more money than anything else?
It absolutely does. And, you know, this whole bidding war, I mean, the one person who's really enjoying this, I think, should be David Zaslav and, you know, the Warner Brothers Discovery Board. I mean, we started, Matt, at $12. You know, that was, you know, on September 12th. And this is where we've ended up. I think the big worry today, and especially as you kind of see the Netflix stock trading, is that is Netflix really going to be forced to come in with $30 a share? Because you just kind of look at the optics of the deal. Paramount seemingly having the better offer, although the deals are different. But, you know, just for a first look, it looks like they do have the better offer. So I think investors are really concerned right now about whether Netflix will have to bid up. And that's an even better situation for David Zaslav. So he's laughing, you know, all the way to the bank here.
By the way, at the Screen Time event, Carol, you and Tim were out in California, right?
You want to go there?
Yeah, because I thought you guys did great coverage, and Lucas had a fantastic event. And David Ellison gave an answer to the question about his family's closeness to President Trump.
We have a good relationship with the administration. And look, I think if you look to that, I do believe other things that have been rumored about, right, are very large-scale players that could potentially create monopolies, obviously, in the ecosystem. And again, I think when you look at the lens of consolidation, for us, I'll keep going back to it, it's always how do you create long-term value creation? How do you put yourself in the position to produce more content, not less? And how do you ultimately build something that is better for the consumer?
All right, so that is Paramount Skydance CEO David Ellison. He talked about at Bloomberg Screen Time. That was back in October. So Felix, come on back in here. Yep. I mean, we also have affinity Partners, the private equity firm led by Jared Kushner, who's, of course, the son-in-law of the president, you know, part of Paramount's hostile takeover bid for Warner Brothers. So do they have an advantage? It seems like a lot of things merging that they might have an advantage.
They've said they have an advantage, and having the president's son-in-law as part of your bid is usually a pretty good sign. But at the same time, we see that, you know, today Trump came out on Truth Social and, you know, complained about the Ellison's management of CBS News and 60 Minutes because of an interview where he was criticized on the most recent episode. So these things can be somewhat fickle. And let's not forget that Paramount has, you know, sort of antitrust issues also. Those, you know, if the deal went through with Paramount, that's 2 Hollywood studios that would be combined, 2 streaming services, not as big as Netflix, granted. You'd have multiple news outlets, CNN and CBS. So they have plenty of overlap, and in some ways have more overlap than Netflix and Warner Brothers.
Felix, can I ask you, though, about, I mean, you cover the entertainment industry, right? I was talking today to Michael Wolff, he of MTV, previously and now of Activate, and he says that the content creators or the creative community, let's say, is much more in favor of the Paramount bid because, when you listen to David Ellison's full interview with Lucas Shaw, they seem really focused on creating good, original, you know, solid content, like not having AI make sequels of marketing products. So is that true that that Hollywood wants Paramount to buy it?
I think David Ellison has been out there making that pitch. We really support the creative community. Look at all these concerns already.
He and his sister have grown up watching all the movies.
Yeah,
and
now he's Mr. Top Gun. He loves the movies.
It's also expensive, though, unless it does really well.
They're so rich, though.
And, you know, you have people like James Cameron coming out recently and expressing concern about Netflix, you know, saying that basically if you look at Netflix's history, they've been very, you know, hostile to the notion of long theatrical releases, that this would be kind of the deathbed for Hollywood and movie theaters. So yeah, Ellison's
the man who brought us Avatar that uses a lot of technology. I'm just saying, but go ahead.
But you know, saying, hey, this we want to see this on the big screen. You need 100 days in theaters exclusivity for this to be worthwhile. And you know, you're kind of a sucker if you believe Netflix is really going to do that in the long term. Their business is providing entertainment for people at home.
It's a pretty convincing argument.
It's interesting stuff. Hey, Geeta, save 40 seconds for you to wrap up. So I don't know. Does this go to? I don't even. Are we in a third round? Are we? I mean, Comcast is out, right? So like,
Comcast is out. Yeah.
So what's the timeline we're looking at here?
10 days. So the tender offer expires in 20 days. The Warner Brothers Discovery Board has 10 days to respond to Paramount to see how they want to proceed with this whole tender offer. But they have confirmed receipt of this unsolicited tender from the Paramount Skydance people.
Am I remiss to ask, does David Zaslav have a job after it with a really good pay package?
He doesn't need one. He's going to be so rich.
All right. To be continued.
I'm sure that we'll still be talking about David Zaslav after this. Don't do just fine.
I'm sure. Bloomberg News Media and Entertainment Editor Felix Gillette. Check out his book. It's Not TV. Also, of course, Bloomberg Intelligence Senior Media Analyst Geeta Ranganathan. All right, media definitely top of mind in today's trading session. In fact, Paramount Skydance is up about 7.5%. We've got Warner Brothers Discovery up about 3.25%. Netflix is down about 4.2%. The other thing top of mind, no doubt about it, Matt, is the Fed decision. And that may already be factored in when it comes to, if you look at kind of the equity trade today. So I want to see what...
it's at the bottom of my mind.
It is... Well,
really, the Fed decision's at the top of your mind? They're going to cut.
I do.
I saved you 3 days.
Oh, my God. All right. But we're going to get... All right, just put him aside for a second. Let's bring in Kevin Gordon. He's head of macro research and strategy at Schwab Center for Financial Research. It's like... I don't know, keeping cats in control here. Kevin is here right in studio. Kevin, though, is the cut already priced in? And is it all about kind of what we get in terms of the summary of economic projections and whatever commentary we might get for the new year?
Well, yes. I think if you look at the warp function on the terminal and then compare that to...
We love that function.
Yes, pricing, for December, actually relative to the equity market, if you look at it over the past month, both of those have been neck and neck. So, I would say it's fully priced in the sense that, every time the probability of a cut has increased sharply, the market's done well and vice versa. I think beyond that, one of the reasons I think that we're probably not going to see as many cuts next year is because the inflation backdrop, and we're putting out our outlook at some point later today, but I think that the inflation backdrop is going to be a little bit trickier in the sense that there's probably some upside inflation risk from tariffs that are expected to stay high, which have already put upward pressure on goods prices, but also fiscal stimulus coming from the big, beautiful bill. And I think still even if it's a wobbly, but still relatively resilient labor market that keeps people spending on a month-to-month basis. If you add all of that together and put it into an equation, I still think you have upside inflation risk. Plus, from a personnel standpoint for the Fed, you have to keep in mind that 2 voting members rolling onto the voting committee are the heads of the Cleveland and the Dallas Feds, and they've been leaning much more hawkish recently. It's Beth Hammack and it's Lori Logan. So I think that needs to be taken into consideration when you think about, especially the emphasis that has been now pushed on individual member commentary. That hasn't been the case up until maybe the past couple of months, where we've been paying so much attention to what each individual member has been saying. Now there's much more focus on that. So I think for those reasons, you probably don't get as many cuts next year as maybe some people have been expecting.
A narrative around that. What do you think, Matt?
I mean, it's we're looking at, with the WIRP function, getting down to a terminal rate of 3% even, basically, right? Between 3 and 3.25 right now. So that's moved up a little bit. And as we hear so much about the economic growth that we're expecting, Bill, I just wonder if it's going to be hard to even go that low, because inflation, if you look at CPI, it's going the wrong direction, and it's 50% over the Fed's target.
Yeah, we're averaging closer to 3%. That seems to be, more like the floor. Even if you don't go, because it's not our expectation that you go back to anything akin to 2022 or 2023. I mean, getting close to 8-9% on CPI, barring some major shock, is just really not in the cards.
But we've been there, so this only 3% still hurts.
Well, but exactly. So
because
I think
prices haven't gone down, right?
Yeah. And you're now 4.5 years of the Fed being above its target. I think at some point that has to come into the equation, and it'll matter in terms of how they set policy. So really, I mean, this is just them getting closer to neutral, what they think of as neutral. If it happens to be the case that inflation pressure is reaccelerating and they're maybe too close to neutral, then you can maybe start talking about a hike. I think it's still a little early for that, but you just have to keep in mind that they've been now so far above their inflation target for so long, and labor has essentially been at target almost the entire time. I mean, 4.4% for an unemployment rate. Yes, it's risen over the past year, but it's been number 1, gradual, and number 2, consistent with a fully employed labor market.
30 seconds. So what does this mean for the equity markets? I mean, if there's earnings, if there's an economy that's growing, if the labor market doesn't fall apart?
Well, the earnings picture just by itself, I mean, if you look at every sector so far, there's expectations that you're going to get pretty solid earnings growth for all 11 gig sectors in the S&P. Only 3 are expected to have earnings growth that is slower in 2026 relative to 25. So that in and of itself just shows you that it's not just a couple of sectors or even a couple of industries that are carrying the market higher from an earnings standpoint. It really has broadened out. So we think that from an index perspective, maybe it's not as great because if you don't have the mega caps contributing mostly to the gains, then the index performance might not look great, but you could have relatively healthy breadth under the surface and participation that could mean for maybe a better year for equal weighted relative to cap weight.
Thanks for coming by.
Thanks for having me.
Really appreciate it.
I wish we had more time. I have more questions.
I know.
But not about the Fed on Wednesday. Not about that.
Kevin Gordon, head of macro research and strategy at Schwab Center for Financial Research. Coming up, we're talking about getting ready for Warren Buffett's retirement. That's next.
2:21 on Wall Street. I'm Alexis Christoforous, and traders are hitting the pause button on the stock market's recent rally ahead of the Federal Reserve's final meeting of the year. Traders growing anxious about next year's interest rate path. The Dow Jones Industrial Average down 277 points. The S&P 500 down 36. NASDAQ giving back more than 90. Bonds have been on the back foot of late amid jitters over the pace of future rate cuts and expectations for a divided FOMC decision this week. We've got the yield on the 10-year at 4.16%, two-year yield at 3.5%, and the five-year yield at 3.7%. We kicked off a new trading week with yet another big deal. IBM buying Confluent for about $11 billion, including debt. It is one of IBM's largest takeovers and a major bet on enterprise software that artificial intelligence tools need. Shares of Confluent up now nearly 30%. IBM shares up about 0.5%. And we've got NVIDIA's stock up a bit more than 1% right now. Semaphore reports that NVIDIA will soon be allowed to export its H200 chips to China. Commerce Secretary Howard Lutnick is said to support that plan. Once again, stocks lower across the board with the Dow down 262. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's your Bloomberg Business Flash.
All right, Alexis, thank you so much. Well, change is afoot at Berkshire, at JP Morgan Chase. There's kind of a connection between the two. We want to get to what you need to know. And with us is Sri Natarajan, Bloomberg News Chief Wall Street Correspondent right here in studio, along with Bloomberg News U.S. Insurance Reporter Alex Rajbandari. First up, I want to talk about Berkshire Hathaway. So, Alex, talk to us about these leadership changes that are going on. It is like the company getting itself ready for what happens post-Warren Buffett. I mean, he's already announced his retirement, right? But once he's kind of officially off the leadership at the company.
So what we know is Greg Abel is taking over next year in January. And this morning they announced a slew of new appointments and some departures as well. The big one, and the one that everybody's talking about and we're going to talk about today, is Todd Combs, who was one of the two stock pickers for Buffett, along with Ted Weschler, and they were managing with Buffett this mammoth 280 billion stock portfolio. So he's gone. He was also the CEO of Geico. He's been doing a good job there, and analysts have been praising the turnaround at Geico that's been struggling in recent years, but gaining grounds in the past quarters. But that leaves a question mark as to what's going to happen to the stock portfolio and who's going to manage it, because Buffett no longer in the picture, still as chairman, but not at the helm. That means Abel's going to do it with Weschler, but that's just two people for a big portfolio. And that's a big topic for Buffett watchers and Berkshire fans and investors, because they look at where the investments are going.
Is it fair to use the term exodus, or even worse, brain drain? Right? If Warren Buffett's leaving and I didn't get the top job, like, I'm out.
So this morning hasn't been only about departures. There's also been some appointments of people that were not in the lights so far, but have been elevated to bigger roles. So that's important to point out. But yes, what you say, this raises the question as to how many people we want to work with Abel going forward. And there was an analyst this morning who put out a note right after the appointments to say that he expected more turnover going forward, because it doesn't have the same cachet to work for Abel than to work for Buffett.
Before we get to the JP Morgan, why did Combs leave Berkshire? How long was he there? A while.
He had been there for more than a decade.
Okay.
It's not been said exactly why he's leaving, but he had deep ties with JP Morgan, so that might be an explanation.
Also, I'm sure they wanted him. I mean, as you say, he was in charge of a massive portfolio. That guy must have been sought after on Wall Street. But just to touch on what's happened at Berkshire, it's so weird if you put up the shares versus the S&P. From April, the S&P takes back off again, right? Obviously, we had the Liberation Day dip.
Right.
From April, Berkshire Hathaway shares just come down. Like, they've done, it's a mirror image of what the S&P has done. What is the concern about Berkshire Hathaway? Is it that Warren Buffett's finally leaving? Is this key man risk?
Well, there was talk when he announced he was retiring that there could be a Buffett premium that would evaporate. That could be supporting that thesis. There's also a lot of other questions. I've reported on the earnings in recent quarters and the softening of the economy in general.
I was just going to say, they play big time into the economy.
Right, exactly. And so not to say that the concerns for the economy are translating directly into the concerns for Berkshire,
right.
But there's been some softening of the top line growth, and analysts have been, voicing some concerns about that for the future. The company has had a very rare sell rating from an analyst recently because of all the headways coming the way. So, yeah.
It's a big change,
Definitely.
for a company so identified, obviously, with its founder. All right, so Todd Combs leaving Berkshire after a decade. Let's bring in Sri Natarajan because J.P. Morgan has hired him. Talk to us, there was a relationship there already. There were ties. Tell us about what this news is about. What does this do for J.P. Morgan and why is it happening?
Well, Jamie Dimon has been spending a lot of time talking about this national security initiative. You know, of having heard Jamie Dimon over the years, especially in the last 12 to 18 months, he has been talking about the geopolitical risks. He's been talking about the need to be independent and not dependent on other countries. And he has been putting money where his mouth is. They have talked up this $1.5 trillion financing commitment in this space. That is in any industry where, you know, critical supply chain, electric grid, anything where you would look at it and say, this is important and crucial for America. He's saying we have to make sure that we're not reliant on any other country. So in addition to that financing commitment, which is about a 50% increase over what they would have anyway done, is what JP Morgan says, they're also putting about $10 billion of their own balance sheet capital as direct equity investments. And that's where Todd Combs comes in, and he will be in charge of overseeing that investment. He's not an alien to JP Morgan. For nearly 9 years, up until this announcement, he was on the board of JP Morgan. When he joined the board as a 40-something, he was the youngest member of the board. And I checked this morning, as of the time of his departure, he was still the youngest member on the JP Morgan board.
Which is why I know I tease, like, could it have something to do with succession planning? Does it? Possibly? I mean, this is a guy who's going to have a direct line to Jamie Dimon on not just this, but other strategic issues, if you will, at the firm. It just... I don't know.
Look, it's a fair question, and I know I rolled when you asked that question initially.
Me too.
It reminded me of my daughter's eye rolls.
I will give you a reasoning for that. Is at this late stage, if Jamie Dimon had to turn to someone outside of the JP Morgan stable to find a successor, in some ways that would be considered a failure for Jamie Dimon, right? He's been there for 20 years at the top.
Yeah.
You assume that he's built a strong enough bench that he can pick from anyone.
But look at what he did. He left Citi or was kind of pushed out, came to another firm.
Which is why we don't remember much about who was the predecessor to Jamie Dimon. Jamie Dimon certainly does not want to be forgotten. So again, if he were to go this route, it would be completely out of left field, which is why it's not the number one predicted scenario, even though, because you asked the question, we will put it in the list of possibilities.
Oh, nice. You got a name in the list.
I got the eye roll,
Hey, speaking of big names, the advisors to Todd Combs on this strategic investment group are, I mean, masters of the universe. Paul Ryan, right? Condoleezza Rice, Robert Gates. Those are just the Washington names. Jim Farley, Michael Dell, who just gave one of the biggest gifts in world history. I mean, these are Ann Dunwoody, huge names.
Isn't Jeff Bezos also
Jeff Bezos, good point. Also an important guy.
You missed the most important name on the list, Jeff Bezos.
Well, for me, Jim Farley is the most important guy.
Fair enough,
He
you're
knows
a car
which side
guy.
his bread is buttered on.
But I will also tell you why I'm talking about Jeff Bezos, because there's another Todd Combs connection here, because you will remember a few years back, Berkshire, JP Morgan, and Amazon set out to, shall we say, solve the healthcare problem in the United States. And the connecting factor in those discussions or in that venture was Todd Combs. He was critical to that mission. Of course, about 2 to 3 years in, they disbanded and they realized that healthcare is a harder problem to solve than just 3 successful corporations taking a swing at it. But they did make a go of it. And if you consider the top of the house of those 3 firms, Warren Buffett, Jeff Bezos, Jamie Dimon, and Todd Combs in the mix, he clearly knew these people well. And that also is another reason you have to assume he has Jamie Dimon's respect.
So in these guys, Alex, just to bring you back in, you cover Berkshire Hathaway, you cover insurance. It's not, operating in a vacuum. They work with the biggest banks in the world on a regular basis, and particularly JP Morgan and Berkshire Hathaway have had a pretty close relationship.
Yeah, indeed. As Sridhar said, Todd Combs was an incremental part of the discussion around the healthcare venture, and insurers and banks are two critical elements of the financial system, and they work together to get financing to the economy in different ways, but they do work hand in hand a lot.
Hey, that healthcare thing didn't really work out, did it?
No, they had to shut it down after a couple of years. Yeah.
Why is it such a tough nut to crack? It's pretty easy,
Because
right?
healthcare is massive and it's complicated and it's political and it's a lot of things.
I mean, it seems like it would be pretty simple to solve.
Wow, someone take Matt Miller to Washington. It's pretty easy, the healthcare problem. Matt Miller, 2028.
Exactly.
GLPs for everyone.
Alex, one thing I want to ask you, what does Todd Combs bring to JP Morgan?
Well, I mean, this investment acumen that has been developing over the years at Berkshire as a stock picker, he's going to be part of the deployment, of those billions of dollars in the economy. That's definitely a big asset for JP Morgan in that venture.
All right. One thing I also want to do, Sri, while we've got you, and we can continue talking about this, but Jamie Dimon, when he speaks anywhere, we're all like, whoo, kind of awake. He spoke in a panel at Reagan National Defense Forum. It was hosted by Bloomberg's Caroline Hyde, and he got into, the whole conversation was talking about defense globally and so on and so forth. But his point, bottom line, was about Europe and its problems. So I want to bring that to everybody. Listen up.
Europe has a problem. If we ever write a book about how the West was lost, it will be because of the following. It will be because of we didn't get our act together here, and we go through all the policies here, that we didn't have the strongest military in the world, and that we allowed Europe to fall apart. They have some wonderful things, but they've gone from 90% of the GDP of America to 65. That's not because America did anything bad to them. It's their own bureaucracy, their own cost, they do some wonderful things on their safety nets, but they've driven business out, they've driven investment out, they've driven innovation out. It's kind of coming back. If they fragment, then you can say that that America First will not be around anymore. It will hurt us more than anybody else because they are a major ally in every single way, including common values, which are really important.
All right, that, of course, was JP Morgan's Jamie Dimon at the Reagan National Defense Forum. Sri, I feel like when Jamie talks, we all listen. This was obviously a discussion about defense, connections between the U.S. and Europe, whether it's cockroaches, whether it's stormy seas, whatever. What Jamie says, we take note. How should investors read what he had to say, or what do you think is important there?
Look, at least from the business side of things, he's pointing out what any business executive will point out, that Europe is going through a bit of a challenge, and the economic numbers show that. But his broader, bigger point about fragmentation in Europe somehow disbanding this whole disbanding this whole America First idea, that's a hard one to follow. But more interestingly, it potentially goes against the kernel in terms of how the Trump administration perceives Europe right now. If you have followed all the commentary and the discourse over the weekend, over the last week, in fact, going back to the start of the year when J.D. Vance was at that Munich security conference and that diatribe against Europe, it's very clear that the Trump administration wants to take a tough stance on Europe. And Elon Musk was one of those who said Europe probably has to disband the European Union, and it's much easier to deal with every country on their own, and they will care for their sovereignty. But it seems to be a very interesting viewpoint that the Trump administration has taken that's counter to the worldview that has been adopted by the United States since the end of the Second World War.
A real change. Maybe he's running for president? All right.
No.
I'm going to get another eye roll. That's all that's going to happen. Sri Natarajan, Bloomberg News Chief Wall Street Correspondent, and Bloomberg News U.S. Insurance Reporter Alex Rajabandari joining us right here. When we come back, we're talking something else that's really important to the U.S., rare earths.
2:40 on Wall Street. I'm Alexis Christoforous. Traders are tapping the brakes on the recent stock market run-up ahead of this week's Federal Reserve meeting, where an interest rate cut is widely expected. But Wall Street now looking ahead to how many rate cuts, if any, 2026 will hold. The Dow is down 263 points at 47,693. The S&P 500 losing 33, and the NASDAQ Composite sliding about 83 points. Biggest winner in the S&P today, Paramount Skydance, as it brings its hostile takeover bid for Warner Brothers Discovery straight to shareholders. Biggest loser in the S&P, or among the biggest losers, Lululemon, down more than 4% ahead of its quarterly earnings report due out on Thursday. In other stock news, shares of PopMart International Group dropping the most in over 6 weeks. That's amid renewed concern that the Chinese toy maker's sales growth here in the U.S. is slowing down. And Unilever's spinoff of the Magnum ice cream company was valued lower than some analysts expected in its debut today, as the world's biggest ice cream company looks to revive its performance as a standalone firm. And JP Morgan Chase has hired Berkshire Hathaway's Todd Combs for a broad role that includes advising CEO Jamie Dimon and his top lieutenants on strategic issues, including plowing $10 billion into companies that will bolster economic security through direct equity investments. Once again, stocks are lower with the Dow off 267 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Carol and Matt.
All right, much appreciated. Alexis Christoforous in for Charlie Pellet. Hey, right now, I want to take you to the nation's capital and to the White House, the cabinet room. President Trump there surrounded by members of his team and others. This as the administration is planning to unveil a farm aid package offering some $12 billion in assistance to farmers hit hard by low crop prices and the impact of the president's tariff policies. In the meantime, as he does so, and he did do some, we actually have some headlines already crossed in the Bloomberg. The president saying he is using some tariff revenue for that farmer economic aid. He also says he thinks China will buy even more soybeans than promised. He said he did speak with Chinese President Xi very recently, and again, reiterating that he thinks he'll buy some soybeans. We're going to continue monitoring and watch for any headlines that come out of that, and of course, bring them to you.
I wonder why President Xi would buy more soybeans than promised. I mean, he's been so slow to buy soybeans.
He's been very slow.
At all, and they've bought, obviously, soybeans from other places. So they have enough soybeans. Why would they buy more from us than they previously said?
The only reason they would do that if it was part of trade negotiations, right? And trying to figure out tariffs that maybe are easier on China, right? And so as part of the deal.
Yeah, but I mean, one of the biggest parts of the trade negotiations has been promising us access to their rare earth minerals, and they haven't really given us yet what they promised. So if they don't hold up that end of the bargain, why would they do this one?
Well, that's the back and forth, right? Yeah. No, I don't disagree. And I think this is why we all see these statements, but what's the reality of what gets done? Hey, Matt brought up rare earths, and that is something that we are talking about a lot this year. It's kind of the land grab, I feel, of the last year or so. We're talking about the world in a war of sorts to shore up their critical mineral assets. And just today, we saw the German foreign minister claiming progress in efforts to secure supplies of rare earths from China, saying the government in Beijing had indicated it would be constructive in handling European orders for the materials and the metals. The New York Times out with a story on how Japan built a rare earth supply chain without China. And then, of course, there are all, Matt, those public-private partnerships and investments that we've seen the U.S. government has been doing to build up its exposure.
Yeah, exactly. Investing in companies like John Paulson's company to
There's a lot of
mine rare earths.
Yeah, exactly. All right, so we want to talk to someone that we've leaned on big time when it comes to this space. Gracelyn Bascarin, she's Director of Critical Mineral Security Program at the Center for Strategic and International Studies. She's with us from, I believe, from Washington.
Middleburg, Virginia.
Oh, oops. I need to read our chat every once in a while.
Yes, you do.
She's from Middleburg, Virginia. Hey, good to have you back with us, Gracelyn, and here with Matt and myself. There is a lot going on, this land grab. I don't know, where are we in this process, and how do you make sense of some of the headlines that are going on? Are countries just kind of figuring out deals, and is, I don't know, extra production, extra exploration underway?
So great to be back. Thanks for having me. What a year it has been. If you had told me at the start of 2025 that rare earths would become the most powerful currency in negotiation, in reforming our geopolitical alliances, I wouldn't have believed it. What we've really seen this year, and remember around the APEC summit, there were the third round of negotiations to restore access to rare earths. So we saw them in London, we saw them in Geneva, and then we saw them in South Korea. Since then, the U.S. government has really done two things. You've seen both that acceleration of domestic efforts with the Vulcan deal for rare earths to mine and process those rare earths and get some permanent magnets, but you've also seen a proliferation of the continued international efforts. So most recently, you saw during MBS's state visit from Saudi Arabia that the U.S. Department of War agreed to become a 49% shareholder in a refinery there. And what's really important is when you look at the spectrum of rare earths, we are continuing to drill into two things. Those heavy rare earths, right? Because here in the U.S., we have the second biggest producing rare earths mine in the world. However, they are pretty lightly endowed on the heavy rare earths. And we know that Saudi has bigger deposits of those. The second thing is we're really trying to build our permanent magnet manufacturing capabilities. We have to.
I was going to say too late. I talked to Graceland automotive executives a lot in my side gig here, and they have expressed real concern with the idea that we would ever process rare earth materials, that we would ever refine rare earth materials in the U.S., because a lot of these men and women who work for car makers have toured the plants in China and say, like, I never want to go back there again. I wouldn't let my family anywhere near there. It's such a dirty and dangerous job that we simply cannot do that in the United States of America. What do you think about that?
I don't think we have a choice, quite frankly. And I'm originally from Detroit. I love our auto manufacturers. But at the end of the day, it was the auto manufacturers that stopped manufacturing in May when they had a supply chain disruption. So what we know is that, having a close to home or at home supply chain is no longer an option. What I would also say to you is challenge the notion.
But what is the process like? Walk us through the process. What makes it so dangerous, so dirty? And by the way, if I have a vote, they're not doing it in New York. Not in my backyard, so I don't know where it's going to be.
Certainly not in your backyard. I would probably agree with that in New York. Now, here's the thing. You've got to mine those rare earths, and then the process of separation is very pollution intensive. You're talking about air pollution, wastewater, waste gases, et cetera, right? It is messy. But what we also know is that the Chinese way of doing it is not the cleanest way of doing it. Mining and processing today is much cleaner than it was 20 years ago. So when we look at, I was out at MP Materials Mountain Pass Mine, one of the really fascinating things is obviously this mine is in a desert. You have a lot of tension, particularly with the frequency of, droughts and wildfires on water. They have a completely closed loop water system that actually keeps all of that water within the mine. And again, that's not commonplace in China. So we're actually learning how to innovate and do it cleaner and better than the Chinese have ever been able to.
So in the land grab, if you will, when it comes to critical minerals, where is everybody at this point? I thought I recently saw a story about just how much the U.S. has progressed in this area in terms of lining up deals.
Absolutely. The U.S. has made a lot of progress. So I want to point to the fact that when we look at some of the bilateral agreements and deals that we've signed this year, you've seen these agreements being made and signed in the context of Japan, Australia, Saudi Arabia. You're seeing DFC financing, our U.S. government financing going to Brazil. Now, we're also accelerating our mining production and processing here at home. So these are all really big steps that we're doing. Are we going to be self-sufficient? Secretary Bessman said we'll be self-sufficient in 2 years. That's pretty unlikely. We have to remember we're activating a very long-term industry. 10 years, this is a small market. So 2 years is a bit overambitious given how long the timeline to developing these capabilities is. But we are, this year is way ahead of where we were last year.
Graceland, and as someone from Detroit, you know how important rare earths are in our automotive production chain. Is it possible to engineer them out somehow?
I just got 30 seconds.
Yeah, and we're starting to. If you look at BMW, they've produced the first engine that doesn't use rare earths, right? But the difference is, we're kind of getting to that nascent level of innovation, but to the point that we don't need them, seatbelts, steering wheels, door panels, that's still quite a ways away.
All right, going to leave it there. Always good to check in with you. Thank you throughout the year. All the thanks. Graceland Baskerin, Director of Critical Minerals Security Program at the Center for Strategic and International Studies. As we head to a break, President Trump in the cabinet room, U.S. Treasury Secretary Scott Bessent is there. The president talking about John Deere when talking about reducing regulations. This is about for the farming and agricultural community. He's also talking about using some tariff revenue for farmer economic aid. This is Bloomberg.